Sir, very happy morning to all. Sir, we are doing the DT. In that DT, my dear lovable students, we have completed the part number 1, which is income from salary, income from house property, profits and gains of business or profession, read with TDS, TCS and advance tax, capital gain and IFOS. Am I right, sir? We are moving into the second part of the DT, my dear lovable students, called as clubbing of income. Called as clubbing of income. Number 2, set off and carry forward. Number 3, chapter 6A deductions. Chapter 6A deductions. As we all understood that, for example, my dear lovable students, if you are going and work under an employer, you will be having income from salary. You will be having income from salary. If you are having house property and if you let out that house property, you will be having income from house property. If you are having business or profession, you will be having PGBP. Am I right, sir? If you are having a capital asset, if you transfer the capital asset, you will be having capital gain. If you receive the capital asset, you will be having IFOS. These are called as gross total income. For example, some people will be having lot of money with them. So instead of having one residential house property, they will be having 10 residential house property, and all the 10 residential house property are let out property. If all the 10 residential house property are let out property, automatically income from house property will increase. If IHP increases, automatically gross total income increases. If gross total income increases, my dear lovable students, then tax liability will also increases. So in order to avoid this, what people will do, you know, out of this 10 residential house property, they will gift, for example, 6 residential house property to his or her spouse. That means wife or husband. Wife or husband. And they will say that, I am not the owner of the 10 residential house property. I am the owner of only 6 or 4 residential house property. And the rental income received for the 6 houses will be or should be taxable in the hands of transferor or the other person who has received it. By that way, we will be reducing the income tax burden of the owner of the 10 houses. Then government is saying that, oh, if you try to do like that, my dear lovable students, then you are the person who are liable to pay tax for the entire 10 residential house property. That is called as clubbing. Clubbing in the sense means other person's income will be included as your income because it is your income only. It is not other person's income. In order to reduce the gross total income only, you have transferred the income from your hands to some other person's hand. Am I right, sir? So, my dear lovable students, your intention is to cheat the government. For that, sir, in order to safeguard the income tax, we have introduced section 60, section 61, section 62, section 63. Section 60, transfer of income without transfer of asset. Transfer of income without transfer of asset. For example, my dear lovable students, sir, I am having lot of money. I put 1 crore rupees as FD. I put 1 crore rupees as FD. Am I right, sir? Sir, if I put 1 crore rupees as FD, I will be getting interest from bank. This interest will be taxable under the head what? IFOS. Am I right, sir? What government is saying that, sir, if you are receiving this income in your hand, it will be treated as IFOS in your hand. Whereas to the bank, I am saying that, bank manager, please don't credit that interest to my account. Please credit that interest to my wife's account. Please credit that interest to my son's account, to my daughter's account. Like that, I'm saying to the bank. That means, have I transferred the FT to some other person? No. I have transferred only the interest. That means transfer of income. If you are only transferring the income without transferring the asset, such income will not be taxable in the hands of transferee. Such income will be taxable in the hands of transferor. So, this is what section 60. What is section 60? Everyone participate. Transfer of income when there is no transfer of asset. That means without transferring an asset, if you are transferring only an income, income will be taxed in the hands of the transferor. Sir, if a person transfers the income from an asset, that means there is an asset. From that asset, you are getting income. That income you are transferring without transferring the asset. Without transferring the such income is taxable in the hands of transferor. So two persons will be there in clubbing. One is transferor and other is transferee. This transferor is having an asset. Without transferring that asset, if you are transferring only the income, that income will be taxed in the hands of the transferor. That's it. We'll give you an example, my dear lovable students. Sir, Mr. A confers the right to receive rent in respect of his house property on his wife, Mrs. A, without transferring the house itself to her. That means Mr. A were having one house property. That house property is a let-out property. From that property, sir, he will be getting rent. My dear lovable students, Mr. A is saying to the tenant that please don't give rent to me. Please give rent to the wife. That means Mr. A is just transferring the income without transferring the asset. Then section 60 will be applicable. In this case, rent received by Mrs. A will be clubbed in the hands of Mr. A. So it will be included in the total income of Mr. A. Government is saying that this is not Mrs. A's income. This is, sir, Mr. A's income. So one line summary of the entire discussion is, if you are transferring income without transfer of asset, income will be chargeable to tax in the hands of transferor. That's it. One section has been done. That's what the easiness of clubbing. So clubbing start with section 60. Everyone participate. What is section 60? Transfer of income without transfer of asset. What is a conceptual understanding? If you are transferring only the income without transferring the asset, that income will be clubbed in the hands of the transferor. That's it. Then everyone don't want to fall in section 60. People are saying that I don't want to fall in section 60 because if I transfer only the income without transfer the asset, my dear lovable students, then section 60 will be applicable. Section 60 will be, oh, I don't want to fall in section 60. Then people started doing this. Then government come up with section 61. What they started doing, you know, a revocable transfer of asset. In the revocable transfer. Revocable transfer of asset means I will transfer the asset to you. For example, I will gift this calculator to you. But whenever I ask, you have to return back. Then you are asking that, sir, that's sir gift. Are you really with me? Then what gift it is? Gift means when you give, you should not taken back. Am I right, sir? Sir, all income arising to any person by virtue of what transfer of asset? Revocable transfer of asset. If I give that asset, then I am having the right to take back. Such transfer is called as revocable transfer. Government is saying that if the transfer is a revocable transfer, then also clubbing provision will be applicable. Because what was the problem with section 60? Section 60, transfer of income without transfer of asset. That means if you have transferred asset, section 60 itself will not be applicable. So in order to not fall in section 60, sir, people started transferring the asset, but that transfer was a what transfer? Revocable transfer. So as per section 61, government is saying that if you are transferring the asset and if that transfer is a revocable transfer and from that asset any income has been accrued or risen, still it will be taxable in the hands of the transferor. That means all income arising to any person by virtue of what transfer? Revocable transfer of asset is to be included in the total income of the transferor. Sir, clubbing provisions will operate even if only a part of income of the transferred asset has been applied for the benefit of the transferor. In the sense means there was one house property. You tell me is house property an asset? I have transferred this house property to, sir, any person as gift. Any person as? But the transfer was a what transfer? Revocable transfer. Sir, monthly 10,000 rupees rental income has been received by this recipient. Out of this 10,000, only 5,000 rupees has been sent to the transferor. What Income Tax Act is saying that how much money has been spent by the transferee to the transferor does not matter for clubbing. Sir, who is the real owner of the asset? Transferor is the real owner of the asset. For the entire 10,000 rupees, clubbing provisions will be applicable. Sir, once the transfer is revocable transfer, that means two types of transfers are there. Revocable transfer is there, irrevocable transfer is there. Revocable transfer means transferor is having the right to take back the asset. Irrevocable transfer means transferor does not have the right to take back the asset. The entire income from the transferred asset is includable in the total income of the transferor. Am I right, sir? So in case of revocable transfer of asset, that's what the summary of section 61. If the transfer is a revocable transfer of asset, income will be chargeable to tax in the hands of the transferor. Are you really with me? So commandment, what is section 60? If you are transferring income without transfer of asset, that income will be taxable in the hands of transferor. What is section 61? Revocable transfer of asset. Even if the transfer is a revocable transfer, any income arising from the revocable transferred asset should be taxable in the hands of the... Sir, if the transfer is irrevocable transfer. Irrevocable transfer means, for example, I am the owner of this asset. I am gifting you this asset. I don't have the right to take back this asset till you die. Till you? Sir, once you die, after your death, do you want any asset? No, sir. We want asset only till we live. After your death, sir, we don't want what? Asset. So, section 61 will not be applicable. That means section 62 is an exception to section 61. 62 is an exception to section 61. So, section 61 will not apply to any income arising to any person if there is transfer by way of trust, which is not revocable during the lifetime of the beneficiary. In the sense means I am the transferor, you are the transferee, I am transferring an asset to you. The transfer is not a revocable transfer. That means transfer is a irrevocable transfer. Till your death, I can't take back the asset. Then only the transfer is an irrevocable transfer. Or any other transfer which is not revocable during the lifetime of assessee. After the lifetime of beneficiary, again the income is taxable in the hands of whom? Transferor. That means I were having an asset. Have I given the asset to you? Till your death, sir, I can't take back the asset. That's why the transfer is called as irrevocable transfer. Then from the date of transfer till the date of death, the income will not be taxable in the hands of transferor. Income will be taxable in the hands of transferee. Am I right? Because you are the owner of the asset. Because the transfer is not a revocable transfer. Transfer is a irrevocable transfer. Able to appreciate? My dear lovable students, but on the date of death, I got the right to take back the asset. That means the transfer has become what transfer? Revocable transfer. That means from this date to this date, section 62 will be applicable. From the date of death, section 61 will be applicable. Once section 61 apply, it will be taxable in the hands of the transferor. Able to appreciate? So income arising from transfer of asset. You tell me there are two transfers are there. What transfer? What transfer? Revocable transfer, irrevocable transfer. Revocable transfer section 61 2 61 and irrevocable transfer section 60. You tell me if the transfer is a revocable transfer, income will be taxed in the hands of income tax in the hands of transferor. That means clubbing provisions will be applicable. Whereas in case of irrevocable transfer, income is not taxable in the hands of transferor. Hence, it will not be clubbed in the hands. Are you all really with me? What is section 60? Transfer of income without transfer of asset. What is section 61? Revocable transfer of asset. What is section 62? Irrevocable transfer of asset. Come on, man. Section 63 is a Kuppa section, which is meaning of revocable transfer. What do you mean by revocable transfer? After I transfer an asset, if I am having the right to take back the asset, that is called as revocable transfer. After I transfer an asset, see, if I don't have the right to take back the asset till your death, that transfer is a irrevocable. For the purpose of section 60, 61 and 62, transfer shall be deemed to be revocable. We will say that transfer is a revocable transfer if it contains any provision for a retransfer, directly or indirectly, either the whole or any part of the income or asset to the transferor. That means after I transfer an asset, if the income generated from that asset has to be transferred to me, or that asset has to be transferred to me during the lifetime of the beneficiary, then that transfer will be called it as revocable transfer. That means I am transferring an asset. Sir, from that asset you are getting some income. I am saying that you keep the asset, but income you give to me. Or you keep this asset now, you give the income late, you give the asset later to me, then such transfer is a revocable transfer. It in any way gives the transferor a right to reassume power. I am the transferor. In that asset, during your lifetime, if I am getting a chance to reassume power directly or indirectly over the whole or any part of the income or asset during the lifetime of beneficiary, such a transfer is called as revocable transfer. In simple English, if I am transferring an asset to you, if I am having the right to take back the asset, or I am having the right to take back the income till your lifetime of the transferee, such a transfer is a revocable transfer. So for the purpose of section 60, 61 and 62, if any provision for what transfer, retransfer or right to assume power, then it will be treated as revocable transfer. Are you already with me? So this is the summary, sir. Section 60. What is section 60? Transfer of income without transfer of asset. Income will be clubbed in the hands of transferor. It is applicable to any person. Let it be company, let it be individual, let it be HUF, let any person. Whereas, my dear lovable students, section 61, revocable transfer of asset. Revocable? That means, sir, income will be clubbed in the hands of transferor. It is applicable to any person. Section 62, irrevocable transfer of asset. Sir, the income will be taxed in the hands of transferee. Income will be clubbed in the hands of transferee. It is applicable to any person. That means clubbing starting with section 60, 61, 62, 63, which are applicable to any person. In the sense means individual, HUF, AOP, BOI, AJP, BJP, partnership firm, company, everyone, this lot will be applicable. What is section 60? Transfer of income without transfer of asset. It will be clubbed in the hands of transferor. What is 61? Revocable transfer of asset. It will be clubbed in the hands of transferor. What is 62? Irrevocable transfer of asset. It will be taxable in the hands of transferee. 63 is a definition of revocable transfer. Able to appreciate? I'm moving into the next section, man. Section 64, clubbing of income of individual. That means the assessee should be individual, because only individual will be having wife. Only individual will be having son's wife. Only individual will be having minor child. Only individual will be having HUF, because members of the HUF should be individual. Am I right? Can a company have wife? No, sir. Can company have son's wife? No, sir. Can company have minor child? No, sir. Can a company have HUF? That means section 64 is applicable only to individual. What we are going to learn is, if an individual and his relatives is having income, the relatives income of the individual will be treated as the income of the individual. Are you able to appreciate? This many sections are there. I'll come and connect the section at the appropriate time. The first one, clubbing of income of spouse. Clubbing of income of, which are 64 subsection 1 class 2. 64 subsection 1. And number 2, with regard to an individual, income of individual to include income of spouse from asset transfer to the spouse without what consideration? Adequate consideration. Sir, next one, sir. Income of individual to include income of any person or AOP for the benefit of spouse. That means we are going to talk about spouse. Sir, I am an individual. Understand like this. I am ANM. I am having, sir, spouse. My spouse 3 income will be treated as my income. If my spouse is having 3 income, it will be treated as my income. What are the 3 income is what we are going to learn. Are you all really with me? Come on, sir. Sir, as per 64, subsection 1, clause 2, salary, commission earned by the spouse. For example, my wife is getting salary. My wife is getting commission. Sir, that will be treated as my salary, my commission. Yes, sir. Sir, these conditions has been satisfied. If the spouse has earned remuneration from a concern, for example, is ANM classes is a concern? Yes, sir. Where individual is having substantial interest. I am the individual. I am having substantial interest in where? ANM classes. From ANM classes, my wife is getting salary. From ANM classes, my wife is getting commission. From ANM classes, my wife is getting remuneration. And spouse does not possess any professional or technical qualification. I am saying that my wife is only taking IDT in ANM classes. Sir, my wife don't even know the spelling of IDT because she's not a chartered accountant. Am I right, sir? Sir, actually, who is only taking? I am only taking. Actually, who is entitled to get salary? I am entitled to get salary. It is my income. But in accounts, I am showing that my wife has taken class and the salary has been paid to my wife. What government is saying that if a spouse is getting remuneration from a concern in which that individual is having what interest? Substantial interest. And if the spouse does not possess professional or technical qualification, then such remuneration shall be clubbed in the hands of transferor. Then such salary, such remuneration, such commission will not be treated as my wife's income. It will be treated as my income. Easy provision. Sir, what is this substantial interest? When you can say that ANM is having substantial interest in ANM classes? Sir, if ANM classes is a company, then ANM should have 20% of the voting right. 20% of the... Sir, in any other case, my dear lovable students, that means, sir, ANM classes is other than company. Is if the ANM is having 20% in profit share, we can say that ANM is having substantial interest in ANM classes. Hello, sir. Sir, these are some specific notes. So what is the topic we are learning? First, understand the topic. That's what very important. As per section 64, first of all, 64 is applicable to individual. Individual will be having 4 relatives, my dear lovable students. How many relatives? That's why 64. Number 1, spouse. Sir, if I am having a spouse, surely I will be having minor child. Am I right, sir? Tomorrow that minor child will become major child, and if that is a son, that son will get married, then sir, son's wife will come. Am I right, sir? Then all of us will become a Hindu undivided family. Engal veetil ella naalum Karthigai ta da da. Same thing. We will become a Hindu undivided family. That's how the relationship is going. So first, the most important person is whom? Spouse. Sir, if my spouse is having 3 income, it will be treated as my income, my dear lovable students. Hello, sir. Income number 1, remuneration to the spouse. Income number 1 is what? If my spouse is getting remuneration from a concern in which I am having substantial interest, and my spouse does not possess any professional or technical qualification, then that remuneration will not be taxed in the hands of the spouse. Remuneration will be taxable in my hands. Am I right? When you can say that I am having substantial interest, if I am having 20% of either voting right or 20% of the profit sharing, I can say that I am having substantial interest in a concern. Pakka. These are certain notes. Sir, where both husband and wife are having substantial interest. For example, myself and my wife are partners of ANM classes. I am holding, sir, 60% and my wife is holding 40%. Both are holding more than 20%. That means both are having what interest? Substantial interest. Then income shall be clubbed in the hands of person having greater income before this clubbing. Before including the clubbing provision, who is having greater income? Who's having? Whether husband is having greater income or wife is having greater income. If husband is having greater income, the remuneration of the wife will be clubbed in the hands of the husband. If wife is having greater income, remuneration of the husband will be clubbed in the hands of the wife. Holding of relative shall also be counted while considering the what interest? Substantial. Sometimes I may not hold directly 20%. Along with my relatives, I may hold more than 20% of the voting right. Then, my dear lovable students, I can say that, sir, I am having substantial interest in a concern. Am I right, sir? Because either I have to directly hold 20% or I have to indirectly hold 20%. Either I myself can hold 20% in ANM classes or myself along with my relative, sir, holding more than 20%. Then I can say that I am having what interest? Relative in relation to an individual means, for example, if it is, sir, wife, husband is a relative. For the husband, wife is a relative. Then brother, then sister, or any lineal ascendant or descendant. So what you are trying to say, sir? Very simple, sir. In computing the total income of individual, is ANM an individual? If you are calculating the total income of ANM, remuneration of the spouse, first check that. Have ANM have a spouse? Yes, sir. With God's grace, now I am having one spouse. Sir, if that spouse is getting any remuneration, then my dear lovable students, have she getting remuneration from a concern in which I am having substantial interest? Yes, sir. Which will be clubbed in the hands of that individual who are having substantial interest. That's it. With regard to 64, subsection 1, clause 2, remuneration of the spouse will be clubbed in the hands of the individual who are having what interest? Okay, man, coming to the next one, man. The next income of my spouse will be clubbed in my hands. For example, sir, one particular day, some date I am taking. Sir, February 14th I am taking. Hello, sir. On February 14th, my dear lovable students, you all know that I am having lot of money. I am having 10 residential house property. All are let out property. Hello, sir. On a fine morning, February 14th, I'm going to my home and I'm saying to my wife that I love you, like that. She's replying. What is the ideal reply? She should say, I love you too. Am I right, sir? She has said that, who need your I love you? Because you are having 10 residential house property and you are saying simply I love you by opening the mouth. I don't want this. Then immediately I understood that, okay, somehow I have to make her happy. And out of this 10 residential house property, I said that from today onwards, February 14th onwards, sir, 5 of the residential house property are your residential house property. Remaining 5 are my residential house property. Hello, sir. She immediately said that, I love you, da. My dear lovable students, I have transferred 10 residential house property. Out of 10 residential house property, 5 residential house property to her. Hello, sir. Now, who is the owner of this 5 residential house property? Wife. Who is the owner of this 5 residential house property? Myself. All are what property? Let out property. Then any rental income received from these 5 house property should be taxed in the hands of spouse. Any rental income received from this house property should be taxable in the hands of myself. You tell me whether I'm having more income or less income. More income because I'm having lot of money. I'm having lot of income. So, sir, tricka on February 14th, half of my income has been shifted to my wife. By saying that, I love you, da. Government is saying that, I hate you, da. Government is saying that, if you are loving your wife that much, please pay the tax also on behalf of her. Because even though the 10 out of 10 residential house property, 5 residential house property you have transferred to spouse, still you will be treated as the owner of the house property. You will be treated as the... So come on, man. As per 64 subsection 1 class 4, sir, income of individual. Am I individual? Yes, sir. To include income of spouse, sir, in my total income, my spouse income will be included from asset transferred to the spouse without adequate consideration. On February 14th, I have transferred the asset. Sir, have my wife paid anything to me? No. Without adequate consideration, I have transferred. From that asset, she is getting some income. That income will be clubbed in my hands. Am I right? What Income Tax Act as a whole is saying that the asset what you have transferred is residential house property other than residential house property. What is the question? Residential house property other than residential house property. If it is residential house property, we are having a separate head called as income from house property. Income from? If it is income from house property, in that chapter, there is a section called as section 27. Section 27 is deemed owner. What owner? And other than residential house property, section 27 will not be applicable. Then clubbing provisions will be applicable. What is this discussion, sir? Come on, sir. Sir, I have transferred what to her? Residential house property. Then income from the house property will be taxable in the hands of transferor as per section 27. As what owner? Sir, we have already completed the chapter what? House property. In that house property, there was one section called as section what 7? 27. Section 27 is what owner? What that section is saying that if an individual is transferring residential house property to the spouse without adequate consideration or for inadequate consideration, my dear lovable students, hello sir, then you will be treated as the deemed owner. Look at here, section 27. I'm going back and referring to you. What is section 27? What owner? Deemed owner. Sir, if an individual transfer property, sir, you tell me, is ANM an individual? Yes, sir. I'm transferring property to their spouse. To my spouse, I transfer the property without adequate consideration. Then transferor is deemed to be the owner. So even if I have transferred house property to my spouse without adequate consideration, I will be treated as the deemed owner. If I am the deemed owner, my dear lovable students, why clubbing provision has to be applicable? Then clubbing provision will not be applicable because I am the owner. Then income will be taxed in my hands. Don't say that clubbed in my hands. In order to club it, income should be wife's income. Am I right? So my dear lovable students, they are saying that if the asset what you have transferred is residential house property, provisions of section 27 will be applicable. Section 27 is saying that transferor is the owner of the asset. Then the income will be taxed in the hands of the transferor as per section 27. Can I proceed? For example, my dear lovable students, do you think that I am having lot of money? With that money, I have invested in the debentures of Reliance Limited. Is debentures in Reliance Limited an asset for me? That debenture has been gifted on the February 14th Lovers Day, and I said that I love you. From that debenture, will she get interest in future? Yes, sir. Now section 27 will not be applicable because section 27 is applicable only for residential house property. Then if it is other income, that means other than residential, it should be taxable in the hands of transferor under section 64 subsection 1 clause 4. Are you comfortable? Sir, where the asset transferred has changed its shape, identification, then income from such changed asset also is to be clubbed. What my wife is doing, no, wife, I have, sir, transferred one residential house property to her. She has changed the painting of the house property. Still, I am the demon owner of the property. Or I have transferred some asset to her. She has changed the form. She has changed the shape. She has changed the identification. Not to fall in section 64, subsection 1, class 4. Then, my dear lovable students, still the income will be taxable in my hands only. So, what is the one-line summary? In computing the total income of individual. Who is the individual? ANM. Income from asset transfer to spouse. Have I transferred any asset to my spouse? Yes, sir. For inadequate consideration or other than for agreement to live apart. In the sense means, if I am giving the asset to her because of divorce, then my dear lovable students, clubbing provisions will not be applicable. Because she is saying that in order to give the divorce, she need 5 residential house property out of the 10 residential house property. Then after gifting her, that is the last day I am going to love her. From here onwards, there is no love. Am I right, sir? So if that is the case, clubbing provisions will not be applicable because that property will become her property. For her property, why I have to pay tax? Are you all really with me? Otherwise, will be clubbed in the hands of the transferor. Able to appreciate, sir? That's it, the second income. What is the topic we are learning? 64. Section 64 is applicable to individual. If individual is having 4 relatives. Number 1, spouse. Leave it. For spouse, 3 income of the spouse will be taxable. One is 64 subsection 1 class 2. 64 subsection 1 class. 64 subsection 1 class 7. 64 subsection 1 class 2 is saying that, sir, if any remuneration has been received from a spouse in which that individual is having substantial interest and that spouse does not possess professional or technical qualification, then that remuneration will be clubbed in the hands of the individual who are having substantial interest. Any problem? As per 64 subsection 1 class 4, if any asset has been transferred by the individual to his or her spouse other than residential house property, because residential house property means section 27 will be applicable. So from that asset, any income has been accrued or arisen, then my dear lovable students, income should be clubbed in the hands of the transferor. I am moving to the next one, man. 64 subsection 1 class 7. Income of individual to income, sir, include income of any person or AOP. In the sense means, I understood one thing. If I transfer this residential house property to my wife, still I will be treated as the what owner? Deemed owner. If I transfer this debenture to my wife, still the income will be clubbed in my hands. That means there is no use. What I thought, whether I thought, sir, I want to make my wife happier. No, I want to reduce the total income. That is what my objective is all about here. That's why I am transferring 5 residential house property to spouse. Am I right? Otherwise, as a family, whether the asset is in my name or whether the asset is in my wife's name, does not matter because whatever income I am earning, I am going to spend for my wife. Whatever income she is earning, I am going to borrow from her. Are you all really with me? Then that doesn't matter. Our intention is we both have to cheat the government by reducing the what income? Total income. For that only we are doing all these. So, if I transfer the residential house property to my wife, I will caught under section 27. If I transfer any other asset to my wife, I will caught under section 64. Then I can't transfer anything from my hands to my wife for inadequate consideration or without consideration. Pakka? The same thing. She can't transfer to me for inadequate consideration or without consideration. Then I'm thinking an idea, alternate idea. This is what I'm doing. The asset is transferred for the benefit of wife. I am not directly transferring to my wife. To get benefit of my wife, I'm transferring the asset to a AOP, association of what man? Person. In the sense means, I am having residential house property or other asset like debenture, shares, etc. I am not transferring this residential house property or other asset. I am to my wife. Instead of transferring to my wife, I am transferring to AOP or BOI. Hello, sir. And I am asking this AOP or BOI to give for rent. Then this AOP or BOI will get rental income. And I am asking this AOP or BOI to spend that rental income for my wife. That's what I'm doing. That means indirectly she got the benefit of the rental income. Am I right, sir? What government is saying that if an asset is transferred for the benefit of wife, that means I have not transferred the asset to my wife. I have transferred to some other person like AOP or BOI. But the whatever income sir going to get from that asset is going to be spent for the benefit. Then income from such property shall be clubbed in the hands of transferor. In the sense means, even if I directly transfer to my wife, clubbing provisions will be applicable. Even if I indirectly transfer to some other person for the benefit of wife, still clubbing provisions will be applicable. But the exception is if the asset is transferred otherwise than for what consideration. If this AOP or BOI has given adequate consideration, means clubbing provision will not be applicable because there is no cheating there. Because you sold the asset to the AOP or BOI and some income has been received by AOP or BOI that has been spent for the benefit of your spouse or not does not matter at all. Am I right, sir? So this is the one-line summary, my dear lovable students, in computing the total income of individual. Is ANM an individual? Yes, sir. Income from asset transfer to where or where? AOP or for the benefit of spouse. But one condition, for what consideration? Inadequate consideration will be clubbed in the hands of transferor. That's it, man. That means first relative ka clubbing comes to an end. Who's my most affected relative? Wife, spouse. That means if my spouse is having 3 income, that income will be clubbed in the hands of transferor. Income arising to spouse. 64 subsection 1 class 2. 64 subsection 1 class. 64 subsection 1 class. Sir, remuneration to spouse from a concern in which individual is having substantial interest, which is more than 20% voting power. 64 subsection 1 class 4 is DT. 64 subsection 1 class 7 is IDT. Are you all really with me? My dear lovable students, sir, income arising to spouse from an asset transfer without what consideration? That means directly I have transferred asset to the spouse. Directly I have transferred asset to the sir, income arising to spouse from asset transfer to any person or AOP for the benefit of the spouse. That means I have not directly transferred to the spouse. I have transferred to some other person and I have asked them to spend for the benefit of the spouse. That is what IDT called as indirect transfer. Are you all really with me? My dear lovable students, in DT in 50 mark, try to get 40 mark, my dear lovable students. Hello, sir. Sir, DT plus IDT, try to get 70 mark in your examination. So, 64 subsection 1 class 4 is DT. 40 mark you should get in DT. DT, IDT, you should get 70 mark. 64 subsection 1 class 7. So, my dear lovable students, 3 incomes of the spouse will be clubbed in the hands of the individual. Am I right? 64 subsection 1 class 2, 64 subsection 1 class 4, 64 subsection 1 class 7. What is 64 subsection 1 class 2? Remuneration to the spouse. What is 64 subsection 1 class 4? Direct transfer of asset without adequate consideration. 64 subsection 1 class 7. Indirect transfer of asset for the benefit of the spouse. Coming to the next one, man. Sir, clubbing of income of son's wife. Yaar, man. 64 subsection 1 class 6 and 64 subsection 1 class 8. Only 2 incomes of the son's wife will be clubbed in my hands. Look at the story, man. Sir, what is my name? ANM. That you know. Sir, I am having one wife. Are you all really with me? Yes, sir. We were having a son. This son is a major son. This son got married. That means we will be having daughter-in-law. Whose daughter-in-law? Son's wife, Marumagal. Hello, sir. Then, my dear lovable students, if that Marumagal is having any income, it will be treated as my income. Because I understood one thing. If I transfer the asset to my spouse, always problem in Income Tax Act. So instead of transferring to my wife, I am seeing some alternative. Are you really with me? Instead of transferring the asset to what? Wife. I am transferring the asset to daughter-in-law. I believe that. I trust that. This video will not saw at home. So my dear lovable students, 64 subsection 1 clause, sir, 6. If assets are transferred to whom? Son's wife. Instead of transferring the asset to wife, I am transferring to son's wife because she is my marumagal. This is Income Tax Act 1961. At that time, whatever Mamanar is said to marumagal, marumagal will say that. Okay, yeah. Now 2025 Act changed. Are you all really with me? That's why they are changing the Act. Super fantastic to the core. So, if the asset are transferred to whom? Son's wife. For what? Inadequate consideration or without consideration, and income is earned, then such income should be clubbed in the hands of transferor, that is father-in-law, or even mother-in-law also. Because mother-in-law is also an individual. Instead of I am having an asset, if my wife is having an asset, instead of transferring my wife the asset to me, she is feeling that very danger. Let me transfer that asset to son's wife, marumagal. And that marumagal is let outing that property. From that property, if she is having any rental income, that will not be taxable in the hands of marumagal. It will be taxable in the hands of mamiyar or mamanar, as the case may be. Able to appreciate. Super, sir. That means that's it. That means this is what transfer? Direct transfer. So if an individual, that individual may be either mamanar or mamiyar, as the case may be, is transferring an asset directly to the marumagal for inadequate consideration or without consideration, from that asset any income has been accrued or risen, it should be clubbed in the hands of the individual. It may be mamanar or mamiyar. As the one line summary, sir, in computing the total income of the individual, who is this individual? Sir, mamanar or mamiyar, as the case may be. Income from asset transfer to son's wife. Who's this son's wife? Marumagal, that is daughter-in-law. For inadequate consideration or without consideration, will be clubbed in the hands of transferor. The transferor may be marumagal or mamiyar, as the case may be. Comfortable? I am coming to 64 subsection 1 clause 8. Clubbing of income of son's wife. Again clubbing. Oh, I understood that. As an individual, I can't transfer to my wife, my own wife. Income tax is making problem. Okay, leave my wife. I can't transfer an asset to my son's wife. Income Tax Act is making some problem. So instead of directly transferring asset to her, I am indirectly transferring asset. I am indirectly. If the asset is transferred for the benefit of son's wife, then income from such property shall be clubbed in the hands of transferor. That means instead of me transferring asset to the son's wife directly, if I am transferring the asset to AOP or BOI and I am asking the AOP or BOI to spend for the benefit of my son's wife, it will be clubbed in the hands of transferor. But only one exception always. The asset is transferred otherwise than for what consideration? If it is for adequate consideration, then clubbing provisions will not be. Sir, where any asset is transferred by a person to any other person. For example, I am the mamanar. I am having an asset. I am not transferring the asset to the marumagal. I am transferring to any dash or dash. AOP or BOI. You tell me, is AOP or BOI is getting an asset from me either without consideration or inadequate consideration? Then is AOP or BOI is receiving a capital asset? If you are transferring a capital asset, capital gain will be applicable. If you are receiving a capital asset, IFOS may be applicable. Am I right? Without consideration or inadequate consideration, then provisions of 56 subsection 2 class 10 would get attracted in the hands of transferee. Who's transferee? AOP or BOI. If conditions specified therein are satisfied. That means what Income Tax Act is saying, that why are you not transferring to marumagal? Why are you transferring to AOP or BOI? Because you don't want to fall in this provision. Am I right? You don't want to fall in this provision. Look, if you would have transferred to the marumagal, you and marumagal are relatives. Hence, in the hands of marumagal, IFIS will not be applicable. Are you all really with me? Because for marumagal, sir, my son is only husband. My son is only husband. For marumagal, lenient, sir, ascendant or lenient descendant, brother or sister, sir, or the parents of the husband are relatives. Able to appreciate. So me being a relative gifting asset to the marumagal, IFIS will not be applicable in the hands of the marumagal. Only clubbing provisions will be applicable. But in order to escape from this DT, you are going to IDT. Are you all really with me? Instead of transferring the asset to the marumagal, you are transferring to AOP or BOI, myself, Mamanar, and that AOP or BOI are relative. That means in the hands of AOP or BOI, provisions of 56 subsection 2 class 10 will be applicable. Point number 1. Point number 2. Sir, from that asset, any income has been utilized for the benefit of the son's wife. Then, my dear lovable students, clubbing provisions will be applicable in my hands. It's a double blow. Here it is only a single blow. If you are directly transferring to son's wife or directly transferring to wife, sir, IFOS will not be applicable. Only clubbing will be applicable. But if you are transferring to AOP or BOI, in the hands of AOP or BOI, IFOS will be applicable and clubbing will be applicable. Able to appreciate? Sir, one line summary of the entire discussion in computing the total income of the individual. Who's this individual? Either Mamanar or Mamiyar, as the case may be. Income from asset transfer to where or where? AOP or BOI. For the benefit of whose wife? Son's wife. For what consideration? Will be clubbed in the hands of transferor. That means only 4 relatives I am having. Number 1, spouse. Number 2, son's wife. Ladies first. Both ladies has been done. My dear lovable students, summary of that. Sir, clubbing of income. 2 people, man, spouse and son's wife. Sir, my wife's 3 income will be taxed in my hands. Sir, remuneration to spouse. As per what section? 64 subsection 1. Direct transfer. 64 subsection 1. Indirect transfer. 64 subsection 1. Class. Are you all really with me? Come on, son's wife. Sir, direct transfer. 64 subsection 1. Class 6. Class 6. Class 6. Kala 6 mani. Sir, sun will come out. Are you all really with me? Romba veila irukku. Are you all really with me? So, direct sun or not SON, it is SUN. Sir, 64 subsection 1 class 6 is the what transfer? Direct transfer. Sir, indirect transfer. 64 subsection 1 class 8 because this is daughter-in-law. Marumagal. Are you all really with me? That in-law is the problem. If you say daughter, D, A, U, G, H, T, E, R, 1, 2, 3, 4, 5, 6, 7, 8. Sir, 64 subsection 1 class 8. Indirectly, we are treating her as Marumagal. Treat her as Magal. Half of the serials in Tamil Nadu will be over. My dear lovable students, that's what clubbing provisions is all about, man. With regard to spouse and son's wife. Any problem to anyone? No, sir. Are you able to recall this? Come on. The second important part, this will be tested in examination as the clubbing provisions. Very important. For example, I am an individual. I am gifting something to my wife. I am gifting something to my son's wife. Hello, sir. Clubbing provisions will be applicable. When clubbing provisions will be applicable, any income has been accrued or arisen from that asset. For example, please be with me. I am an individual, my dear lovable students. I am gifting a residential house property. Or rather, residential house property, section 27 will be applicable. So let me take the example of debentures. Sir, from this debentures, sir, I am entitled to get interest. Am I right? This interest today, sir, my spouse is getting. This interest today, son's wife is getting. Then this interest will be taxable in my hands. Are you all really with me? That's it. But what I'm doing is, being an individual, I'm giving 50 lakh rupees cash. 50 lakh rupees to my wife or to my son's wife as gift. Pichko, Deva, Pichko. 50 lakhs I'm giving. Sir, since myself and my wife, myself and son's wife are relative, even though the aggregate amount of cash received during a previous year exceeds rupees 50,000, nothing will be taxable under the head IFOS in their hands. Technically clear? Sir, what they are doing with this 50 lakh, you know, they are starting a business with this money. And from that business, my wife or son's wife is earning profit. Are you all really with me? That means they are starting a business by putting 75 lakh. You tell me what is the total capital employed? 75 lakhs. Out of my capital, 50 lakhs. My wife's capital or son's wife capital, 25 lakhs. That's how they started business. Total 75 lakh. By doing this business, total profit of 10 lakh rupees has been earned by them. Any of them. Example. Then out of this 10 lakh, what is the capital share of myself? 50 lakhs. Up how much lakhs into 10 lakhs into 50 lakhs divided by 75 lakhs. What is 10 lakhs into 50 lakhs divided by 75 lakh? 6 lakh? 6 lakh 66,666 you are getting. Am I right? So 10 lakhs into 25 lakhs divided by 75 lakhs. 3,33,333. Look at here. Sir, this 6,66,666 will be taxed in my hands. This 3,33,333 will be taxed in either spouse hands, wife hand, or now you read it, man. For the purpose of 64 subsection 1 clause 4. What is clause 4? 40 mark in DT. And clause 7, 70 mark in DT plus IDT. Am I right? Sir, this is 6th son's wife. Am I right, sir? The profit earned in the business shall be clubbed in the following manner. First, you have to take the total profit. As per our example, what is the profit? 10 lakh. Into gifted amount. How much we gifted? 50 lakhs. What is the total capital employed? 75 lakhs. In other words, following income shall be clubbed A into B by C. What is A? Income from such business of the spouse or what wife? This provision will be applicable only if the gifted amount is cash. And cash, with that cash, if either the spouse or son's wife have started the business. Able to appreciate? Sir, B part. Investment in the business as on the first day of the previous year out of the transferred fund made by the spouse or son's wife. This is very important. In exam, they will check. How they will check, I will tell you. What is the total capital employed? 75 lakhs. The total capital employed, you should check on 1st of April 2025. On 1st of April 2025, what is the opening capital outstanding? For example, I gifted on 1st of April. She has invested in the business on 1st of April itself. Then, have that capital has been in the business for entire 365 days. Only for that capital, you are supposed to do the clubbing. For example, on 31st of March, I have gifted her 50 lakh. For the profit, what has been earned during the year, why for number of days based rental clubbing provisions will not be applicable. If the gift has been made on 1st of April and amount has been invested by the other party on 1st of April, then only, sir, we have to do the clubbing. For example, my dear lovable students, I gave the gift on 14th of February. Then you tell me, in the current year opening balance, is the gifted amount there or not there? Not there. Then nothing will be clubbed in my hands. Everything will be clubbed in either spouse hands or son's wife hand. But in next year, you tell me, my capital will be there. Then from next year, 1st April onwards, my capital is there. Then for next year profit, you have to bifurcate that into my share and her share. Are you able to appreciate? Now you read it, man. Investment in the business as on first day of the what year? Previous year. Out of the transferred fund made by spouse or son's wife. Total investment in the business as on the what day? First day of the previous year made by spouse or son's wife. So this is a special provision where the asset transferred directly or to spouse or son's wife is invested in any business. If they invested this money in any business and from that business they are getting some income, then income from that portion will be taxable in the hands of individual who have gifted. That's it, man. 2 relatives done. Number 1, spouse. Number 2, son's wife. And special provision for the spouse and son's wife if we are gifting them cash and if that cash has been invested in the business and from that business if any profit has been accrued or risen, it should be clubbed in the hands of the transferor and transferee proportionately. How to calculate that proportion also discussed. Are you all really with me? Now, my dear lovable students, the third relative is my minor child. For example, I am having a minor child. Minor child means, sir, a child does not attain the age of 18 years. I think all of you are major. Hello, sir. Okay, fine. Sir, 64 subsection 1A. Whose income? Minor's income. Minor's income will not be taxable in the hands of the minor. Minor's income will be taxable in the hands of the parents who are having higher income. Who are having? Because I just want to deviate or reduce my income. I can't transfer anything to my wife. Already, sir, closed. Doors are closed. I can't transfer to my son's wife. Doors are closed. The papa is only there in the house. Called as what child? Minor child. So I can transfer the income to the minor child. Even he or she don't know he is getting income. What government is saying that, sir, all other income except specified income shall be taxable in the hands of the parents. For that, you have to check whether the parents' marriage subsists or parents' marriage does not subsist. That is the highest problem of today. Sir, marriage done, super, fantastic. Ure vanduchu. Everyone ate the food. And having 1 or 2 minor child also. But by the time minor child is growing, parents are getting separated. Sir, if the parents' marriage subsists means well and good. then clubbed in the hands of the parents who is having what income? Higher income. You have to see father or mother who's having higher income. In their hands, minor income will be clubbed. Sir, if the parents' marriage does not subsist, that means they have separated, they have divorced. You can't go and ask to the minor child that, Amma pullaya, Appa pullaya. Like that and all, you can't ask. Clubbed in the hands of parent who maintain the minor child. As per the court order, sir, court would have said that the child should be taken care by father or child should be taken care by mother. Generally, mother up to a limit. Beyond that, it is the ishtam of the child as in accordance with the court direction. Following shall not be clubbed and shall be taxable in the hands of minor itself. That minor child, what wala, chota wala, is earning income out of skill and talent. For example, he is going, sir, participating in a dance competition. He is, sir, playing some dance, sir, something. He is singing some song. Hello, sir. By doing all these things, if he is having income, it is because of the skill and talent, like some junior dance shows, junior some singing shows and junior singing shows and all. A super singer, something going on. In that, you tell me, if you singing a song, will everyone hear? No, sir. Really need skill and talent for others to hear. So, my dear lovable students, if that minor son is having skill and talent, because of that skill and talent, if she is earning any income, then that won't be clubbed in the hands of parents because it is own income da. What somebody's income da? It will be taxable in the hands of the minor child itself. Earned out of manual work done. By doing some work that minor child has earned income. It will be taxable in the hands of the minor child itself. Income earned by minor handicap covered under 80U. If the minor child is suffering from disability under 80U, under chapter 6A deduction, 80U is the disability of self. Disability of that only minor child can claim. Because who's having disability? Minor child is having disability. If there is no income, entire income of the minor child clubbed in the hands of the parents, what will be the gross total income of minor? 0. Then against 0, what deduction you will claim? So in order to claim deduction, who need income? Minor child income. That is a logic or reason why, sir, the minor's income will not be clubbed in the hands of the parent if minor is suffering from 80U disability. Able to appreciate? So this 3 income will not be clubbed. Sir, once income of minor is clubbed, then exemption under 1,500 per child shall be available irrespective of the number of child as per 10 subsection 32. That means, for example, I am having, sir, 2 minor child are there. And minor child income is going to be clubbed in my hands because I am having more income. Then for every child, 1,500 rupees will be exempted. In order to claim this exemption, you should travel through the optional tax regime. Under default tax regime, this exemption will not be applicable. Highlight is how much rupees? 1,500. For how many child? Any number of child. That is how, sir, pakka your choice. You can have 10 minor child also, no problem at all. But 1,500 will be allowed. 1,000? Actually, we are learning which topic? Clubbing of income. Clubbing of income of whom? Individual. Individual is having relatives. How many relatives? 4 relatives. The section what we are studying is section 64. What is a half of 64? 30? That's why exemption is provided under 10 subsection 32. My dear lovable students, 1,500 per child. Able to appreciate? Because a lot of section 10 you are learning. You should not forget that. That's what I am saying. Sir, if the asset transferred to minor child not being minor married daughter without consideration or inadequate consideration is house property, then under section 27, transferor parent will be deemed owner and amount will be taxable to him. In the sense means, as per section 27, what is 27? Deemed owner. One more clause is there. Look here. Sir, transfer to a chota wala. Transfer to a chota wala. If an individual is ANM individual, transfers property to their minor child. I am transferring house property to the minor child without adequate consideration. Then transferor is deemed to be the owner. Then I will be deemed to be the owner. So if I transfer house property to my wife, I am the deemed owner. If I transfer house property to the minor child, I am the deemed owner. But if the transfer is to a minor married daughter, for example, at the age of 15 itself, that minor child got married. Enna sir solringa? Sir, 1961 Act yaar. That's why new Act 2025 accepting in 1961 and all, at the age of 10 years, 11 years, 12 years, the people used to get married. The transferor is not deemed to be the owner. If that chota wala is a married person, means I am not the deemed owner because she is having separate family. She is having a husband. Am I right, sir? If I go and say to my marumagan that, மாப்பிள்ளை இவர் தான் ஆனா போட்டிருக்கிற ட்ரெஸ் என்னோட இது சார் this house is yours but the house belongs to me, then what that மாப்பிள்ளை will do, he will divorce that sir person. Hello sir, so income tax act don't want to create any problem within the family. That's why they are saying that if the chota wala is a married chota wala, deemed sir concept will not be applicable. Deemed owner concept will not be. Even here clubbing provisions under 64 subsection 1A will be applicable, but clubbing will be applicable. Deemed ownership concept will not be applicable. Are you all really with me? That's what they are saying. If the asset is transferred to a minor child, not being minor married daughter, without consideration or inadequate consideration. Are the chota wala is not married, yeah? If chota wala is not married means, then under section 27 subsection 1, transferor will be treated as a what owner? Deemed owner. Then it is my house property only. Then I am the person who are liable to pay tax. Then why are you talking about clubbing and all? Are you all really with me? One line summary of the entire discussion is, sir, if a minor child is suffering from disability under ATU, then clubbing provisions will not be. Income on account of manual work done by minor child, clubbing provisions will not be. Application of skill, talent or specialized knowledge and experience, then clubbing provisions will not be applicable. 3 relatives done. Number 1, spouse. Number 2, son's wife. Number 3, minor child. The last one, HUF. HUF means Hindu undivided family, a group. For example, myself, my wife, my minor child, everyone is forming part of one HUF, Hindu undivided family. For example, ANM HUF. ANM, sir, 64 subsection 2, transfer of asset to HUF. For example, I am having an asset, property. Instead of transferring the property to my wife, to my son's wife, to my minor child, I am seeing another loophole. I am transferring to HUF. If any individual is ANM individual, transferring any asset to his HUF, my own HUF, my kudumbam HUF, without or inadequate consideration, then income from such asset received by HUF will be taxable in the hands of transferor, or it will be taxable in my hands. For example, I am having a house property. I have transferred the house property to the HUF and HUF is renting out that property. Who is getting rental income? HUF, but it will be taxable in my name. After partition of HUF, income from such asset received by spouse shall be clubbed in the hands of the transferor. For example, I were having a house property. I transferred the house property to the HUF. HUF partitioned. At the time of partition, that asset has been given by the HUF to my spouse. That means instead of myself directly giving to the spouse, first I gave to the HUF, then HUF gave to the spouse. Still, any income arised from that asset will be clubbed in the hands of transferor. So, individual being a member of HUF. Am I a member of HUF? If any property attached means I gave a property to the HUF for inadequate consideration, then income from that property will be clubbed in the hands of the individual. Able to appreciate, sir? These are certain notes, man. Income include loss also. I always said that any income accrued or risen to my spouse, son's wife, minor child, HUF will be clubbed in my hands. If any of them are having loss, even the loss will be clubbed. That means profit will be added, loss will be minus. Therefore, loss, then also clubbing provisions are applicable. Where asset transferred is convertible into other form, income derived from such converted asset shall be clubbed. Income Tax Act is saying that, ayyada, sir, if I am giving some asset to you, if you are converting the form of the asset, then from the converted from any income accrued or risen, still that income will be clubbed. Natural love and affection may be a good consideration, but it is not adequate consideration for the purpose of section 64. Because entire clubbing is based upon adequate consideration. Am I right, sir? You are gifting 5 flat to your wife and you are saying that I am having natural love and affection. Income Tax Act is saying that you keep it with you. That is a good consideration. That is good for your life, but not for Income Tax Act. For Income Tax Act, you need adequate consideration. If the asset transferred is sold by the transferee, for example, I transferred residential house property to my wife. Hello, sir? My wife transferred that residential house property. That means in wife's hand, dash gain will come. Then capital gain is treated as income and it will be clubbed. It is not her capital gain. It is my capital gain. all the clubbing provisions are not applicable to second generation income. Very important. Income on income will not be clubbed. Tell me. Income on income will not be clubbed. Tell me. For example, I am gifting, sir, some asset to the wife. Asset is giving that wife is giving that house property for rent. She is getting rental income. In whose hands it will be taxable? I am liable to pay tax, but the money she is keeping with her. That money she is putting FD in a bank. From that FD she is getting interest. That interest will not be clubbed. Because it is her skill and talent to make income on income. It is not my income. It is not my talent. Am I right, sir? So income from accretion of the transfer asset will not be clubbed in the hands of the transferor. So this is what the summary of the entire discussion, man. Clubbing of income of how many person? There are only 4 relatives are there. That's why it is 60. Spouse, 3 income will be clubbed. If my spouse is having a remuneration, 64 subsection 1 class 2. Sir, from DT, how much mark? 40 mark. 64 subsection 1 class, DT plus IDT total, 70 mark. Income from IDT, indirect transfer. Son's wife, son, DT, IDT, DT, 64 subsection 1 class 6. IDT, 64 subsection 1 class A. Minor child, 64 subsection 1A. And HUF 64 subsection 2. Hello, sir. We are moving to the last topic for the clubbing. With that clubbing comes to one called as cross transfer. Called as nothing, man. I understood very well that I can't transfer anything to my wife. I can't transfer anything to my son's wife. I can't transfer anything to minor child. I can't transfer anything to HUF. Sir, I will caught. Then I'm doing one thing in the sense means, for example, sir, myself is ANM. I am having a brother called as ANM's brother. Hello, sir. I am having a wife and this ANM brother is having a minor son. Possibilities there. I'm saying to my brother that, Macha, sir, Anna, I want to transfer some asset to my wife. If I transfer some asset to the wife, I will be caught. Okay. Then you do one thing. Okay, sir, I will transfer some 10 lakh rupees to the minor son account. That minor son is Chota Wala. He don't know anything. He is having, sir, in a palkupi. That bank account you only having. Sir, yare minor son's bank account. Anna, you do one thing da. From your bank account. Because anyway you are having, sir, 20 lakh rupees bank balance. No. Hello. I will do one thing. You want to transfer some money to the minor son. If you transfer some money to Chota Wala, any income has been accrued or raised to Chota Wala will be clubbed in the hands of the parents who are having higher income. For that Chota Wala, you are the parents. So you do one thing. From your 20 lakh, you transfer 10 lakh to the what son? Minor son. Then you will cut. I want to transfer 10 lakh to my wife. Then I will cut. Then I will do one thing. I will transfer 10 lakh to minor son. From your account, you transfer 10 lakh to my wife account. Hello, sir. So we will do one thing. I will transfer 10 lakhs to minor son. You transfer only 9.5 lakhs to my wife's account. Balance 50,000, you give it as cash to me. Or we will do one thing. Okay, fine, fantastic. Then what government is saying that this transaction is called as cross transfer. What transfer? That means I am transferring to minor son and my brother is transferring to my wife, sir, to the extent of only 9.5 lakh. Now wife, look what my wife is doing now. In my wife account, now 9,50,000 is there. She is putting an FD. On this FD, she will be getting what? Sir, that interest will be treated as my income. Because it's my money, yaar. Instead of I directly transferring to wife, I have transferred to the minor child. And my brother has transferred to the my wife account. Now, two transactions are interconnected. Yes, two transactions are interconnected. And part of the same transaction in such a way that it can set that circuitous method. Circuitous means sutard. Circuit was adopted as a device to evade tax. Then implication of clubbing provisions will be attracted. Yes. Sir, why I have transferred 10 lakh to my brother's minor son to evade tax? My brother has transferred to my wife, evade tax. This is a what method? Circuitous method. This is called as what transfer? Cross transfer. In case of cross transfer, my dear lovable students, income will be taxed in the hands of both the people transferor. Yaar? What is the distinction between 61 and 64? Sir, it may be noted that main distinction between two sections is that 61 apply to what transfer? Revocable transfer. Made by whom? Any person. A 61, 62, 63, 63. 61, 62, 60, 61, 62, 63 are applicable to any person. Whereas 64 are applicable only to individual. While section 64 apply to revocable as well as irrevocable transfer only made by the individual. 64 is applicable to individuals. Am I right, sir? Clubbing provisions are attracted in respect of income arising from asset transfer. However, income arising on accretion on income. What is accretion on income? Income on income. It is the skill and talent of the person who are earning the income. Sir, arising from the transferred asset would not be clubbed except in case of what child? Even in case of minor child, income on income will be clubbed because that is a palkupi. Sir, does the palkupi know how to earn income? No. That means that income on income has been earned by the parent or the person who has transferred the original income. Hello. So general rule, income on income will not be clubbed. But income on income has been earned by the minor child, it will be clubbed. For example, man, Mr. X transfer debenture of 50,000 carrying how much percent per annum? Interest to his wife. Mr. X transfer debenture of 50,000 carrying 10% per annum interest to his. The interest income of 5,000 would be clubbed in the hands of Mr. X because 50,000 rupees is the debenture value. 10% is the interest rate. 5,000 rupees interest who will receive? Wife will receive. Sir, here have I transferred the debenture? Yes, sir. Because Mr. X transferred debenture. Section 60, 61, 62, 63, nothing will be applicable because this is individual. 64 will be applicable. In section 64, DT will be applicable. It is direct transfer. Am I right, sir? I am transferring some asset to my wife either without consideration or inadequate consideration. From that asset, she is getting an income. It will be clubbed in my hands. Pakka. However, in case if his wife deposited 5,000 in FD at 8% per annum, the interest income of 400 arising on FD would not be clubbed in the hands of Mr. X because it is income on income and my wife is not a minor son. Am I right, sir? Original income will be clubbed. Income on income will not be clubbed. Exception for income on income will not be clubbed is the minor child. That means if minor child is having income on income, that minor child is a palkupi. Sir, palkupi cannot earn income on income. That means I only earned even that income also. That will be clubbed in the hands of the parents who are having higher income. With this, my dear lovable students, we are done with the chapter clubbing of income comes to an. Yes, sir. We are moving into the discussion of set off and carry forward, my dear lovable students. At CA Inter level, every exam from this chapter, a 6-mark question used to come. It is not optional, it is mandatory. 6-mark question, set off and carry forward. Fine, sir. Sir, what this chapter is all about? Sir, first get the basics, sir, very quickly. We know that we are having income from salary. We are having income from house property. We are having profits and gains of business or profession. We are having capital gain and we are having IFOS. Sir, only if there is employer-employee relationship, income from salary will come. Am I right, sir? Always under the head income from salary, you will be having income. There is no scope of loss. Whereas under income from house property, you may have 2 house property, my dear lovable students. One house property can have loss and another house property can have income. Sir, under the head PGBP, you can have 2 business. One business you are having income and another business you can have loss. Under the head capital gain, you may have, sir, 2 capital asset may be transferred during a particular financial year. There is no hard and fast rule that only one time transfer should be happen. Sometimes you would have sold 2 capital asset. From that, capital gain may come, capital loss may come. Under income from other sources, you may have income or loss. My dear lovable students, what are the rules and regulations? To set off, sir, within the head. To set off within the head. If the within the head income is not sufficient to set off, can I set off with the other head is what the discussion we are going to make. Set off and carry forward. So this chapter, set off and carry forward of loss, for our classroom discussion, we can classify it into 3 categories. Number 1, intra-head adjustment. Number 1, intra-head adjustment. Intra-head adjustment means, sir, with one head, with the same head. For example, anyway, salary and set off and carry forward does not have any relationship because under that salary, you can never have what? Loss. But income from house property, you may have two house property. From one property, you may have profit and another property, you may have loss. Sir, can I set off, sir, within one source with another source is called as intra-head adjustment. What man? Intra-head adjustment. If intra-head is not sufficient, then can I do inter-head adjustment? If I say inter-head adjustment, you have to think house property with salary, house property with PGBP, house property with capital gain, house property with IFOS, basically one head versus the other four heads. So intra-head adjustment means one head with the same head. Inter-head adjustment means one head with the remaining four heads, and carry forward and set off. Sometimes I may be helpless. I don't have income to do intra-head adjustment. I don't have income to do inter-head adjustment. Then my dear lovable students, I have to what forward? Carry forward. Come on man, sir, step number 1 or process number 1 called as intra-head adjustment. What head adjustment? Everyone participate along with me, picturize along with me, don't listen simply. Sir, if you participate, you can learn or you can get the 6 mark. Sir, intra-head adjustment, you tell me how many heads of incomes are there? 5 heads of income. Income from salary, income from house property, PGBP, capital gain or capital loss, and income from other sources. Am I right, sir? Sir, income from salary not applicable. Sir, there is no need to do intra-head adjustment for salary. You just think practically. You are working under 2 employers. Will you have loss from one employer and will you have profit from another employer? No. From morning to noon, for example, from 7 to 1 o'clock, if you are working under employer number 1, you will be having salary income. Am I right? And from 2 to 10 o'clock, if you are working under employer number 2, again you will be having what? Salary income. Always under the head salary, you will be having only income. There is no question of intra-head adjustment at all. Intra-head adjustment. We have done lot of question from income from salary. Any question you are having negative answer? No, because you just think a situation. From morning to evening you are working under an employer and you are supposed to pay salary to the employer means what a situation it is. So this head, sir, this concept will not be applicable. That means intra-head adjustment concept will not be applicable to income from salary. Come on man, income from house property. Sir, I may have soap and I may have lope. My dear lovable students, for the self-occupied property, 24B is allowed, IOBC. If you are traveling through the optional tax regime, it will lead to a loss. Am I right, sir? And from the let-out property, you may have what man? Income. Sir, if I set off the loss of self-occupied property with the income of let-out property, that process is called as intra-head adjustment. Am I right? What section is saying that there is no restriction? There is no? That means, sir, whatever may be the amount, my dear lovable students, you can set off that amount within the head of income from house property. Can I proceed, sir? Now coming to PGBP, profits and gains of business or profession. For the purpose of this chapter, set off and carry forward, we will classify the PGBP into 3 categories. Normal business loss, tell me. Speculative business loss. Specified business loss under section 35 AD. Normal business loss, speculative business loss, specified business loss under section 35. Normal business loss means cloth business, footwear business, textile business, steel business, iron business. Every business are normal business. From normal business, if you are having loss, sir, very important, listen very carefully, normal business loss. Normal business. If you are having normal business income, against that you can set off. For example, I am having a loss from cloth business and having income from textile business, or sorry, steel business, then both can be what man? Set off. Sir, I am having normal business loss. If I am having speculative business income, then I can set off the normal business loss against the speculative business income. Sir, if I am having normal business loss and if I am having specified business income under 35 AD, I can set off the normal business loss against the specified business income under section 35 AD. That's why they are calling no restriction. That's why they are calling. That means, look at here, man. If the loss is normal business loss, you can set off the normal business loss against the normal business income, against the speculative business income, against the specified business income under section 35. But my dear lovable students, if the loss is speculative business loss, speculative, that cannot be set off against the normal business income. That can be set off only against the speculative business income. That cannot be set off against the specified business income under section 35 AD. That means one line summary is loss from speculative business can be set off only against profit from the speculative business. Able to appreciate? Sir, if the loss is specified business loss under section 35, that cannot be set off against normal business income. That cannot be set off against specified business income. But that can be set off again, that can be set off against specified business income under section 35, but cannot be set off against speculation business income. Able to appreciate, sir? So even specified business loss under 35 AD can only be set off against profit from the specified business under 35. That means these two losses, my dear lovable students. Number one, speculative business loss and specified business loss under section that loss, that income. What is the rule? That loss, that income. What is the rule? That loss. So come on, sir. Sir, how many heads of incomes are there? 5 heads of incomes are there. Number one, income from salary, income from house property, profits and gains of business or profession, capital gain, and income from other sources. Am I right, sir? Come on, sir. I will tell the head name. You have to say the rule. We are talking about intra-head adjustment. When you talk about intra-head adjustment, loss with the same head or loss with the other head? Loss with the same head. You tell me income from salary. No, not applicable. Income from house property. No restriction. Sir, PGBP can be classified into 3 categories. Normal business loss, speculative business loss, specified business loss under section 35. Normal business loss, no restriction. What is the meaning of it? If you are having normal business loss, it can be set off either against normal business income or specified business income or speculative business income under section 35. Whereas if you are having loss under the head speculative business loss or specified business loss under section 35 AD, it can be set off only against speculative business income and specified business income under section 35. Come on, man. The next head, man, capital gain. The next head is capital gain. Sir, under capital gain, you may have capital loss. Am I right, sir? That loss may be either short-term capital loss or long-term capital loss. Short-term capital loss or short-term capital loss can be set off either against short-term capital gain or against long-term capital gain. Am I right, sir? Whereas long-term capital loss can be set off only against long-term capital gain. Am I right, sir? My dear lovable students, we are having 2 capital gains, short-term capital gain and generally short-term capital gain will be taxed at normal rate. Am I right, sir? Sir, otherwise 111A. The highest normal rate is how much percent? 30%. My dear lovable students, long-term capital gain will be taxable at 12.5%. If it is super asset in excess of 1,25,000. Other than super asset, normal 12.5%. Am I right, sir? My dear lovable students, if the loss is a long-term capital loss, if the loss is a long-term capital, you tell me, if the assessee is paying tax for the short-term capital gain, assessee will pay tax at 30%. But this loss is only of how much percent? 12.5%. So 12.5% loss, if you knock off against 30% income, will the government will lose the revenue? That's why government is saying that long-term capital loss can be set off only against long-term capital gain. Whereas short-term capital loss, generally short-term capital means 30%. Am I right? Either you knock off against short-term capital gain, so this 30 and this 30 will match, or against long-term capital gain, because that long-term capital gain is only 12.5%. Loss percentage are higher and income percentage are lower. So that is allowed. But if the income percentage is lower, higher, and 12.5%, income percentage is lower and the loss percentage is higher, it will be a loss to the department. That is a logic way they are saying that short-term capital loss can be set off either against short-term capital gain or against long-term capital gain. Whereas long-term capital loss can be set off only against long-term capital gain. Provisions clear. The last head of income, my dear lovable students, income from what? Other sources, IFOS. Sir, if you are having owning and maintaining racehorses, that means, sir, loss from owning and maintaining can be set off against profit from owning and maintaining racehorses. That means that loss, that income. That loss, sir, very important adjustment will be tested in exam called as casual income. Sir, winning from lottery, winning from crossword puzzle, Sir, card games or any games of any sort, all are winning from, sir, casual income. Casual income should be taxable under IFOS. How we study salary the same way, sir, from if you are having casual income, sir, casual against the casual income, no loss is allowed to be set off. For example, if you are having loss from house property and if you are having winning from lottery, not possible to set off the loss from house property against the casual income, because casual income should always be taxable on gross basis. Am I right? So against casual income, no set off will be allowed. Hello, sir. And other losses, no restriction, no problem at all. If you are able to appreciate or understand, then process number 1 comes to an end. What is process number 1? Intra-head adjustment. How many heads of income? 5 heads of income. Income from salary, income from house property, PGBP, capital gain, IFOS. Na head ni answer. Income from salary, not applicable. Income from house property, no restriction. PGBP can be classified into how many categories? Normal business loss, speculative business loss, specified business loss under section 35. Normal business loss, no restriction. Speculative business loss can be set off only against profit from the speculative business. Specified business loss under section 35AD can be set off only against profit from the specified business under 35AD. Am I right, sir? Under the capital gain, you may have short-term capital loss, long-term capital loss. Short-term capital loss can be set off either against short-term capital gain or against long-term capital gain. Whereas long-term capital loss can be set off only against long-term capital gain. Under that IFOS, you may have loss from owning and maintaining resources. That loss can be set off only against profit from owning and maintaining resources. Sir, against casual income, any loss cannot be set off. But other losses under the head IFOS, no restrictions at all. Any problem? The same thing, my dear lovable students, we are going to read in English. I'm going to repeat that instead of chart. You have to help me. Tuck, we will go out of section 70. Under this section, that means section 70. Please take into your brain. Section 70 is the intra-head adjustment. Section 70 is the... Under this section, loss incurred by assessee in respect of one source. I will tell you, please understand at inter level, this is very important. For example, under the head income from house property, you may have house 1, house 2, house 3. Am I right? That house 1 is one source. House 2 is another source. House 3 is another source. Sir, we are having how many heads? 5 heads. Under one head, you may have different source. Under one head, you may have different source. Can be set off against the income from other source under the same head of income. That means what section 70 is saying, that if you are having one source of income under one head, and if you are having, sir, another source of income under the same head, sir, you can do set off. This is called as dash head adjustment. Intra-head adjustment. Because what is the reason or what is the logic? Since the income under each head is to be computed by grouping together the net result of the activities of all the sources covered by one head. Because when I am writing gross total income, I have to write income from salary. I have to write income from house property. Under the head income from house property, I may have multiple sources, which may be self-occupied property and let-out property. From self-occupied property, I may have loss, and let-out property, I may have income. Then section 70 is saying that please do intra-head adjustment. Am I right, sir? In simple terms, loss from one source of income can be adjusted against, sir, income from another source. Even though this is a revision, I'm giving you example. Loss from one house property can be set off against income from another house property. Able to appreciate? Sir, loss from one business, say textile, can be set off against income from another business, say printing, in the same year as both these sources of income falls under one head of income. Under which head of income? PGBP. Are you able to appreciate? Therefore, one line summary of the entire discussion is the loss in one business may be set off against profit from another business in the what, man? Same year. But this you should highlight, man. Sometimes under one head of income, you may have exempt income. For example, profit from share of partnership firm. Already the partnership firm would have paid what? Tax. After paying tax, only the partnership firm is distributing the profit to the partners. Again, the partners are not liable to pay. That means it must be noted that loss from an exempt source. Sir, section 10.2a is an exempt source. Am I right, sir? 10.1, agriculture income is an exempt source. Cannot be set off against the profit from a taxable source of income. Instead of you are having income from partnership firm, assume that you are having loss from partnership firm. Sir, have the income exempted? then loss is also exempted. In the sense means that loss cannot be set off against any other source of income, my dear lovable students. For example, share of loss from a what firm? Partnership firm cannot be set off against what income? Business income. As we already know that if a partner is getting interest or if a partner is getting remuneration from a partnership firm, as per section 28 charging section, that income should be taxable under the head PGBP in the hands of the partner. Am I right? Assume the partnership firm is having a loss and that loss has been distributed to the partner. Now the partner should not, sir, set off that loss against the what income? Business income. Since the share of income of the firm is exempt under section 10(2)(a). Are you able to appreciate? This is a common rule. If the income is exempted, set off is also exempted. If the loss is exempted, set off is also exempted. That means for an exempt income or exempt loss, please don't do set off and carry forward. Are you all really with me? Come on, man. I will ask you, you tell me provisions in detail. We already done. We have completed Intra-head adjustment. Come on, man. Salary. Sir, there cannot be any loss in the head salary. Hence, the final conclusion of the salary is not applicable. This intra-head concept itself not applicable for the first head. That is income from salary. Am I right, sir? House property, my dear lovable students. Loss from house property can be set off against income from unlimited within the same head. There is no restriction that, sir, only this much can be set off because this is intra-head adjustment. Am I right, sir? Coming, man, sir, to the third head, PGBP. Sir, PGP for the purpose of set off and carry forward has been classified into three categories. Normal business loss, speculative business loss, specified business loss. Under section, sir, speculative business loss can be set off only against speculative business income. That loss, that income. Specified business loss can be set off only against specified business income. That loss. Whereas for normal business loss can be set off against any business income. That means no restriction is the key word. Able to appreciate? Sir, moving to the next statement called as what, man? Capital gain. Under capital gain, you may have long-term capital loss, short-term capital loss. Long-term capital loss can be set off only against long-term capital gain. They are like vegetarians. They will eat only veg. Whereas short-term capital loss are like both. They will eat either non-veg or non-veg as the case may be. So my dear lovable students, short-term capital loss can be set off against any capital gain, whether it is short-term capital gain or long-term capital gain. Any problem? Under the head income from other source, normal loss. Sir, IFOS loss can be set off against IFOS income. Basically no restriction for the IFOS. Whereas if it is loss from owning and maintaining resources, can be set off only against owning and maintaining the resources. And we already highlighted that loss from an exempt source, sir, cannot be set off. That's it. Sir, out of three parts of this chapter, one part has been comes to an end called as what head adjustment? Intra. Sir, under the head income from salary, I am having only self-occupied property. I don't have let out property. Is there any mandatory that I should have two property? No, sir. I am only having self-occupied property. And from that self-occupied property, I am having loss. Sir, I can't do intra-head adjustment. So the next step will be section 71, inter-head adjustment. So what is section 70? Intra-head adjustment. What is 71? Inter-head adjustment. Sir, intra-head adjustment, sir, is over. Now coming to inter-head adjustment. Again, how many heads of income? 5 heads of income. Income from salary, not applicable. Because under the head salary, you don't have a position of loss. Always under the head salary, you will be having what? Income. So salary, no need to depend on the other 4 heads of income to set off their losses. That's why it is not applicable. Conceptually clear? Income from house property, very important point. Loss can be set off against any head of income. For example, under the head IFHP, you are having a loss. What are the 4 possibilities option? You can set off against salary. You can set off against PGBP. You can set off against capital gain. You can set off against IFOS. Provision is saying that loss can be set off against any head of income. Sir, up to an amount of how much lakh? 2 lakh if you are traveling through optional tax regime. If you are traveling through, that means if you are traveling through default tax regime, inter-head adjustment is not possible for income from house property. Able to appreciate, sir? Sir, if you are traveling through what tax regime? Optional tax regime, loss under the head house property can be set off against any head of income up to an amount of 2 lakh. Sir, PGBP we already discussed. For the purpose of set off and carry forward, we classify PGBP in how many category? 3 category. Normal business loss, speculative business loss, specified business loss under section 35. Sir, for these 2 losses, intra-head adjustment itself not applicable, my dear lovable students. That loss, that income. That means there are 2 people, sir, these 2 people are not even talking inside the home. When they saw in the market or in the road, hi da, will they go and talk? Chee. The same thing, sir, intra itself not possible means how inter will be possible? Are you all really with me? So, speculative business loss, inter-head adjustment concept is not applicable. Specified business loss under 35 AD, inter-head adjustment is not applicable. Whereas for normal business loss, sir, what are the options available for normal business loss? How many heads of income? 4 heads of income. Sir, if you are having normal business loss, you can set off against salary, you can set off against IFHP, you can set off against capital gain, you can set off against IFOS. Act is saying that can be set off against any head of income except salary. Except, sir, if you are having normal business loss, you can set off against any head of income except salary. That means against salary, you are not supposed to set off. Except salary, you can set off. Are you all really with me? That's it, man. Sir, come on, sir, with regard to capital gain. You may have short-term capital loss or long-term capital loss. Short-term capital loss can be set off either against short-term capital gain or against long-term capital gain. Whereas long-term capital loss can be set off only against long-term capital gain. Inter-head adjustment concept is not applicable. What capital gain is saying that we are a royal family. We are a royal family. In the sense means we will not go and beg before salary that we are having a loss. Please give some salary income to set off. Gee. Sir, we are a royal family. We will not go before the IFHP and ask that please give some IFHP income to set off the capital loss. Gee. Sir, we are a royal family. We will not go and stand before PGBP and say that, sir, please give some PGBP income to set off against the capital loss. Chee. That's what correct. Sir, we are a royal family. We will not go and stand before the IFOS and ask that, please give some IFOS income to set off the capital loss. Chee. Because, my dear lovable students, salary will be taxable at normal rate. IFHP will be taxable at normal rate. PGBP will be taxable at normal rate. Generally, IFOS will be taxable at normal rate. I'm not talking about casual income. Even if you are having casual income is a Korangu family. Are you all really with me? Because if they are having income, they will not allow any other to set off against the casual income. Able to appreciate? So what capital gain is saying that we are special income. We are royal family. If we are having, we will give to others. But if we don't have, we will not beg to others. Are you all really with me? எங்க கிட்ட சொத்து இருக்குனா ராஜா மாதிரி நாங்க எல்லாரும் கொடுப்போம். ஆனா எங்க கிட்ட இல்லைனா நாங்க யார்கிட்ட போய் கேட்க மாட்டோம். That's why inter-head adjustment concept is not applicable for the capital gain. Come on, man, income from other source, loss from owning and maintaining, race horses. Sir, inter-head adjustment concept is not applicable because that loss, that income already. Intra-head adjustment itself, restriction is there. Then how inter-head adjustment will be possible? Sir, against casual income, is it a royal family or Pichakara family? Pichakara family. Who? Casual income. Against casual income, they will not allow other to set off. That means not allowed. Other loss, no restriction, my dear lovable students. So can we see the provision in detail? You have to be with me and get the full wordings. Sir, salary man, loss from any head can be set off against salary except PGBP. For example, if you are having income from salary, always you will have only income from salary. Can loss from house property be set off against income from salary? Yes, sir. Can PGBP loss can be set off against income from salary? No, sir. Only restriction. Salary is saying to the PGBP that I hate you da. Salary is saying to the IFHP. Salary is saying to the capital gain. Sir, salary is saying IFOS saying that I love you da. Whereas capital gain is saying to the salary that let me be single itself, my life be good. Because I will not come to beg. Are you all ready with me? So what salary is saying that loss from any head can be set off against salary except PGBP. I'm ready to serve to anyone except PGBP. I don't like what? PGBP. Logic, I will tell you why. Sir, simple man. Income Tax Act 1961 came. Hello, sir. At that time, everyone, majority of the Indians used to go for job. Now only many people has become so courageous and starting business and all. Earlier and all, many people won't start what? Business. Now, my dear lovable students, if you are having a phone and if you are having an Instagram, morning some reel you can put and you can say that, hi da, like that, and you will be getting some income. Business is growing like anything. So earlier, majority of the people was salaried person. Am I right, sir? Sir, always from the head income from salary, you will be having what only? Income only. There is never chance of going loss. So from morning to evening you are working and you are having income from salary. For this income from salary, you know that there is gross salary. From that gross salary, you can claim deductions. If you claim the deductions, you will be getting the taxable salary. How to compute all this already we have discussed in the income from salary. Am I right? My dear lovable students, what the taxpayers thought that why we have to pay tax for this salary? Because we are working from morning to evening and we are supposed to pay tax to the government. Are you all really with me? Government, without doing anything, they are getting tax. Like that one mindset came. So what they thought is, okay, fine, from morning, sir, 10 o'clock to 5 o'clock, we will be having what? Salary income. Evening 7 o'clock to 10 o'clock, we will have Pani Puri business. What man? Pani Puri business. Government cannot say that you can't sell Pani Puri. Am I right, sir? Yes, sir. Sir, let me have some Pani Puri business. Sir, every salaried person is starting a Pani Puri business from evening. And for everyone, there is a loss from what business? Pani Puri business. And that loss is exactly equal to salary income. Are you all really with me? When they are filing 139 subsection 1, the return of income, zero tax government is getting from the salary people. Government is analyzing, what is happening in India? Because under the head salary, we are not getting any income at all, tax at all. So government is analyzing, and by using the TCS software and all, they understood that whoever are having salary income, everyone are having any other business, and from that business they are having loss, and that loss they are using to set off the salary. They come up with an amendment saying that business loss can be set off against any head of income, except that day, that moment, everyone stopped Pani Puri business. Are you all really with me? Because there is no such business at all, yaar. Chumma they are showing in the return that I am having what business? Pani Puri business. And that Pani Puri business loss, they are setting off against the salary. That's why government said that if you are bad, I am your dad. Are you all really with me? They said that, sir, loss from any head can be set off against salary except PGBP. Conceptual clear? Come on, man. House property. Sir, this we are talking about inter-head adjustment. What, man? That means you are having loss from house property. Can I set off against income from salary? Can I set off against PGBP? Can I set off against capital gain? Can I set off against IFOS is the question. What they are saying is it depends upon in which route you are traveling. If you are traveling through optional tax regime, default tax regime. Are you all really with me? If you are traveling through what tax regime? The maximum loss from house property which can be set off against any other head is how much lakh? 2 lakh. That means if you are having loss from house property, it can be set off against any head of income up to an amount of 2 lakh. Sir, my total loss from house property is 2,30,000, sir. You do one thing. You set off with other heads of income up to an amount of, and the balance loss can be what forward? Carry forward. The balance extra loss, you can happily carry forward. But if you are traveling through what tax regime? Loss from house property would not be allowed to be set off under any other head if the assessee pays tax under 115 BAC, my dear lovable students. That means if you are traveling through default tax regime, inter-head adjustment of the house property is not allowed. Are you all really with me? Come on, man. PGBP. Can I proceed to PGBP? For the purpose of set off and carry forward, we classified PGBP into 3 categories. Normal business loss, speculative business loss, specified business loss. As we all know, speculative business loss and specified business loss are that loss, that income. Am I right, sir? Hence, the inter-head adjustment concept is only intra-head adjustment concept is applicable. Can we recall the rule of intra-head adjustment? Sir, speculative loss can be set off only against speculative income. Specified business loss can be set off only against specified business income under section 35 AD. Able to appreciate? My dear lovable students, whereas normal loss, whereas what? Indirect adjust concept is applicable. But what business you are having? Pani Puri business. Pani Puri business loss cannot be set off against income from. That's what normal business loss can be set off against any head of income except, look at here, man. Are you able to appreciate? Loss from specified business under 35. Sir, in case assessee shift out of 115 BAC, that means till now I was traveling through the default tax regime, optional tax regime. Sir, immediately I'm going to step into the default tax regime. I'm saying that I don't want optional tax regime. I'm going to enter into default tax regime. I am having some carry forward specified business loss under section 35 AD. What this chapter is saying that under default tax regime, sir, you can't set off the carry forward, brought forward 35 AD loss. Loss from specified business under 35 AD can be set off only against income from other specified business. Such loss cannot be set off against any income under any other head. Am I right, sir? That means, my dear lovable students, sir, I am traveling through optional tax regime. Then is 35 AD possible under optional tax regime? Yes, sir. 35 AD is possible. Then 35 AD loss can be set off only against 35 AD income. That's what that loss, that income. Sir, in case assessee shift out of 115 BAC, that means I'm going out of the default tax regime and going to travel through the optional tax regime. Then loss from specified business loss can be set off only against the profit from the specified business. Any problem? But if I am shifting from optional tax regime to default tax regime, that loss cannot be carried forward. That loss cannot be set off. That will be restricted. Sir, what is the order of set off? This is very important in the set off chapter. Because, my dear lovable students, sir, current year you will be having depreciation. First, claim the current year depreciation. First, claim the. Because when I claim the current year depreciation, only PGBP will be finalized. If I finalize the PGBP, current year income only, I can use the current year income to knock off the brought forward cases. Am I right? Section 35, again current year, capital expenditure on scientific research and family planning to the extent allowed. That means current year depreciation you knock off. Current year section 35, expenditure on scientific research you knock off. Am I right, sir? Now you come to the previous years. In that previous year, first try to knock off the brought forward business loss, because this can be carried forward only up to 8 years. Time will lapse. Time will. And my dear lovable students, then you can set off unabsorbed depreciation. Sir, unabsorbed depreciation can be carried forward for infinite period. Then unabsorbed capital expenditure on scientific research. Even this can also be carried forward for infinite period. Then family planning expenses. Because, sir, this is the order in which you are supposed to do the set off. Hello, sir. First, finalize the current year. First, reduce the current year depreciation. Then, current year capital expenditure. Have the PGP came out? Yes, sir. Now, look at the last year. Sir, brought forward. Do you have brought forward? Business loss, brought forward, depreciation. First, give importance to brought forward business loss. Then, unabsorbed depreciation, etc., etc. Are you able to appreciate? Sir, exception to the rule that assessee has incurred the loss can only be set off. That means, if you incur the loss, only you can carry forward the loss. Only you can set off the loss. But we are having exception in case of amalgamation, demerger, conversion of firm into company, or inheritance. Even though the predecessor has incurred the loss, the successor can carry forward the loss and set off against the business income of the successor. Sometimes amalgamating company may have loss. Amalgamating company would have been amalgamated with the amalgamated company. Then the loss of the amalgamating company can be carried forward by the amalgamated company for 8 assessment years, and they can set off. Are you all really with me? Capital gain. Sir, you tell me, we are talking about inter-head adjustment. What is a general rule of capital gain? Loss from other head can be set off against capital gain. That means if you are having capital gain and other 4 heads are suffering, then capital gain will help the other 4 heads because they are royal family. Whereas, but loss from capital gain cannot be set off against other head. If capital gain is suffering, they will never go and beg with the other 4 heads of income. Pakka? Sir, my dear lovable students, for long-term capital loss and short-term capital loss, inter-head adjustment concept, not applicable. Inter-head adjustment concept, not applicable. Only intra-head adjustment concept is applicable. That too with the rule of long-term capital loss can be set off only against long-term capital gain, and short-term capital loss can be set off against any capital gain, whether it is short-term or long-term. Able to appreciate. Under the head income from other source. If you are having normal loss, sir, inter-head adjustment concept is applicable. Under the head IFOS, if you are having normal loss, it can be set off against the other heads of income. Sir, IFOS loss can be set off against IFOS income. First do intra-head adjustment, then you have to do inter-head adjustment. No problem at all. Whereas loss from owning and maintaining resources, you tell me, sir, inter-head adjustment concept is not applicable because, sir, horse race loss can be set off only against horse race income. Whereas loss from exempt source, is it possible to set off? No, sir. Loss from an exempt source can't be set off. Are you all really with me? Sir, following brought forward losses or depreciation is not allowed to be set off while the computing total income under default tax regime. Sometimes, last year I would have traveled through optional tax regime. Current year I am going to travel through default tax regime. So, since I traveled through last year optional tax regime, I may have this brought forward loss. In current year, if you are calculating the tax liability under the what tax regime? Default tax regime, then brought forward loss from self-occupied property. That is 24B loss in excess of 2 lakh you would have carry forwarded. That cannot be set off. Brought forward business loss of specified business under 35 AD. 35 AD brought forward business loss cannot be set off. Brought forward business loss on account of deduction under 35 cannot be set off. Unabsorbed depreciation attributable to what depreciation? Additional depreciation cannot be set off. Why? What is the logic? Because, sir, under the default tax regime, is there any concept of self-occupied property? So its brought forward loss is also not allowed. Under default tax regime, is there any concept of 35 AD? No, sir. Hence, brought forward business loss of 35 AD cannot be set off under the what tax regime? Default tax regime. Under, sir, default tax regime, contribution to outsiders, is it claim it as deduction? No, sir. So, brought forward loss from the 35 cannot be claimed as deduction. Under default tax regime, normal depreciation is allowed, whereas additional depreciation is not allowed. So, brought forward loss attributable to additional depreciation cannot be claimed as a deduction. Super summary has been given for you. This one table is more than enough before the day of examination. Just go to 5 to 7 minutes. Look, chapter classified into 3 categories: intra-head adjustment, indirect adjustment, carry forward and set off. We are in the second category. Am I right? This is a summary of second category before we move to the next one. Super, sir. House property loss. Sir, there are 2 routes are there. Optional tax regime, default tax regime. You tell me, under optional tax regime, inter-head adjustment of house property is possible? Yes, sir. Up to an amount of 2 lakh. Whereas default tax regime, it is not permitted. Sir, why you have not written salary? Are salary will not come, yeah. Next one, normal business loss. You tell me, under the optional tax regime or default tax regime, normal business loss can be set off against any head of income except salary. Am I right, sir? Same rule. Same rule. Sir, unabsorbed normal depreciation will be there. Unabsorbed additional depreciation will be there. Both are allowing normal depreciation. So it can be set off against any head of income except salary. Because even depreciation loss is also a PGBP loss. Pakka? So PGBP loss can be set off against any head of income except salary. Sir, additional depreciation concept is not there in default tax regime. Hence, it will not be applicable under the default tax regime. Am I right? Whereas, my dear lovable students, if you are having brought forward unabsorbed depreciation, and in current year, if you are traveling through default optional tax regime, it can be set off against any head of income except salary. That means last year you have traveled through optional tax regime. So last year you would have claimed both normal depreciation and additional depreciation. Because of claiming both normal and additional depreciation, the closing WDV would have been come down. And that loss attributable to the additional depreciation you would have carried forward with a mindset that in future I can set off. But in this year, if you are going to travel through the default tax regime, that is not allowed. Then in current year, if you are calculating depreciation on the reduced WDV only, you can calculate the depreciation. So last year I were not able to claim the additional depreciation. Because of that reason, my closing WDV has been come down. That because of that reason, in current year, I am going to claim depreciation only on a normal depreciation, only on a reduced amount. Government is saying that you don't suffer, man. You can add to the what WDV, opening WDV, as if last year you have not claimed what depreciation, additional depreciation. Able to appreciate, sir? Sir, speculation loss. There is no problem in default tax regime. So it can be set off only with the speculation gains. It can be set off only with the speculation gains. Any problem? Sir, specified business loss under 35AD. There is problem for 35AD in default tax regime. Because under default tax regime, there is no deduction under what at all? 35AD at all. So not applicable under the default tax regime. Able to appreciate? But in optional tax regime, it can be set off against the specified business income. Long-term capital loss, no problem. Long-term capital loss can be set off only against the long-term capital gain. Short-term capital loss, no problem. Can be set off either against short-term capital gain or against owning and maintaining racehorses, no problem. Can be set off only against the profit from the owning and maintaining racehorses, only with the same source of income. If you are having any loss from what source? Exempt source, it has to be ignored. This is the table which shows the inter-head adjustment under the optional tax regime and default tax regime. We have done with intra-head adjustment and indirect adjustment, my dear lovable students. Are you able to appreciate? We are moving into the carry forward of loss. When the situation comes, please understand. That means I am having loss from house property. I don't have any other source under the same head. That means intra-head is not possible. Even I don't have any other head also, sir, to knock off it. That means even indirect is also not possible. Then the only possibility before me is to what forward the loss? Carry forward the loss. Sir, these losses and all can be carried forward. 71B, 72, 73, 73A, 74, 74A, 32 subsection 2. Come on, repeat second time. 71B, 72, 73, 73A, 74, 74A, 32 subsection 2. Repeat once again. 71B, 72, 73, 73A, 74, 74A, 32 subsection 2. 71B is loss from house property. 71B is? It can be carried forward for 8 number of years. How many years it can carry forward? And in that 8 years in future, you can knock off that loss against income from what property? There is no mandatory condition that you should file the return within 139 subsection 1 time limit to carry forward the loss from the house property. Able to appreciate? Next one, 72. What business loss? Normal business loss. Sir, you can carry forward normal business loss for how many assessment year? And in that 8 assessment year, you can set off the normal business loss against the PGBP, which may be normal business income or speculative business income or specified business income under section 35. But in order to carry forward a normal business loss under section 72, it should mandatorily file the return within 139 subsection 1 time limit. Pakka. Speculative business loss. I am having speculative business loss. It can be carried forward to 4 assessment years. But in that 4 assessment year, you already know speculative business loss can be set off only against speculative business income. And yes, return should be filed within 139 subsection 1 time limit to carry forward the speculative business loss. 73A, specified business loss under section. You can carry forward specified business loss under section 35AD for infinite period. What period? Then lifelong, but you can set off only against specified business income, and you are supposed to compulsory liable to file the return under 139 subsection 1 within time limit. Am I right, sir? Section 74 is what loss? Capital loss. It can be carried forward up to 8 years, and in that 8 years you have to analyze the loss, whether the loss is short-term capital loss or if it is short-term capital loss, it can be set off either against short-term capital gain or long-term capital gain. Whereas long-term capital loss can be set off only against, yes, you are supposed to compulsory liable to file the return of income within 139 subsection 1 time limit to carry forward the capital loss. Next one, 74A. Loss from owning and maintaining race horses. It can be carried forward up to 4 years. In that 4 years, that loss can be set off only against profit from owning and maintaining. Yes, you are supposed to compulsory liable to file the return of income within 139 subsection 1 time limit to carry forward the loss. Am I right, sir? 32 subsection 2. What depreciation? Unabsorbed depreciation. You can carry forward for infinite period. What period? and it can be set off against any head of income except salary, and there is no condition that you are compulsory liable to file the return of income within 139 subsection 1 time limit. Am I right, sir? That means if you want to carry forward a loss under 72, 73, 73A, 74 and 74A, you should compulsory liable to file the return within 139 subsection 1 time limit. For 71B, that is loss from house property, and 32 subsection 2, there is no mandatory that return should be filed within 139 subsection 1 to carry forward the loss. Pakka? And every loss can be carried forward to how many assessment year? 8 assessment year. But there are 2 losses which can be carried forward for infinite period, which is specified business loss under section 35AD and unabsorbed depreciation under section 32 subsection 2. These 2 losses can be carried forward indefinitely. Whereas, sir, loss from owning and maintaining race horses. Horse is having how many legs? So it can be carried forward up to 4 years. Are you able to live with me? And sir, speculation business loss. Speculation na soodatam. Soodatam thanni adipaan. Thanni adicho 4 gala nadapaan. Correct? So it can be carried forward up to 4 assessment years. All the remaining loss, my dear lovable students, can be carried forward up to 8 years. The same thing I have given in English. This is a settlement. That is summary. This is settlement. 71B, sir, house property loss. What loss, man? Now I am what forward? Carry forward. Sir, you may travel through either normal tax regime or default tax regime. Sir, the maximum loss from house property which can set off against any other head is how much lakh? 2 lakh. And balance loss can be what forward? That means if you are traveling through optional tax regime, indirect head adjustment is possible up to an amount of. And balance loss you can carry forward. Sir, whereas if you are traveling through default tax regime, loss from house property would not be allowed to be set off against other head. That means indirect head is not possible. Not possible. But balance loss can be what forward? Sir, indirect head is not possible, but carry forward is possible. 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 Because the logic. Sir, current year I am traveling through default tax regime. Next year I may travel through optional tax regime. At that time I need the carry forward loss to take it and set off. Able to appreciate? Sir, it can be carry forward for 8 assessment years. If return of income is not filed or filed late, still the loss can be carry forward and set off. Any problem? No, sir. Come on, man. Next one by one. You have to answer me because already I taught the provisions. 72. What loss, man? Business loss. Sir, once you carry forward a business loss, it can be set off against business income. So set off with both business income and speculation income. Normal business income you can set off. Speculative business income you can set off. Specified business income under section 35 AD you can set off. Am I right? For how many years it can carry forward? 8 assessment years. But section 80 will be applicable. Section 80 is the section which is saying that you are compulsory liable to file the return of income within 139 subsection 1 time limit. Pakka. It means if return of loss is not filed or filed late, that is belatedly, business loss cannot be what forward? Sir, business loss generally, only a person who has incurred the loss can carry forward the loss. But we are having 6 exceptions like amalgamation, demerger, sir, or inheritance, etc. etc. Even if business is continued, loss can be set off in future, my dear lovable students. Because loss can be carried forward for how many assessment year? 8 assessment year. There is no need that this business can be continued for 8 assessment year. Arre, this year itself loss year. Loss means how I can carry forward, how I can continue. Am I right? So even in the gap of 8 years, if I stop the business, still that business loss can be set off against the business income, not under any other head of income. Able to appreciate? Sir, if you are having speculation loss, sir, what is the speculation? Same day you are selling, same day you are purchasing. That is without actual delivery. In the sense means, today I am purchasing, today itself I am selling the shares and securities. That means speculation, soodatam. I am thinking that, my dear lovable students, the share price will go, share price will reduce. That is what speculation is all about. Am I right, sir? Sir, in current year, if you are having brought forward speculation loss, you tell me, brought forward speculation loss can be set off only against, can be set off only with the speculation income. It can be generally carry forward for 4 years. Section 80 will be applicable because if you want to carry forward a loss under section 72, 73, 73A, 74 and 74A, you are compulsory liable to file the return of income within 139 subsection 1 time limit. Am I right? That means if the return of loss is not filed or filed late, speculation loss cannot be what forward? Sir, only assessee who has incurred the loss can what forward the loss? Carry forward the loss. Exception will not be applicable. Exception will be applicable only for normal business loss. Able to appreciate? Even if the business is continued, loss can be set off. Can I proceed, sir? Sir, under the head loss, under the head capital gain. Sir, long-term capital gain can be set off only with the long-term capital. Long-term capital loss can be set off only with the, whereas short-term capital loss can be set off either with the short-term capital gain or long-term capital gain. Comfortable. It can be carry forward for Section 80 will be applicable. What is the Section 80? It means return of loss is not filed or filed late. Then capital gain loss cannot be what forward? 74A, which is loss from activity of owning and maintaining resources. Sir, in current year, if you are having past year owning and maintaining resources, it can be set off only with the owning and maintaining resources income. It can be carried forward for how many year? For assessment year. Section 80 will be. It means if the return of loss is not filed or filed delayed, business loss cannot be what forward? Business loss means loss from owning and maintaining resources cannot be carried forward. Assessee has incurred the loss. Only such guy can carry forward the loss. Exception will not be. That means exception is applicable only to the normal business loss. For example, if the loss has been incurred by amalgamating company, that loss can be carried forward by amalgamated company. But speculation business loss has been incurred by amalgamating company, or loss from owning and maintaining resources has been incurred by amalgamating company. Such loss cannot be carried forward by the amalgamated company. Even if the business is discontinued, loss can be set off. Others, man, loss from lottery. Sir, can you carry forward loss from lottery? You taken lottery by paying 100 rupees. Sir, for our face and all, we will never get lottery. That 100 rupees loss cannot be what forward? Carry forward. For other losses, you can carry forward. Sir, before the examination, this super summary table is more than enough to recall whatever we have studied. 71B. What is 71B? Loss from house property. You may travel through OTR or DTR. Right, sir? Sir, house property can be carried forward for how many assessment year? House property loss cannot be what forward? Carry forward under the default tax regime. This is as per ICAI, sir. But as per Income Tax Act, only inter-head adjustment is restricted. Am I right? Carry forward is not restricted. You can what forward? In exam, please, sir, listen very carefully. If an assessee is traveling through the what tax regime? Default tax regime, inter-head adjustment is not possible. Inter-head adjustment is not possible. What is the logic of default tax regime? Why they are not allowing, sir, inter-head adjustment is from which property you will be generally having loss? Self-occupied property. Why you are having loss? Because of 24B. There is no question of 24B at all under the default tax regime. That means if that section itself there, then how loss will come? So a non-existent loss cannot be adjusted against an existed income. This is what the logic of default tax regime. But if default tax regime today, if they are saying that this loss cannot be what forward? Carry forward. Tomorrow I may travel through optional tax regime. Then I will lose the opportunity to knock off the loss against the income. So, sir, if you are traveling through the default tax regime, inter-head adjustment is not possible, but carry forward is possible. Sir, come on, sir. 32 subsection 2, unabsorbed depreciation. There will be two unabsorbed depreciation will be there. Unabsorbed, normal depreciation will be there. Unabsorbed, sir, normal depreciation, both people are allowing. Can be carry forward without any time limit. Can be carry forward without any time limit because it can be carry forward for infinite period. Am I right? Whereas unabsorbed additional depreciation, there is no concept of additional depreciation in default tax regime. Cannot be carry forward. Instead, it will be added to the what WDV, opening WDV. Whereas under the optional tax regime, it can be what forward without time limit. Pakka, sir. Sir, 73 speculation loss. Sir, is speculation loss allowed by both the route? Yes. Can be carry forward for 4 assessment year. Can be carry forward by 4 assessment year. Am I right, sir? 73A. Sir, specified business loss. Is specified business loss concept applicable in default tax regime? No deduction under 35AD. Brought forward speculation business loss shall be ignored and cannot be what forward? Carry forward. Whereas if you are traveling through the what tax regime, you can carry forward for infinite period, my dear lovable students. Capital loss. Sir, In both the roots, capital loss are there. Can we carry forward for 8 assessment year? And can we carry forward for under 74A, loss from owning and maintaining resources under both the loss, under both the root, what is there? Owning and maintaining is there. So can we carry forward for 4 assessment years? Can we carry forward for 4 assessment years? That's it with regard to the chapter of set off and carry forward comes to an. That means, my dear lovable students, there are 3 categories are there. Number 1, intra-head adjustment, inter-head adjustment, and carry forward. Carry forward and set off. Carry forward and, okay man, intra-head adjustment. Intra-head adjustment na ullukullaya, within the same head. My dear lovable students, let me say, you have to answer. Sir, income from salary, not applicable. Income from house property, no restriction. PGBP can be classified into 3 categories. Normal business loss, speculative business loss, specified business loss under section 35AD. Normal business loss, no restriction. Speculative business loss can be set off only against profit from the speculative business. Specified business loss under section 35AD can be set off only against profit from the specified business under 35AD. Am I right, sir? Sir, under the head capital gain, you may have short-term capital loss, long-term capital loss. Short-term capital loss can be set off either against short-term capital gain or against long-term capital gain. Whereas long-term capital loss can be set off only against, under the head IFOS, loss from owning and maintaining resources can be set off against profit from owning and maintaining resources only. Against casual income, no loss is allowed to be set off. Other losses, man, there is no restriction at all. Able to appreciate? Whereas with regard to inter-head adjustment, we will be revising the summary table, sir, under both the roots, man. House property loss. Under optional tax regime, is inter-head adjustment possible? Up to an amount of 2 lakh. But under default tax regime, that is not possible. Am I right? Normal business loss, there is no problem. Hence, it can be adjusted against any head of income up to an amount of 2 lakh. Illa. Against what? Salary. Unabsorbed normal depreciation. Is normal depreciation allowed in both? Yes, sir. So, except salary income, you can do the inter-head adjustment. Is unabsorbed depreciation allowed in default tax regime? Hence, it is not applicable under the default tax regime. But except salary income, you can knock off under the optional tax regime. Is there any restriction with speculation loss? No, sir. But inter-head adjustment is not applicable for speculation loss. It can be set off only with a speculation business income. Specified business loss is not at all allowed under the. So it is not applicable. Under the optional tax regime, inter-head adjustment is not possible. It can be set off only with the long-term capital loss, no problem. Short-term capital loss, no problem. Owning and maintaining resources, no problem. Exempt income has to be put it on dustbin. Sir, if the current year, if the profit is not sufficient, you have to what forward? Sir, house property can be carry forward for 8 assessment years. And even both under default tax regime and optional tax regime. Sir, normal depreciation loss can be carried forward under both the route, but additional depreciation cannot be carried forward under the default tax regime. Am I right, sir? Yes, sir. Speculation business loss can be carried forward. Specified business loss cannot be carried forward under the default tax regime because under the default tax regime, there is no concept of 35AD at all. Capital loss, both route can be carried forward. Owning and maintaining resources, both route can be carried forward. That's it with regard to the discussion of set off and carry forward comes to an end. Yes, sir. Very, very, very happy morning to all. We are moving into the next chapter called as Chapter 6A Deductions. First of all, primarily understand one thing, my dear lovable students. There are 2 routes are there. Number 1, optional tax regime and the default tax regime. If an assessee is traveling through default tax regime, there is no question of Chapter 6A deduction at all. But if the assessee is traveling through the optional tax regime, he can claim deduction under Chapter 6A. Chapter 6A deductions. Chapter 6A deductions has been classified into 6 categories. Chapter 6A. Chapter 6A na pinna 6a pirikama pinna vera eppadi pirikka mudiyum. 80C series, 80D series, 80E series, income based deduction, 80G series and profit linked deductions. 80G series and income based deduction. So what are the series? Tell me. 80C series, 80D series, 80E series, 80G series, income based deduction and profit linked deduction. 80C, tell me. 80CCC, 80CCD subsection 1, 80CCD subsection 1B, 80CCD subsection 2, 80CCE and 80CCH. This is what 80CCDs. 80C, 80CCC, 80CCD subsection 1, 80 CCD subsection 1B, 80 CCD subsection 2, 80 CCE, 80 CCH. One more time, can you repeat? 80C, 80 CCC, 80 CCD subsection 1, 80 CCD subsection 1B, 80 CCD subsection 2, 80 CCE, 80 CCH. Repeat once again. 80C, 80 CCC, 80 CCD subsection 1, 80 CCD subsection 1B, 80 CCD subsection 2, 80 CCE and 80 CCH. My dear lovable students, 80C. 80C is prescribed investments. As we all know that. Government itself has notified the following places. That means if you are investing in these 21 places, my dear lovable students, you are entitled to claim 80C reduction. So what is 80C? Prescribed investments. Are you ready to make the investments? You are entitled to claim deduction under 80C. What are the investments, sir? To effect or to keep in force a life insurance on the following persons. That means for individual, self, spouse, children, and for HUF, any member. Are you an individual? Are you paying life insurance premium to self, spouse, children? That life insurance premium paid, can we claim it as deduction under 80C? Are you an HUF? Are you paying life insurance premium for member? That life insurance premium paid, can we claim it as deduction under 80C? Sir, the children may be male children, female children, married or unmarried, dependent or independent, because 80C is equal to SSC, self, spouse, children. That children may be male children, female children, married children, unmarried children, dependent children, independent children. Are you all with me? And the premium exceeding 10% of the sum assured is not eligible for deduction. In a sense means the maximum deduction will be 10% of the sum assured. 10% of the... But if the policy has been issued before 31/3/2012, then 20% will be the deduction. Already this we have discussed in IFOS chapter. Am I right, sir? Sir, 15% of the sum assured for the persons covered under 80U to 80DDB. In the sense means, I will be making analysis, man. What is the definition of family? Sir, 80C is equal to SSC. Am I right, sir? Sir, SSC means self, spouse, in children. That means in the name of self, in the name of spouse, in the name of children, an individual can make the investments. Whereas with regard to an HUF, in the name of members, an HUF can make the investments. Are you able to appreciate? Sir, life insurance premium. What is what we have understood? If you are paying life insurance premium in the name of SSC or in the name of member, an individual or HUF can claim deduction under 80C. Am I right, sir? My dear lovable students, what are the terms and conditions that life insurance policy issued? We are supposed to check the date in which the life insurance has been issued. Sir, whether you are normal persona or abnormal persona. Abnormal person means a person who are suffering from disability under 80U bar 80DDB. Am I right, sir? If you are a normal person, check when the insurance policy has been issued by the company. If the insurance policy has been issued on or after 2012, then 10% of the actual sum assured will be the deduction under 80C. Whereas, if it is before 1/4/2012, 20% of the actual sum assured will be allowed as deduction under 80C. Am I right, sir? With regard to an abnormal person, in the sense means, if that person is suffering from disability under 80U or 80DDB, sir, before 1/4/2013, again 2 cutoff will be there. Sir, before 2012, how much percent? 20%. After 2012 to 31/3/2013, how much percent? 10%. After 2013, 15%. Like this, you understand. Sir, even though it's a revision, I will highlight, sir, the history, what has happened. My dear lovable students, still 1/4/2012, that is before 1/4/2012, 20% of the capital sum assured was allowed as deduction. Then suddenly government came on this date on 1/4/2012 and they said that from this date onwards, sir, you are not entitled to claim 20% of the capital sum assured as deduction. Only 10% as capital sum assured as deduction. Able to appreciate? My dear lovable students, everyone criticized the government in financial year 12-13 saying that, sir, how you will be reducing the 20% to 10%? Because if any assessee who are suffering from 80U and 80DDB, even those people are also able to enjoy only 10%. Then, sir, government changed this decision in Finance Act 2000 and next year. That's why, sir, if it is between, look at here, man, before 2012, if it is before 2012, the starting period, old period, before amendment, how much percent? 20%. But, sir, on or after 1/4/2012 till 31/3/2013, that means this 1 year gap, 12-13 financial year, for everyone government made to 10%. But after 1/4/2013, because in the next Finance Act only they can change the rate. Am I right? They have increased to how much percent? 15%. That's why, sir, from 1/4/2013, how much percent? 15%. Able to appreciate. Whereas for a normal people, only two cutoff date are there, before and after. Before it was 20%. After it become 10%. That means one line summary of the entire discussion is, if an assessee is traveling through the optional tax regime and if the assessee is paying life insurance premium subject to the date of policy issued, you are entitled to claim deduction under ATC. Can I proceed, man? Number 2. You are paying, sir, non-commutable deferred annuity. You are paying non-commutable deferred annuity. Annuity means yearly, some amount you are paying. Sir, to effect or keep in force a non-commutable deferred annuity other than annuity plan of LIC or other insurance on the life of the individual, the wife or husband or any child of the individual, that is SSC, and here it is not applicable, my dear lovable students. That means instead of paying the life insurance premium, you are paying non-commutable deferred annuity. Non-commutable deferred annuity. That means yearly you are making some payment on the life of the individual, sir, on the life of the wife or husband, on the life of any child of such individual, then that can be claimed as deduction under ATC. Sir, by way of a deduction from salary of the government employee being a sum deducted for the purpose of securing him to deferred annuity. Even this is also deferred annuity only. This is for non-government employee, he himself voluntarily paying. This is government employee, government itself deducting some amount from their salary and will be depositing that amount in the deferred annuity account. Then it is also in the name of self only allowed and it is not applicable to HUF at all. Sir, how much, man? Making provision for his spouse or children, maximum up to 1/5 of the what, man? Salary. That means if 100 rupees is the salary, 20 rupees will be deducted by the company itself and they will be parking this 20 rupees in deferred annuity plan. Then that can be claimed as deduction under ATC. Sir, now, as a contribution by individual, you are an individual, you are an employee, you are getting salary. If you contribute to statutory provident fund or public provident fund, if that fund is in your name, you are entitled to claim deduction under ATC. Sir, if you are an employee, if you are contributing to approved superannuation fund in your name, you are entitled to claim ATC. Sir, if you are contributing to public provident fund, minimum 500 rupees and maximum 1,50,000 rupees, you can contribute either in the name of self, spouse, children or any member of the HUF. You are entitled to claim deduction under ATC. If you are subscribing to NSS, National Savings Certificate 1992, sir, in the name of your name, you are entitled to claim deduction under ATC. If you are subscribing to NSC 8th issue, sir, again another series, you are entitled to claim deduction under ATC. If you are contributing to or if you are subscribing to any units of what fund? Mutual fund, then you are entitled to claim deduction under ATC. If you are contributing, sir, as a contribution by an individual to retirement benefit fund of UTI, whose UTI? Unit Trust of India, you are entitled to claim deduction under ATC. As subscription to the home loan scheme of National Housing Bank, if you are subscribing to the home loan scheme, you are taking a loan, subscribing a loan, you are paying it, you are entitled to claim deduction under ATC. If you are subscribing to notified deposit scheme, you are entitled to claim deduction under ATC. Sir, you are paying tuition fee by an individual. You are an individual, you are paying tuition fee, whether at the time of admission or thereafter, including stamp duty and registration fee to any university, college, school, other education institution situated in exam, they will be saying that the university situated outside India, for them tuition fees has been paid. It won't be allowed as deduction under ATC. For the purpose of full-time education of 2 children of such individual, maximum for 2 children, any tuition fees paid can be claimed as deduction under ATC. Repayment of housing loan. As we all know that, sir, for housing loan, we'll be paying interest on borrowed capital and principal. Am I right, sir? If you are traveling through optional tax regime, interest on borrowed capital can be claimed as deduction under 24B. And that principal can be claimed as deduction under ATC. Except interest on borrowed capital, provided house is taken for residential purpose and assessee should not transfer the house for how many years? That means once you are claiming deduction under ATC, there should be a lock-in period of house for how many years? As subscription to equity shares or debenture. You are subscribing equity shares or debenture, forming part of eligible issue of capital approved by board of a public, engage in infrastructure including power sector or public financial institution. You are entitled to claim deduction under. You are putting term deposit. Term deposit means time deposit, FD, for a fixed period not less than how many years? Which is in accordance with the scheme framed and notified by central government. You are entitled to claim deduction under. As subscription to bonds of NABARD, if you are subscribing the bonds of NABARD, you are entitled to claim deduction under. In an account under the senior citizen savings scheme, if you are a senior citizen and if you are subscribing to the senior citizen savings scheme, you are entitled to claim deduction under. You are putting FD, not in a bank, you are putting FD in a post office, you are entitled to claim deduction under. If you are putting, subscribing to Suganya Samriddhi account, it is for the girl child up to 18 years. You are entitled to claim deduction under. Sir, you are depositing central government employee to his tier 2 pension scheme account. You are entitled to claim deduction under. That means what is ATC? My dear lovable students, ATC are prescribed investments. What government is saying that? We have prescribed 21 investment, 21 places. If you are ready to park your money in that 21 places, you are entitled to claim deduction under what? ATC. There is no need to buy art. What are the 21 places? Even we have done lot of questions from total income. Once we read an adjustment, we should be able to say that yes, this investment will fall under what man? ATC. So ATC is what man? Prescribed investment. Come on, we will complete ATC. For whom this section is applicable? Individual or HUF, irrespective of the residential status. Whether the individual or HUF may be resident or non-resident. If they are ready to invest in this 21 places, they are entitled to claim deduction under ATC. What is the maximum deduction? Maximum deduction along with ATCCC and ATCCD or independently under ATC will be restricted to 1,50,000. That means as per section ATC, you can claim maximum 1,50,000. That means if you add all the 21 investment, if you are investing in 21 places, maximum deduction will be 1,50,000. Am I right, sir? And in addition to that, we are having ATC, we are having ATCCC, we are having ATCCD subsection 1. Sir, ATC plus ATCCC plus ATCCD subsection 1 is equal to ATCCE. This is equal to 1,50,000. That means under ATC, you can claim individually 1,50,000. Under ATCCC, individually you can claim 1,50,000. Under ATCCD subsection 1, individually you can claim 1,50,000. Put together, all the three will be 1,50,000. That's what ATCCE is all about. Am I right, sir? That's what they have said here. Sir, what are the conditions should be satisfied in order to claim deduction under ATC, my dear lovable students? These are the conditions, sir. The conditions are investment is made in the approved scheme. Yes, you are supposed to invest in 21 notified places. If you are investing in 21 notified places, you are entitled to claim deduction under. Payment need not necessarily made out of income chargeable to tax. For example, if you are having agricultural income, from that agricultural income, if you contribute to any of the 21 places, still you are entitled to claim deduction under ATC. There is no need that you should contribute only from the taxable sources. Deduction shall be made only when the payment basis and not on what basis. If you invest, you are entitled to claim deduction under ATC. If it is payable, you are not entitled to claim deduction under ATC, my dear lovable students. So ATC is prescribed investments. ATC is government has prescribed 21 places. If you are ready to invest in that 21 places, you are entitled to claim deduction under ATC if you are traveling through the optional tax regime. Come on, man. ATCCC and ATCCD are the discussion. There are two sections we'll be discussing in one shot, which is pension scheme. What, man? There are two pension scheme are there. Number one, pension scheme other than central government and pension scheme of central government. Pension scheme other than central government and pension scheme of central government. Pension scheme other than central government is ATCCC and pension scheme of central government are ATCCD. Nothing, man. If you are joining in a job at the age of 25 or 24 years, my dear lovable students, you will work with that company for 60 years. Monthly, you will be getting salary. Am I right? Sir, if the monthly salary what you are getting is 1 lakh, if the employer gives entire 1 lakhs to you, you will spend entire 1 lakh. And at the time of retirement, really you will be suffering. So what they are saying is, from 25th year till your retirement of 60 years, you do one thing, my dear lovable students. You put, sir, 10,000 rupees per month in a bucket. That bucket is called as pension scheme. That means once you retire, after your retirement, government will give you what man? Pension. If that pension has been given to employee, then that pension will be taxable under the head salary. If you died and if that pension has been received by the family, such a pension is called as family pension, should be taxable under the head IFOS. And based upon the route which you are traveling, either 15,000 or 25,000, as the case may be, can we claim it as deduction? Able to appreciate? My dear lovable students, if you want to get a pension after your retirement, you should, sir, first of all, deposit some amount when you are working. No. Sir, at the time of working, if you don't deposit money, who will give you pension? Sir, that means at the time of your working, either you can deposit the money with the 80CCC or 80CCD. What is 80CCC? Annuity plan of LIC or other insurance. That means, sir, if the assessee is an individual, irrespective of the residential status, if you are resident or non-resident, you do one thing, my dear lovable students. Every month you are getting salary. From the salary, take 10,000, 5,000, 15,000, whatever amount you want. Then the assessee has paid or deposited any amount for any annuity plan of LIC of India. Sir, we are having Life Insurance Corporation of India. Am I right, sir? Which is not 100% owned by government. Some part of the shares has been owned by government. You do one thing, that 5,000 rupees per month, 10,000 rupees per month, you have to deposit in the LIC, Life Insurance Corporation of India, or any other insurance company. If you don't believe LIC, you just go and with HDFC or Axis or whatever it may be, basically private people other than government. For receiving pension from fund, sir, they will give you pension once you retire, referred under section 1023 AAB. Then, my dear lovable students, sir, amount you are contributing every year, no, you can claim it as deduction under 80CCC up to an amount of 1,50,000. Sir, as we all know that, sir, 80C individually 1,50,000, 80CCC individually 1,50,000, 80CCD subsection 1 individually 1,50,000. Put together total comes to 1,50,000. So overall, either 1,50,000 or actual amount you have contributed. Sometimes you would have contributed only 90,000. So under 80CCC, you are entitled to claim only 90,000, whichever is lower. That's it. That's it with regard to 80CCC. So what is 80CCC? Notified pension scheme other than central government. You can individually claim 1,50,000. Can I proceed? Sir, when you are working, you are saying that 5,000, 10,000 rupees monthly contribution, instead of handing over with the LIC or any other insurance company, you want to contribute with the central government. That means you are saying to central government that, sir, I am central government employee or I am government employee. Government is only paying me what? Salary. Sir, 1 lakh rupees salary has been paid by government. So government is saying that we won't pay you 1 lakh rupees now, even though you are eligible or entitled to get how much lakh? 1 lakh. Out of that 1 lakh, 10,000 rupees we will be deducting, my dear lovable students, and only balance 90,000 rupees will give to you. That means this 10,000 rupees will be deposited in an account called as notified pension scheme under section 80CCD. And this 10,000 we will give you at the time of your retirement. At the time of your retirement. So when you calculate salary, my dear lovable students, you tell me the basic salary you will be taking 1 lakh into 12 comes to 12 lakh rupees. But the employee have really not got 12 lakh rupees in his hand, because out of this 1 lakh, 10,000 rupees has been deducted by government itself for the purpose of contributing to notified pension scheme under section 80CCD. Then what government is saying that you will be having gross salary or gross total income, as the case may be. From this gross salary or gross total income, my dear lovable students, you can claim what? 6A deduction. Chapter 6A deduction under 80CCD subsection 1. That's what we are going to explain. 80 CCD subsection 1 we will be talking about. 80 CCD subsection 1B we will be talking about. 80 CCD subsection 2 will be talking about. In the sense means, my dear lovable students, sir, there are two types of notified pension schemes are there. Notified pension scheme by other than central government, notified pension scheme by central government. Notified pension scheme by other than central government are 80 CCC up to a maximum amount of 1,50,000 can be claim it as a deduction. Notified pension scheme by central government 80 CCD. Am I right? In that 80 CCD, my dear lovable students, it can be further classified into three categories. Sir, 80 CCD subsection 1, 80 CCD subsection 1B, 80 CCD subsection 2. Am I right, sir? Sir, 80 CCD subsection 1 and 80 CCD subsection 1B are employees' contribution. Whose contribution? That means own contribution to the notified pension scheme. If an employee is contributing 10,000 rupees, sir, from every month to the notified pension scheme, the similar amount will be contributed by whom also? Employer also. So that can be claimed as deduction. Sir, whose contribution? Employer's contribution to the notified pension scheme. Come on, man. We'll be start reading one by one by one. 80 CCD subsection 1. Whose contribution we are talking? Employees' contribution. Participate. Sir, if an assessee is an individual and who is employed by either central government or state government, if you are a central government employee or state government employee, who is paying salary? Central government or state government or any other employer or any self-employed person, what you are supposed to do, you know, from your salary, you are supposed to invest some X amount in the notified pension scheme. Assessee during the previous year either paid or deposited any amount in his account under a pension scheme notified. That's why notified pension scheme. Sir, that notified pension scheme should be regulated by which government? Central government or which government? Or employer or the assessee or Atal Pension Yojana is also eligible. Sir, my dear lovable students, how much is the deduction you can claim? That means how much is the salary I am getting per month? 1 lakh. What is the 10% of that 1 lakh? 10,000. That's why I said, if you are a central government, state government or employer or employee, that means 10% of the salary will be contributed from your hand. Because to this notified pension scheme, I will be contributing, a similar amount will be contributed by whom also? Employer also. So I can contribute how much percent of salary? 10% of salary. And my employer can also contribute 10% of salary. So 10 plus 10 comes to 20% of salary. Am I right? That's what 20%. This for any other individual. In the sense means, you tell me, my name is ANM. Whether I'm having an employer? No, sir. Sir, I don't have an employer because I am the employer. So for me, there is no other hand to contribute how much percent? 10%. If you are having other hand, you contribute. Employee contribute 10%. Employer also contribute. Sir, if you don't have other hand, 10 plus 10 comes to 20%. That means what you have to check is, my dear lovable students, sir, do you have central government or state government as employer or you are a central government or state government employee? Then how much percentage? 10% of the salary you have to contribute to the notified pension scheme. If you don't have a central government or state government employer, you alone are contributing, means you contribute your share of 10% and you contribute his share of 10%. Maximum you can contribute 20% if you want. Am I right, sir? Sometimes certain employees, what they will be doing, no, they will be contributing more than 10% of salary to the notified pension scheme. As we all know that. As per 80 CCD subsection 1, for whose contribution? Employee's contribution. He is entitled to get only 10% of salary as deduction. Am I right? Sir, assume that if an employee contribute 13%, how much extra? 3%. What they are saying is, sir, employee contribution, additional deduction will be provided. That means for employees contribution, up to 10% of salary can be claimed as deduction under 80 CCD subsection 1. Over and above 10% of salary, up to 50,000 rupees can be claimed as deduction under 80 CCD subsection 1B. 80 CCD. That means, look at here, man. An assessee can be classified into two categories. An employee and employer. Am I right? Employee will contribute to notified pension scheme. Am I right, sir? Employee's contribution to notified pension scheme can be classified into two categories. Number one, 10% of salary and balance. Are you all really with me? Sir, this 10% of salary can be claimed as deduction under 80 CCD subsection 1. Whereas balance can be claimed as deduction under 80 CCD subsection 1B up to how much? 50,000. Both are whose contribution? Employee's contribution. That means instead of contributing 10,000 rupees every month, if employee is feeling that 90,000 rupees I don't want because காசு கையில வந்தா full செலவு பண்ணிறேன் நானு, what I'm supposed to do is, my dear lovable students, let me contribute 15,000 rupees. You tell me, is this 15,000 more than 10% of salary? Then, my dear lovable students, up to 10,000 rupees can be claimed it as deduction under 80 CCD subsection 1. And over and above 10% of salary, up to 50,000, that means extra 5,000 in our case can be claimed as deduction under 80 CCD subsection 1B. If I contribute some amount, sir, my employer will also contribute a similar amount. Yes, sir. That can be claimed as deduction under 80 CCD subsection 2. Sir, now for our year, they have newly introduced a word called as NPS Vatsala account. That is with assessment year 26-27. Our examination is 26-27, right? With effect from 1/4/2026, a fourth deduction shall also be allowed to what? Parents or guardians' income in respect of amount paid or deposited in the account of any minor under the NPS Vatsala account. In the sense means, for example, if I am having a minor daughter and in her name, if I am starting a NPS Vatsala account, then still I am entitled to claim deduction under what man? 80 CCD subsection 1 or subsection 1B as the case may be. But subject to a maximum of 50,000 overall as mentioned under this section. That means, sir, what is the problem? I will tell you. Actually, up to 10% of salary you can contribute. Employee can contribute. Majority of the employees was contributing 10% of salary. And this 80 CCD subsection 1B was unutilized. So, government want to make it utilized, sir, 80 CCD subsection 1B. So, they are coming with a new scheme saying that, sir, if you are having a minor child and if you are a parent, look at, I am a parent, sir, I am a guardian, sir, I am having income, I am having a minor child. So in her name, I can start an account called as what man? NPS Vatsala account. Then that 50,000 can be claimed as deduction under 80 CCD subsection 1B in my hands. Even though that account is not in my name, even though that account is in the name of my minor child, I can claim it as a what man? Deduction. So every individual will feel that I am securing something for my minor. And government is getting from every person 50,000 rupees in advance. Every year they'll be depositing how much rupees? 50,000. So government got money also. And for this guy, he got savings also. Both will be happy, my dear lovable students. So this may be tested in your examination. NPS Vatsala account. So even though the employee is contributing to NPS Vatsala account in the name of his or her minor child, still they are entitled to claim deduction under 80 CCD subsection 1B. One example I will give you. Assessee contribution 1,40,000 to NPS and gross total income is 5,60,000. In this case, deduction shall be 20% of gross total income. Am I right, sir? Because if I don't have an employer to contribute equal percentage of 10%, then I have to contribute my 10% and I have to contribute the employer's 10%. So 10 plus 10 comes to 20%. So 5,60,000 is the gross total income, means 5,60,000 into 20% comes to 1,12,000. So my dear lovable students, maximum under 80 CCD subsection 1, 1,12,000 can be claimed as deduction. Have the employee contributed or have the assessee contributed 1,12,000? No. So how much he actually contributed? 1,40,000. So 1,40,000 minus 1,12,000 comes to this 28,000 is the extra contribution over and above employees allowed contribution. Then that extra up to how much rupees? 50,000 can be claimed as deduction under 80 CCD subsection 1B. That's it with regard to 80 CCD subsection 1, 80 CCD subsection 1B. Both are employees' contribution. Am I right, sir? Now, employer will also contribute on behalf of the employee. If an employer contribute on behalf of employee, when you are calculating the gross salary in the salary chapter, whose contribution? Employer's contribution to the notified pension scheme should be included in the gross salary. Yeah. My dear lovable students, because this is the perquisite, my dear lovable students, who contributed? Employer contributed on behalf of employee. This is a benefit received by the employee from the employer should be treated as a perquisite. Once you treat it as a perquisite, automatically gross salary will increases. Sir, in order to pulls down gross salary less what 6A deduction? Under 80 CCD subsection 2, because this is whose contribution? Employer's contribution. Employer's contribution. First, it has to be treated as an income in the gross salary. Then you can claim chapter 6A reduction. So 80 CCD subsection 2. Whose contribution? Allowed even if opted for the default tax regime. Yes, sir, 80 CCD subsection 2, 80 CCH subsection 2, 80 JJ, AA. These are the three sections you can claim both under the default tax regime and optional tax regime. What is the logic? Logic is very simple. Logic means I am not claiming deduction against my income. I am claiming deduction against the income which has been paid by the employer. Hence, my dear lovable students, I am entitled to claim deduction both under the default tax regime and the optional tax regime. Able to appreciate? So 80 CCD subsection 2, employer's contribution allowed even if opted for default tax regime. Sir, you have to classify the employer into two categories. Generally, what we have understood is to the notified pension scheme, employee can contribute 10%, employer can contribute 10%, 10 plus 10 comes to 20% if there is no employer. Pakka. Now government is come up with a rule that if you are a government employee, then contribution made by the central government and state government to the notified pension scheme will be 14% of the salary, not 10%. Therefore, sir, increase to 14%. Because many people now are not interested in the government job. Many people are looking for the private job or are traveling outside India. Then government is not getting proper employees. Example, railway employees are there, IAS, IPS and all there. They are saying that after, sir, if you are serving for the central government or state government, we really love you, da kanna. February 14, sir, I love you. We will not contribute 10% for you. We will be contributing 14% for you. Able to appreciate? My dear lovable students, sir, I am the employer. For example, under me, there are 10 staffs are working in ANM classes. Even I am also employer. If an employee is contributing to notified pension scheme under section 80 CCD subsection 1, then as an employer, even I am also supposed to contribute on their behalf. Am I right? How much max I can contribute? Contribution by any other employer to the notified pension scheme of its employees. Sir, I can contribute whatever I want. There is no limit for my contribution. Sir, if I contribute, then that amount will be treated as income in the hands of the employee. Out of that, how much can we claim it as deduction under chapter 6A only matter? Are you all really with me? That if the employer is a government employer, employee can take on 14% of the salary under deduction under 80 CCD subsection 2. But if the employer is other than government employee like ANM, then contribution by any other employee to notified pension scheme of the employee. Na, sir, you employee, you are going to travel through optional tax regime, default tax regime. If it is default tax regime, na, I love you, da. Whereas if it is optional tax regime, na, I hate you, da. Are you all really with me? If you are going to travel through the old tax regime, what is old tax regime? Optional tax regime. Then only 10% of salary can be claimed as deduction by the employee under 80 CCD subsection 2. Am I right? Whereas if an employee is traveling through default tax regime, then employee can claim 14% of salary as deduction under 80 CCD subsection 2. Salary for this purpose means basic salary plus DA if provided in terms of employment. Now, my dear lovable students, as an employer, I am contributing in your notified pension scheme as a contribution. It's an expense for me. Am I right? Sir, it should be taxable in the hands of employee under the head salary. First of all, whatever contribution I have made on behalf of you, should be treated as a perquisite in your hands. Am I right? And employer can claim 36 deduction because that amount is an expense for me that can be debited to what account? Sir, employer's contribution to notified pension scheme can be debited to P&L account of the employer and it can be claimed as deduction under 36 subsection 1 clause 4A because in section 36 PGBP contribution. 4 contribution we have studied. This is one of the contribution able to link or sir recollect. And employee can claim deduction of the same under 80 CCD subsection 2, my dear lovable students. So under 80 CCD, we are having two things, man. Employee's contribution is there, employer's contribution is there. Up to 10% of the salary, it is covered under 80 CCD subsection 1. Over and above 10% of the salary, it can be covered under 80 CCD subsection 1B only up to an amount of Both are whose contribution? Employee's contribution. If an employee contributed to notified pension scheme under section 80 CCD, similar amount will be contributed by the employer also. Am I right, sir? First of all, if any amount has been contributed by the employer to the notified pension scheme under section 80 CCD, it has to be treated as a perquisite and it should be included in the gross total income or gross salary, whatever it may be. And you can claim it as deduction under 80 CCD subsection 2. Irrespective of the tax regime the employee is traveling, whether it is default tax regime or optional tax regime, but the amount of deduction will differ. If an employee is traveling through default tax regime, 14% of the salary can be claimed as deduction under 80 CCD subsection 2. But if the employee is traveling through the optional tax regime, only 10% of salary can be claimed as deduction under 80 CCD subsection 2. Do you have the pakka clarity? No deduction of amount for which deduction is claimed under 80 CCD subsection 1. Fine. Sir, 80C plus 80 CCC plus 80 CCD subsection 1 is equal to 80 CCE is equal to 1,50,000. You tell me what is 80C? Prescribed investments. What is 80 CCC? Notified pension scheme of other than central government like LIC of India or any other insurance company. Am I right, sir? What is 80 CCD subsection 1? Sir, employees contribution to notified pension scheme. Am I right, sir? Only whose contribution has been covered? Employees contribution. Sir, even 80 CCD subsection 1B is also whose contribution? Employees contribution. Whereas 80 CCD subsection 2 is whose contribution? Employer's contribution. This section 80 CCD subsection 2 and this section 80 CCD subsection 1B are not covered in 80 CCE. That means 80C plus 80 CCC plus 80 CCD subsection 1 should be equal to 80 CCE. That should be equal to 1 lakh. That means, sir, if a question has been given in the exam, first you can claim 80 CCD subsection 1B. First, because 80 CCD subsection 1B are not covered in 80 CCE. Able to link? Then balance you can claim through what? 80 CCD subsection 1. Because if an assessee is already having 80C, 1,50,000 will be filled in 80C itself. And my dear lovable students, if 80C is over, the balance can be claimed as deduction under 80 CCC. And the only balance can be claimed as deduction under 80 CCD subsection 1. That means put together 80C plus 80 CCC plus 80 CCD subsection 1 will be equal to 1,50,000. So if an assessee already having 21 investment, sir, that 1,50,000 will be filled by 80C itself. So my dear lovable students, I will be losing the opportunity to claim deduction under 80 CCD subsection 1. Since 80C plus 80 CCC and only 80 CCD subsection 1 is subject to 80 CCE, my dear lovable students, is equal to 1,50,000. So happily in exam question, first you can claim 80 CCD subsection 1B to the extent of 50,000. Able to appreciate? The balance you can claim, plan it like this in this slot, my dear lovable students. That's what they are saying. That's it with regard to 80D also. 80 CCD also. So first one, 80C. What is 80C? Prescribed investments. How many investment? 21 of funds. 21 investments. If you are ready to invest in 21 places, you are entitled to claim deduction under 80C. That's it, game over. 80 CCC and 80 CCD are notified pension scheme. Sir, if you are putting your money to get the pension after your retirement, and if that pension fund is other than central government, 80 CCC. Central government, 80 CCD. Sir, under 80 CCC, up to 1,50,000, you can claim it as deduction. That's it. No much discussions. With regard to 80 CCD, the sections can be classified into 3 categories. 80 CCD subsection 1, 80 CCD subsection 1B, and 80 CCD subsection 2. 80 CCD subsection 1 are employees' contribution to the notified pension scheme up to 10% of salary. Am I right, sir? If an employee is contributing over and above 10% of salary, then up to 50,000 can be claimed as a deduction under 80 CCD subsection 1B. But there is no, listen very carefully, very important point for exam. There is no hard and fast rule that only after claiming 80 CCD subsection 1, we can claim 80 CCD subsection 1B. First, initial itself, for the tax planning, we can claim 80 CCD subsection 1B and balance can be claimed in 80 CCD subsection 1. Comfortable? Sir, now employer's contribution. If an employer is contributing to the notified pension scheme, first it should be treated as a perquisite. My dear lovable students, once you treat that as a perquisite, then it has to be included in the gross salary. Then you can claim it as a deduction under 80 CCD subsection 2. Evolo sir, that depends upon who is the employer. Central government, government employer, other than government employer. Government employer means 14% of the salary can be claimed as deduction under 80 CCD subsection 2. Other than government employer, you have to check yourself whether you are traveling through default tax regime or optional tax regime. If you are traveling through default tax regime, I love you da. 14% of the salary can be claimed as deduction under 80 CCD subsection 2. If you are traveling through optional tax regime, you are not entitled to claim deduction of 14%. You are entitled to claim deduction of only. That's it, man. I'm moving into the next slot called as 80 CCH, deduction in respect of contribution to Agnipath scheme. What scheme, man? Agnipath scheme in the sense means how, for example, railway employee is there. Sir, for railway employee will contribute to notified pension scheme. Even the central government will also contribute to notified pension scheme. Am I right, sir? The same way with regard to army, navy, etc. My dear lovable students, sir, or military. In the sense means army people will be there, navy people will be there, military people will be there. These people are the strongest people in the entire India. Are you with me? Handle these people with very care. So my dear lovable students, sir, if you are part and parcel of the army, navy or military, etc., then whatever salary you are getting from that salary, you will be contributing to Agnipath scheme. What, man? Agnipath scheme. Accounting standards illaya. Agnipath scheme. What, man? Even the similar amount will be contributed by the employer also. Employer will contributing 30%. Employer will be contributing 30%. Sir, 80 CCH subsection 1. If an individual is enrolled in Agnipath scheme as Agniveer, Agniveer in the sense means my life, I am ready to surrender to the country India. I may be working in army or I may be working in navy. I may be working in military. At any time, I may, sir, die for the nation. I am a soldier in Pahalgam. Sir, in recently, Kashmir, some shootout happened. Some soldiers here and there are dying. Am I right? They are sacrificing their life for this much people who are in what, man? India. So what they are saying is, government is saying this, if you are a member of Agnipath scheme and if you are an Agniveer who are participating in corpus fund, sir, if you are getting 1 lakh rupees salary, sir, 30% of the amount should be contributed to the Agnipath scheme. That means take your home only 70,000 rupees because there is a high chance of anything happen at any time. 30% you contributed to where? Agnipath scheme. Sir, or even we, government also will contribute how much percent to 30%? Then the youth will be attracted to ANM. Are you all really with me? Because they will be ready to join with ANM. That is either in army or navy or military, etc. Because today the world is going behind Instagram. Am I right, sir? No one is ready to serve for the country or no one is ready to stand up and deliver. So government is saying that you come and serve the country. We are ready to contribute how much percent? 30%. First of all, that 30% of your salary will be treated as perquisite in the gross salary. There is no doubt about it. Am I right, sir? And it can be claimed as a deduction. So two people will be contribute. You are the Agniveer. You will be contributing some contribution that can be claimed as deduction under 80 CCH subsection 1. Am I right, sir? Even my dear lovable students who will also contribute. Employer, that is central government, will also contribute. That can be first included in the gross salary as a perquisite and that can be claimed as deduction under 80 CCH subsection where the central government make a contribution to the Agniveer corpus fund. Deduction will be how much percent? Deduction allowed even if opted out of the default tax regime. Whether you are traveling through optional tax regime or default tax regime, 80 CCH subsection 2 deduction will be allowed. Because under 80 CCH subsection 1, you are claiming your contribution ka deduction. Whereas 80 CCH subsection 2, you are claiming employer's contribution ka deduction. My dear lovable students, first central government contribution is first taxable under the salary as perquisite. Then it is allowed it as a... That's it, man. This family comes to an end. What is 80C? Prescribed investment. Under 80C, 1,50,000 can be claimed as deduction. Any problem? 80CCC notified pension scheme of other than central government. It may be LIC or any other insurance company. Individually, you can claim 1,50,000. Under 80 CCD subsection 1, whose contribution? Employee's contribution to the notified pension scheme of central government. Am I right, sir? The amount of deduction will be either 10% of salary or 20% of the gross total income, as the case may be. That depends upon whether you are having employer or not. Come on, man. 80 CCE. It's a ending section, limiting section in the sense means, sir, 80C plus 80 CCC plus 80 CCD subsection 1 should be restricted to 1,50,000. That cap comes to an end. 80 CCE E stands for ending section. Now 80 CCD subsection 1B, sir, employees contribution to the notified pension scheme outside the limit of 1,50,000 under 80 CCE. Yes, sir, 80 CCD subsection 1B are not inside 80 CCE. Already told extra, you can claim how much? 50,000. 80 CCD subsection 2, whose contribution? Employer's contribution. Contribution by the employer to the notified pension scheme of government. Even 80 CCD subsection 2 are also outside the limit of 1,50,000, which are covered under 80 CCE. Am I right? Sir, if the employer is a government employer, my dear lovable students, then you can claim how much percent of salary? 14% of salary. That's what, sir, contribution by the central government. If the employer is other than government employer, then you have to check in which route you are traveling. Optional tax regime, default tax regime. Default tax regime means 14% of salary. Optional tax regime means 10% of salary. 80 CCH subsection 1, whose contribution? Employee's contribution. Rather, Agnivir's contribution to the Agnipath scheme. Don't call them as, sir, what man? Employee and all, because they are ANM. Are you all really with me? Most powerful persons. Hello, sir. They are working in army, navy, military, etc. Don't call them as employee. They are the Agnivirs. Sir, their contribution. 30% of monthly customized Agnivir package can be claimed as deduction under 80 CCH subsection 1. Come on, man. 80 CCH subsection 2. Who will also contribute? Central government will also contribute. On behalf of the Agnivir, contribution by central government to the Agnipath scheme. First, it has to be treated as perquisite inside the gross salary, and it can be claimed as deduction. Max deduction will be 30% of his monthly customized Agnivir package. Here, under 80 CCH subsection 2, for employer's contribution, private employer, government employer concept and all that there, because ANM will work only with the central government. Am I right, sir? Sir, army, navy and military is holded now by central government. Tomorrow, can you have your own army force in India? No, sir. Then this army will kill you. Hello, sir. That's it with regard to 80C series, my dear lovable students. So the sections are 80C, which is prescribed investments, 80CCC, notified pension scheme, 80CCD, subsection 1, employees' contribution to the notified pension scheme of central government, 80CCD, subsection 1B, employees' contribution to the notified pension scheme of central government, 80CCD, subsection 2, employers' contribution to the notified pension scheme of central government, 80CCE, which is 80C plus 80CCC plus 80CCD, subsection 1 is equal to 80CCE is equal to 1,50,000. Am I right, sir? Then 80CCH subsection 1, contribution of Agnivir to the Agnipath scheme, and 80CCH subsection 2, contribution of government on behalf of the Agnivir to the Agnipath scheme. With this, my dear lovable students, 80C series comes to an end. Are you all really with me? Come on, sir. The next series is 80D. That is medical insurance premium paid by check. Medical insurance premium. You tell me, if you are not well, you will go to doctor. So D stands for doctor. Am I right, sir? So medical and doctor are related. That's why 80D is equal to medical insurance premium paid by check. Medical insurance premium paid by check. 80DD, disability of dependent. For example, you are having a dependent. They are having somewhat disability. Then you can claim deduction under what? 80DD. 80U, எதுக்கு அடுத்தவனு சொல்லணும் சார், you yourself are having a disability. That means disability of self. Disability of, then 80DDB, you are having specified diseases like neurological disease, cancer, chronic renal failure, thalassemia. Hello, sir. Then you are entitled to claim deduction under 80DDB. So, 4 section. The next family is 80D, which is medical insurance premium paid by check. In exam questions, what they will give? No, they will give all medical insurance and all. And finally, they will say that it is paid by cash. you are not entitled to claim deduction under chapter 6A. 80DD, your dependents are having what? Disability. Father, mother, brother, spouse, sister, etc. are having disability. And 80U, you are having disability. And 80DDB, that is, sir, someone is suffering from specified diseases. What this 80D is saying? What this 80D is saying? This is what they are saying. Sir, you are an individual. You have to pay medical insurance premium. That means if I pay life insurance premium, 80C kanna. If I am paying medical insurance premium, 80D kanna. Am I right, sir? Sir, if you are paying medical insurance premium, on whom medical insurance premium should be paid? Sir, which can be classified into two categories, set number 1 and set number 2. Tell me, set 1 and set 2. Set 1, you can pay in self, spouse, dependent children. That means 80C is equal to SSC. 80D is equal to SSD. Are you all ready with me? What is the definition of SSC? Self, spouse, children. ASSD, self, spouse, dependent children. You have to stress it. Self, spouse, dependent children. That is what set number 1. And set number 2, parents, whether dependent or not. Parents, whether? So in these people's name only, you have to pay the medical insurance premium. So set number 1, set number 2. Set number 1, self, spouse, dependent children. Set number 2, parents, dependent or not. Am I right, sir? Come on, sir, what I'm supposed to do if you are an individual or HUF? Sir, what are the mode of investment? What I'm supposed to do? You have to pay medical insurance. Sir, pay by any mode other than cash. That means if you are paying in cash, you are not entitled to claim 80D. Or central government health scheme. Central government has brought an health scheme. To that scheme, you can make the payment. That means, sir, I don't want this private insurance providers. I want to contribute with the central government. Then pay by any mode other than cash. Or approved scheme. Central government will bring approved scheme. Sir, pay by any mode other than what? Cash. For example, this COVID and all came. Sir, against that COVID, against the vaccine, for example, if some rules and regulations are coming that every 5 years you have to put a vaccine, then you can join in a scheme of the central government. For that, you can pay some money and that amount can be claimed as a deduction. Only condition is it should be paid by any mode other than. That's why in the name itself I have attached medical insurance premium paid by check. Medical insurance premium paid by preventive health checkup. Now nothing is there, but I don't know what is going to happen. So I'm going and checking my body. Full body checkup I'm doing, man. My dear lovable students, for that you can pay in cash or any other mode is allowed. Only for the preventive health checkup, cash or any other mode is allowed. That to max 5,000 rupees will only be allowed for the preventive health checkup. Am I right, sir? Generally for the super senior citizen, that is 80 plus years and all, those people won't have the medical insurance premium, my dear lovable students. For them, you will be incurring expenditure for the medical treatment because Tata may be 90 plus, my dear lovable students. They will be admitted in hospital. Sir, insurance company will not take the risk of him because, sir, he will regularly be in hospital. Am I right, sir? So, my dear lovable students, if you are incurring expenditure for that guy, sir, if you are incurring any mode other than cash, then that can be claimed as a deduction under 80D, my dear lovable students. That means 80D, sir, these 5 places you have to contribute. Either you have to take medical insurance, or you have to contribute to central government health scheme, or you have to contribute to any other approved scheme of the central government, or you have to incur expenditure for preventive health checkup, or you have to incur expenditure for senior citizen. Then for these expenses, you are entitled to claim deduction under 80D. Am I right, sir? Sir, what is a deduction, man? As I already said, it is 2 sets. Set number 1 and set number 2. Sir, self, spouse, dependent children. That's what SSD. The actual expenditure what you have incurred or 25,000, whichever is lower, can be claimed as a deduction. For set number 1, 25,000 rupees or actual expenditure. For the parents, which is set number 2, actual expenditure or 25,000, whichever is lower. The below next one. Either self or spouse or dependent children or parents are senior citizen. If any person is a what citizen? Instead of this 25,000, actual or 50,000, whichever is lower, will be allowed as deduction. Generally in question, assessee will be normal person and parents will be senior citizen. General. So in set number 1, you can claim actual expenditure incurred or 25,000, whichever is lower. In set number 2, you can claim actual expenditure or 50,000, whichever is lower for the parents. I hope that, sir, we have done this question from these and all. You are able to connect with the application of what we have done. Am I right, sir? Sir, if amount has been paid on account of medical expenditure for self, spouse, parents or senior citizen, if they are what in India? Resident in India. and no payment has been made to keep in force on insurance on the health of such person. That means, let it be applicable to set 1 or set 2, self, spouse, parents or senior citizen, my dear lovable students. If they are senior citizen and if they are resident in India and in their name there is no medical insurance premium, then deduction will be available up to what? 50,000. Then for medical expenditure, you are entitled to get 50,000 because if the assessee is a senior citizen, array set number 1 normal 25,000, set number 2 normal 25,000. If any of the assessee is a senior citizen, you can claim up to 50,000. That's what they are saying, man. Sir, other points, individual. Sir, in case of individual, spouse, parents and dependent children. That means if you are an individual, you can incur all these expenses in SSD name. What is S? Self. That is individual. Sir, then spouse. Then what? Parents. What children? Dependent children. That means parents, whether what or not. With regard to HUF, sir, it may be in the name of any member, my dear lovable students. These are certain notes which we are going to be read it, man. Sir, expenditure for what? Health checkup of his assessee plus his family is included in the total deduction subject to a maximum of 5,000. That means upper limit, the limit number 1 should not exceed 25,000. Inside the 25,000, you can have preventive health checkup of 5,000. The lower limit allowed is 25,000. But if the parents are senior citizen, 50,000. Inside that 25,000 or 50,000, 5,000 rupees is included. That means for set number 1 also you can have preventive health checkup. For set number 2 also you can have preventive health checkup. But the preventive health checkup of set number 1 and preventive health checkup of set number 2 should not exceed 5,000. Able to appreciate? So the total preventive health checkup for an assessee itself is only how much, man? 5,000 rupees. Payment shall be made out of income chargeable to tax. This is not like ATC. For ATC, even if you contribute from agriculture income, you are entitled to claim deduction under ATC, but here it is not possible. Medical expenditure of senior citizen is restricted to 50,000. Sir, if a senior citizen does not have medical insurance premium and if that senior citizen is incurring medical expenditure in lower limit, that is part number 2, set number 2, you can claim maximum 50,000. Sir, in case of single premium health insurance policy, which cover more than 1 year, sometimes you will do what? No. This insurance company, sir, recently bring a new trend in the sense means you pay 50,000 rupees medical insurance premium, your medical insurance will be covered for next 5 years. That means 50,000 divided by 5 means how much? 10,000. Then my dear lovable students, every year you are entitled to claim only 10,000 rupees as deduction. Deduction shall be allowed on proportionate basis for all those years for which cover provided subject specified monetary limit. But if you are traveling through the default tax regime, there is no question of chapter 6A at all. So deduction under ATD would be available to individual or HUF. Only he or it exercise the option of shifting out of the any chapter 6A deduction can be claimed only under the optional tax regime. Don't say exception. There are exceptions. 80CCD subsection 2, 80CCH subsection 2, 80JJ. But these exceptions are not for our own money. It is an exception for others' money. So instead of better calling it as an exception, logically if you understand means under default tax regime, there is no what 6A at all. That's it with regard to ATD, which is what is ATD? Medical insurance premium paid by check. Now ATDD, disability of what? Dependent. Sir, if you are an individual or HUF, and if you are a resident, if you are dependent, my dear lovable students, is suffering from a disability. Sir, your dependent is suffering from a disability. Sir, medical treatment including nursing, training and rehabilitation of the dependent being a person with disability. So government is saying that first of all, you are an individual or HUF and you are a resident, you are having dependent, like for example, my wife, my mother, my father, my brother, my sister, my children are suffering from disability, they are handicapped. For them, I am supposed to spend nursing expenses, training and rehabilitation expenses, or I am depositing any amount under the scheme framed by LIC or any other approved insurer because tomorrow anything may happen to my dependent. I may need more money. So in order to incur that, I am depositing some money. Are you all really with me? It should be provided for payment of annuity or lump sum in the event of death or attending the age of 60 years or more by such individual or the member of what man? HUF. Then that will be taxable. What is the amount of deduction? The amount of deduction, are you an individual? Are you a resident? Do you have a dependent and that dependent is having disability? What government is saying that based upon the disability, if the disability is a severe disability, 1,25,000 can be claimed it as deduction. If disability is other than severe disability, then 75,000 can be claimed it as a deduction. Are you all really with me? Sir, what is the amount of deduction under 80DD? Severe disability, 1,25,000. Other than severe disability, when you can say that they are having severe disability, if the disability is more than 80%, severe disability. Sir, less than 80%, other than severe disability. Sir, deduction is allowed on what payment basis? Actual payment. That means, in the sense means, really for your dependent, you should spend something. Relative includes, sir, these and all are your dependent. Number one, parents. Your parents are suffering from disability. They are physically handicapped. You can claim 80DD, or spouse, or brother, or sisters who are wholly dependent and any member of the HUF. Because pairly 80DD, disability of dependent. For example, 80D, set 1, set 2, self, spouse, dependent children. Here there is no question of whether they are what or not, dependent or not. Your, sir, yarlam, parents, spouse, brother, sister should be wholly dependent, my dear lovable students. Expenditure on maintenance, including medical treatment of persons suffering from autism, cerebral palsy, and multiple disabilities. Sometimes these people may suffer from autism, or these people may suffer from cerebral palsy, or these people may suffer from multiple disabilities like kannu theriyala, kaadu kekkala. These and all are what? Multiple disabilities. For the same person, two disability may come. They won't be able to see, or they won't be able to hear, which are multiple disabilities. So what government is saying that because you are an individual or HUF, you are not a company, my dear lovable students. You are an individual, or you are a HUF, you are a family, and you are a resident. You are not a non-resident, you are a resident. So when I see you, you are having a dependent, and that dependent is having disability. Then whatever income you are earning by getting income from salary, house property, PGP, capital gain, and IFOs is there, majority of the income will go in hospital itself to take care of that dependent people. You can't kill them. Am I right, sir? Because they are your parents, they are your spouse, they are your brothers and sisters, they are your children who are suffering from disability. What government is saying that, Are, you don't pay more tax to ya. Sir, with that money, we will be giving you some benefit. With that benefit money also, you take care of those people. Are you understanding the intention of the act? They are saying that if the disability is a severe disability, claim 1,25,000 rupees as deduction. Yeah. Sir, because of reducing this chapter 6 deduction, sir, your total income will reduce. Then only on the reduced total income, you are liable to pay tax. Are you really with me? But if the disability is a normal disability, reduce 75,000 instead of 1,25,000. Come on. Now, you itself are suffering from disability. Sir, you are an individual being a resident. Sir, HUF, it is not applicable because only HUF can't have disability. Only who can disability? Individual can have disability because group of individuals is what HUF is all about. Am I right, sir? Sir, the assessee at any time during the previous year is certified by medical authority to be a person with disability. Hello, sir. Sir, based upon your disability, if your disability is a severe disability, 1,25,000 deduction. Sir, if the disability is other than severe disability, 75,000 deduction is allowed irrespective of the expense incurred by the assessee. This is the difference between 80DD and 80U. In order to claim deduction under 80DD, you should spend some amount. In the sense means at least 1 rupee you should spend for your disability, for your dependent. Even if you spend 1 rupee, you can claim this much as deduction. Whereas for you, there is no need that you have to spend something, but still you can claim this amount as deduction. Are you really with me? So deduction is allowed irrespective of the expense incurred by the assessee. Disability includes blindness, kannu theriyala, or low vision, kammiya theriyudu, or leprosy cured, sir, or hearing impairment, or autism, or locomotor disability, mental retardation, mental illness, cerebral palsy, CA student. Hello, sir. Rate, tension, pressure, my dear lovable students. Then you are entitled to claim deduction under 80U based upon the disability. Whether it is severe disability, yeah, other than severe disability. Yeah. Severe disability means 1,25,000. And when you will call it a severe disability, if the disability is more than 80%. Other than severe disability, 75,000. The last section from this series, man, 80DDB, medical treatment of specified disease. Sir, you are an individual or HUF being a resident. So government is seeing from the top. Okay. Government is saying, okay, in India, so many individuals or HUF are there. All are resident. Sir, they are incurring expenditure on the medical treatment for the specified diseases like neurological diseases, narambu talarchi, or cancer, or chronic renal failure, or thalassemia. Hello, sir. Then, my dear, for whom you are incurring? For self you are incurring, for your spouse you are incurring, for your children you are incurring, for the parents you are incurring, for the brothers you are incurring, for the sisters of the individual you are incurring. Hello, sir. Then, my dear lovable students, sir, you are entitled to claim deduction. You are entitled to claim deduction. It depends upon who you are. Other than senior citizen, you are a normal person, but either you or your relatives are affected with the specified diseases, then the actual expenditure what you have incurred, or 40,000, whichever is lower, can be claimed as a deduction. Whereas if the assessee who are claiming deduction is senior citizen or super senior citizen, actual expenditure incurred or 1 lakh, whichever is lower, can be claimed as deduction. This is what 80DDB. So my dear lovable students, what is 80D? Medical insurance premium paid by check. What is 80DD? Disability of dependent. Disability of dependent. What is 80U? Disability of self. What is 80DDB? Specified diseases. Am I right, sir? This is the second family. Can we recall once, man? 80C, 80CCC, 80CCD subsection 1, 80CCD subsection 1B, 80CCD subsection 2, 80CCE, 80CCH subsection 1, 80CCH subsection 2. Am I right, sir? Continued with 80D, 80DD, 80U and 80DDB. Yes, sir. We are going to continue with chapter 6 reduction. 80E series is the discussion. So, my dear lovable students, till now we have done with 80C, prescribed investment, 80CCC, notified pension scheme, 80CCD subsection 1, employees contribution to notified pension scheme of central government, 80CCD subsection 1B, employees contribution to notified pension scheme of central government in excess of 10% of salary up to 50,000, 80CCD subsection 2, employers contribution to the notified pension scheme, 80CCE is a limiting section, 80CCH subsection 1 is the employees contribution to Agnipath scheme, 80CCH subsection 2 is the employers contribution to the Agnipath scheme. Then we are having 80D, medical insurance premium paid by check, 80DD, disability of dependent, 80U, disability of self, and 80DDB, specified diseases. We are moving into the next family called as 80E, 80EE, 80EEA and 80EEB, my dear lovable students. 80E is interest on higher education. What this section is saying that for the purpose of higher education, if you are taking a loan, for that loan you are liable to pay interest. That interest can be claimed as deduction under 80E. That's it. This is what the crux. So who should be the assessee? Individual. Because HUF cannot study by their own. So only this section is applicable to individual. 80E. And 80EE also individual, whether resident or non-resident. 80EEA individual, sir, whether resident or non-resident. 80EEB again individual, my dear lovable students. That means, sir, only for individuals 80E series will be applicable. Sir, what that guy should do? Payment made for paid interest on education loan. That means you have to take a education loan. You should take a loan for the purpose of education. For that education loan, you are paying interest. Only interest will be allowed as a deduction. Principal cannot be allowed it as a deduction. Out of income chargeable to tax, loan taken for own or relatives education loan. Either for your higher education or relatives higher education, you can take loan. That's it. What is the amount of deduction? Any amount of interest paid, 100%, sir, interest is allowed. And not the principal amount. Sir, there is no restriction that only 50,000 will be allowed as deduction, 1,50,000 will be allowed as deduction and all. Under 80E, the deduction is unlimited. But only condition is only interest will be allowed as deduction. Principal will not be allowed it as deduction. And education is available from the year from which assessee start paying interest and 7 immediately succeeding assessment year. MCQ may be tested. This section 80E, maximum you can claim as deduction for 8 assessment years. How many assessment year? Or until above. Interest is paid in full, whichever is earlier. In the sense means, if I repaid the loan within 5 years, I can claim the deduction only for 5 years. If I repaid the loan for 12 years, I can claim the deduction only for 80 years. Maximum deduction number of years you can claim under 80EE is 5 years. Sir, you said that either the loan can be taken in the name of the assessee or in the name of relatives. Who and all are relatives? Sir, spouse is a relative. Children of whom assessee is the guardian. So I can take loan for my spouse or I can take loan for my children. Loan should be taken from either financial institution or approved financial institutions. You can take the loan from financial institution. That means if you are taking loan from your relatives or your friends, in exam they will say like that, you are not entitled to claim deduction under 80E. The loan is taken for either graduate and postgraduate studies. For the purpose of LKG, if you are taking loan, it's not higher education. Only if you are taking loan for graduate or postgraduate, my dear lovable students, you are entitled to claim deduction under 80E. Actual amount of interest paid will be available. If 1 lakh rupees has been paid, that 1 lakh has been claimed as a deduction. Higher education means any course of study pursued after passing the senior secondary examination. Beyond +2, whatever you are studying is higher education or is equivalent from any school, board or university by central government, state government, local authority or by any other authority for the above do so. So one line summary of the entire discussion is, if you are taking loan for higher education and for that loan if you are paying interest, that interest can be claimed as deduction under 80E. Unlimited, it can be claimed as deduction. Maximum for 8 assessment years. That's it with regard to 80E. I'm moving into 80EE and 80EEA parallelly. 80EE, interest on housing loan. Even 80EEA is also interest on housing loan. Both are, sir, similar section, which is small twist. In the sense means, sir, 80EE and 80EEA. My dear lovable students, these 4 conditions should be satisfied in order to claim deduction under 80EE. Assessee should not own any residential house property on the date of sanction of loan. On the date of sanction of loan, assessee should not have any other residential house property. That means I should take a loan not for the purpose of higher education. I should take a loan for the purpose of construction or acquisition of the house property. On the date of sanction of loan, assessee should not have any other residential house property. And loan should be sanctioned between 16 and 17. This section, particular section, is applicable only if the loan has been sanctioned during 16-17. If the loan has been sanctioned during 16-17, this section will be applicable. That means, sir, sometimes the loan has been sanctioned 15-16, not applicable. 17-18, not applicable. Loan should be sanctioned during 16-17. And loan amount should be up to 35 lakhs. That means, sir, for the small people only, this exemption will be applicable. If you are taking loan beyond 35 lakhs, you are badawala. You are not entitled to claim deduction under 80E. And purchase price of the house should be up to 50 lakhs. My dear lovable students, the house property value should not exceed 50 lakhs. That means in order to claim deduction under 80EE, 4 conditions should be satisfied. Look at me. Condition number 1. Assessee should not own any residential house property on the date of sanction of loan. The last word I said is sanction of loan. So you tell me when the loan should be sanctioned. Loan should be sanctioned during 16-17. Next one, third condition. So I should start with 3. Sir, the loan amount should not exceed 35 lakhs. I ended up with 5. So the fifth one, purchase price of the house property should be 50 lakhs. These are the 4 conditions. Can we recall once more? Sir, assessee should not own any residential house property on the date of sanction of loan. Loan should be sanctioned during 16-17 and the loan amount should be up to 35 lakh and value of property should not exceed 50 lakhs. Then, my dear lovable students, this section will be applicable. For whom this section is applicable? Individual. Whether that individual is resident or non-resident. Sir, he should take a loan and he should pay interest. For what loan? Housing loan. Loan should be taken from bank or financial institution for acquisition of the residential property. That means here loan I am taking for the purpose of acquisition of residential house property. What is the amount of interest? It's not unlimited and all. Amount of interest paid, that means actual interest, or statute limit of 50,000, whichever is lower, only can be allowed it as a deduction. As per this section also, only interest paid can be allowed it as a deduction. Principal paid cannot be claimed as a deduction. Because principal repayment is entitled to claim deduction under 80C, not 80EE. Comfortable, sir? Sir, what is the order of claiming deduction? First, you do one thing. Sir, total interest on capital under 24B, you can claim up to 2 lakh. Am I right, sir? Because if the property is a, sir, house property, GAV less LT bar MT paid by the owner, you will get the answer as net annual value. From the net annual value, you have to reduce 30%. Then you can claim IOBC. If the property is a self-occupied property, under IOBC, either 30,000 or 2 lakh, whichever is higher can be claimed. So you do one thing. First, how much loan you have taken, you take. For example, loan amount should not exceed 35 lakh. So for example, if I have taken loan of 30 lakh and bank is charging interest of 12%. So 30 lakh into 12% comes to 3,60,000 rupees is the total interest. Out of this 3,60,000, 2 lakh you can claim as deduction under 24B. Am I right, sir? Balance 1,60,000 is there. This 1,60,000 should be bifurcated into two categories. Deduction under 80 EE. This is chapter 6A deduction. Am I right, sir? To the extent of 50,000 you can claim. But still you are having 1,10,000. This 1,10,000 put it on dustbin. We can't do anything because under 80 EE the maximum deduction is only 50,000. That's it, man. The benefit of deduction under this section would be available till the repayment of loan continues. This is not like education loan. Education loan should be repaid within 8 years, maximum deduction. But here there is no limit. You can have unlimited time limit, my dear lovable students. Okay, sir. So if I am satisfying 4 condition, 80EE will be applicable. 80EE is a specific section. What section? In the sense means, sir, on the date of sanction of loan, assessee should not own any residential house property. Loan should be sanctioned during 16-17. Oh, that is the biggest condition. Loan should be sanctioned during 16-17. Am I right, sir? That means if loan has been sanctioned during 15-16, this benefit will not be available. If loan has been sanctioned during 17-18, that section benefit will not be. So after 80EE, that 80EE ka new section came called as 80EEA. Basically, EE has been amended. Sir, assessee does not own any residential house property on the date of sanction of loan. Same condition, condition number 1. Assessee should not own any residential house property on the date of, and loan should be sanctioned from financial institution between 1/4/2019. That means financial year 19-20. In financial year 2021. In financial year 21-22. That's what they said till 31/3/2022. That means if the loan has been sanctioned during these 3 financial years, because the first section 80E. Am I right, sir? Section 80EE. Third section 80EEA. So 3 years time limit are there because this is third section. Loan should be sanctioned from 1/4/2019 till 31/3/2022. If the loan has been sanctioned during these 3 years, and the assessee should not claim deduction under 80EE, because if an assessee already enjoying 80EE, for those people 80EA benefit will not be applicable. That means loan should not be sanctioned during 16-17. Am I right? My dear lovable students, and the stamp duty value of the house should not exceed how much lakh? 45 lakh. Here loan restriction is not there, but house property restriction is there. That means in order to enjoy 80EEA, assessee should satisfy 4 conditions. Condition number 1, assessee should not own any residential house property on the date of sanction of loan. Loan should be sanctioned during 1/4/2019 till 31/3/2022. My dear lovable students, assessee should not claim deduction under 80EE. And the stamp duty value of the house should not exceed 45 lakh. If you are satisfying these 4 conditions, you are entitled to enjoy 80EEA. The assessee should be an individual other than covered under 80EE. Yes. That means if an individual is enjoying benefit under 80EE, 80EA benefit will not be applicable. Am I right, sir? Payment for, sir, paid interest on loan borrowed for what property? Self-occupied property. That means for self-occupied property, you have borrowed money. For self-occupied property under section 24B, we can claim up to 2 lakhs. Over and above how much lakh? 2 lakh. Can we claim it as chapter 6A deduction under 80EEA? Appreciating. What is the amount of deduction? Additional benefit up to 1,50,000. Oh, yoda. Sir, under 80EE, you will get only 50,000. Sir, under 80EEA, you will get 1,50,000. Apart from available in section 24B. That means 2 lakh can be claimed as deduction under 24B. In addition to that 2 lakh, you can claim chapter 6A deduction to the extent of 1,50,000. Benefit will be available till the date of repayment. There is no hard and fast rule that loan should be repaid within 8 years, because generally housing loan will be for 20 years. Generally, I'm saying. That's it. Come on, man. So 80E done, 80EE done, 80EEA done. What is 80E? Interest on higher education. What is 80EE? Additional benefit on housing loan if you are satisfying 4 conditions. 80EEA, additional benefit on housing loan if you are satisfying 4 different conditions. Come on, man. 80EEB, tax incentive for electric vehicles. Sir, again an individual is taking loan, but not for the purpose of education purpose, not for the purpose of self-occupied property, but for buying electric vehicle. That means you are going to buy an electric car. for the purpose of purchasing an electric car, you are taking a loan. For that loan, you are paying interest. That interest can be claimed as deduction under 80 EEB. 80 EEB. Sir, assessee does not own any other residential electric vehicle on the date of sanction of the loan. Yes, on the date of sanction of the loan, assessee should not own any electric vehicle. Loan should be sanctioned during 1/4/2019 till 30/1/3/2023. That means 1920, 2021, 21-22, 22-23. How many years? 4 years. This is the another section, 4th section. That is why 4 years has been given. Super fantastic to the core. Sir, loan should be taken for purchase of electric vehicle and should be sanctioned by financial institution or specified NBFC. This is the only place or area where NBFC is allowed. Even you can take loan from non-banking financial company, still interest under 80 EEB will be applicable. Because there are so many NBFCs, non-banking financial companies will be there. They will be giving loan to vehicles. Like in the auto due right? So all those people is acting as what? NBFC. That is why only for electric vehicle this NSR NBFCs is allowed. But for self-occupied property 80 EE, 80 EEA, NBFCs are not allowed. What is the deduction, man? Either the actual amount of interest paid or 1,50,000, whichever is lower, can be claimed as a deduction. So 80 E, 50,000. 80 EEA, 1,50,000. 80 EEB, 1,50,000. Electric vehicle means pure electric vehicle. No hybrid is allowed, man. Sir, if you are purchasing hybrid now, manual plus automatic are coming. For that, you are not entitled to claim deduction under 80. That's it with regard to the series of 80E, interest on higher education. 80EE, interest on housing loan. 80EEA, interest on housing loan. 80EEB, interest on electric vehicle. Sir, in all the section, you are entitled to get interest as deduction, not the principal. Am I right, sir? And my dear lovable students, in all the section, this section is applicable to individual, because only for an individual interest will come. Am I right, sir? Sir, if an individual is having interest, then that guy are you all really with me? That's why this is E series, my dear lovable students, because 80E, 80EE, 80EEA and 80EEB. What is 80EEB? Loan taken for electric vehicle. Then EB will come. That's what they are saying. Sir, electricity bill will come dakana. That is why 80 EEB provisions has been given. Are you all really with me? Super fantastic to the core. I'm moving into the next family called as 80G family. 80G, 80GG, 80GGA, 80 Jujube and 80 GGC, my dear lovable students. These are the next series. 80G means, G means giving. You are giving or you are contributing to outsiders. Are you all really with me? Sir, deduction under 80G, what they are saying is, please classify your donations into two categories. Without qualifying limit, with qualifying limit. Without qualifying limit and with qualifying limit. Without qualifying limit means, sir, there is no restriction. 100% of the deduction without qualifying limit. If you contribute 1 lakh, you can claim 1 lakh rupees as deduction. That's it. 50% deduction without qualifying limit means if you contribute 1 lakh, 50,000 can be claimed as deduction. Remaining 50,000 cannot be claimed as deduction. This is what? Without qualifying limit. With qualifying limit means we will be calculating the qualifying limit, and my dear lovable students, we will be restricting the deduction under 80G to that qualifying limit. 100% deduction with what limit? Qualifying limit. In the sense means, sir, if you are contributing 1 lakh, you are entitled to claim 100% deduction. But we will check that this 100% does not exceeds that qualifying limit. Next one, 50% deduction with qualifying limit. If you contribute 1 lakh, you are entitled to claim 50,000 deduction. But this 50,000 should not exceed the qualifying limit. That's what without qualifying limit and with qualifying limit, my dear lovable students. Come on, man. 80G donations. 80G. Sir, who should be the assessee entitled? Sir, all assessee. Being it may be individual, HUF, AOP, except cooperative society, BOI, AJP, etc. If you are giving money for charitable trust or various places, you are entitled to claim deduction under 80G. Expenses on, sir, any donation in the form of sum of money. That means only cash contributions are entitled for 80G. In exam, they will say that kind contribution has been given, like food given, like clothes given, that and all not entitled for 80G. Giving should be in cash. donation in kind is not qualified for deduction. Donation is made only to specified fund or institution. That means we will notify to where and all you are supposed to be donated. To that place only you are supposed to donate. To those places, if you are donating, you are entitled to claim deduction under ATG. Payment mode, man. If the donation exceed 2,000, then only through account payee check. Up to 2,000 rupees, you can pay in cash. If you are paying, contributing beyond 2,000, it should mandatorily be through account payee check, account payee bank draft, electronic clearing system, such other electronic mode as may be prescribed. What is the deduction, sir? It depends upon to where you are contributing. Sir, whether you are contributing to specified list with qualifying limit 10% of the adjusted total income. Nothing. What they are saying is, sir, if you are having, look at here, man, income from salary, income from house property, profits and gains of business or profession, capital gain and IFOS, this is called as what total income? Gross total income. My dear lovable students, sir, inside this gross total income, you will be having capital gain. Inside capital gain, you will be having special income. Inside IFOS, you will be having casual income. These are not subject to Chapter 6A deductions. Because against casual income, Chapter 6A deduction is not allowed. Against capital gain, Chapter 6A deduction are not allowed. Because this will be taxable at special rate. Am I right? So first you do one thing, Kana. From the gross total income, reduce the special income, which are covered under 111A, which are covered under 112, which are covered under 112A, because these incomes are special capital gain, taxable at special rate. Less you do one more thing, casual income. Because casual income is going to be taxed at 30%. Then basically, technically, what you will get, you will be getting adjusted total income. Adjusted. This is a maximum amount, my dear lovable students. You are entitled to claim Chapter 6A deduction. If 100 rupees is the adjusted total income, you can't claim 120 rupees as Chapter 6A deduction. Because a maximum Chapter 6A deduction will be restricted to the income. Am I right? So from this, you do one thing. Sir, reduce the Chapter 6A deduction. For example, you would have claimed 80C to 80U other than 80G. Because 80G is the donation deduction you are going to be claimed. For example, you already claimed 80C. You already claimed 80CCC. Na? If this amount 100%, if it is allowed under 80G, na, the total Chapter 6A deduction will exceed the adjusted total income. Am I right? So, my dear lovable students, reduce all other section, because all other section you have claimed. Then you will be getting the balance, what total income? Adjusted total income. Sir, on this balance, what total income? Adjusted total income. You can claim how much percent? 10% as deduction under ATG. What income tax act is saying that? If you are earning 1 lakh, will you give entire 1 lakh to other person? So max you can give 10% to others. Balance 90% should be with you. Otherwise also, balance 90% has to be declared as an income. We want it as an income, then only we will get the tax. Otherwise, if you claim 100% as deduction, where we will go, man? Hello, sir. So if it is specified limit, means which qualifying limit? 10% of the adjusted total income. Others means without qualifying limit. That's what we have studied here. Deduction under ATG can be classified into 4 categories. Number 1, without qualifying limit, with qualifying limit. In that without qualifying limit itself, we are having 100% is there, 50% is there. With qualifying limit, we are having 100% is there, 50% is there. Are you really with me? How to calculate the qualifying limit? What I explained, they are again repeating. Take the gross total income. Inside gross total income, capital gain and IFOS will be there. From that, remove long-term capital gain, remove short-term capital gain, 111A only. Because normal short-term capital gain will be taxable at normal rate. No need to remove it. Am I right, sir? Less deduction under 80C to 80U, except 80G. The answer what you are getting is called as adjusted total income. My dear lovable students, on that adjusted total income, up to how much percent is allowed? 10% of the adjusted total income is allowed. This 10% has to be compared with 50% or 100%, which is the limit. We are having 100% with qualifying limit and 50% with qualifying limit. And both of them should not exceed 10% of the adjusted total income. Am I right, sir? While calculating adjusted total income, casual income like winning from lottery, etc. shall be included. Shall be included. Here when I explain, sir, I said that, sir, what has to be reduced? Casual income should be reduced. But in the format given by income tax, sir, casual income, no need to reduce. So that you keep in your mind. That has been given as note. Now, 4 lists are there. 100% deduction without what limit? Qualifying limit. 100% deduction without That means if you are contributing to this 24 places, my dear lovable students, if you contribute 1 lakh can be claimed as a deduction. Am I right, sir? National. Generally, national means central government. Correct? Sir, the fund set up by central government. Government is saying that if you are giving money to us, 100% deduction can be claimed. Prime Minister's National Relief Fund. Who's the current Prime Minister of India? Modi ji. Sir, 100% deduction. Prime Minister's Armenia Earthquake Relief Fund, 100% deduction. Africa Fund, 100% deduction. National Children Fund, for children and all, please support man, 100% deduction. National Foundation for Communal Harmony, 100% deduction. Approved university, approved education institution, national eminence, sir, 100% deduction. Chief Minister Earthquake Relief from Maharashtra. So this is particular state, but still if the other people in the other states are contributing, you are entitled to get 100%. Any fund set up by state government of Gujarat exclusively for providing victims of the Gujarat earthquake, because those places and all has been hardly hit because of the what? Earthquake. So that particular state government will form a fund and all the other citizens of the country will contribute to that fund, and they will say that you are entitled to get how much percent reduction. Then only those people will be having a motivation to contribute. Am I right, sir? Any Zilla Sakshara Samiti for primary education in villages, Totawala, villages and towns, sir, you are contributing a fund. By using that fund, we will be teaching the small kids. National Blood Transaction Council or any state blood transfusion council whose sole objective is controlled supervision, the regulation, encouragement or what man, operation and requirement of the blood bank. For the purpose of maintenance of blood bank, if you are contributing any fund, it is entitled for 100% reduction. Any state government fund to provide medical relief to the poor, 100%. Army Central Welfare Fund for the army people, how much percent reduction? Andhra Pradesh Chief Minister Cyclone Relief Fund, how much percent reduction? National Illness Assistance Fund, national nale 100%. Chief Minister nale 100%. National nale 100%. National nale Fund for Technology Development and Application set up by central government, again national, how much percent? National Trust for Welfare of Person with Autism, Cerebral Palsy, Mental Retardation, Multiple Disability, how much percent? Swachh Bharat Kosh. Swachh Bharat Kosh means to clean India. My dear lovable students, we have brought up a fund set up by central government other than some spent by SSE in pursuance of section 135, which is other than CSR activity. CSR activity is not entitled for ATG. My dear lovable students, other than CSR activity, if you are contributing, you are entitled to claim what? ATG. The Clean Ganga Fund. In this point, what examiner will test to know where the assessee is a resident. If a non-resident is testing to Clean Ganga Fund, it is not entitled for ATG. The National Fund, again national, control of drug abuse and Prime Minister's Citizen Assistance and Relief in Emergency Situation Fund, basically PM Care Fund, has been recently started by the Modi government. If you are contributing to this 24 places, my dear lovable students, you are entitled to claim 100% reduction. Nothing. 1 lakh contributed, 1 lakh will be the reduction. Are you all really with me? Whereas these are 50% reduction. Now BJP is ruling the country. BJP don't like Congress, especially Rahul Gandhi. So Jawaharlal Nehru Memorial Fund, Jawaharlal Nehru only started everything. Only how much percent we will give? If you are contributing 1 lakh, 50% we will give. Prime Minister Drought Relief Fund. Prime Minister, the current Prime Minister is Modi ji. And the first Prime Minister of India, Jawaharlal Nehru. So my dear lovable students, sir, 50% reductions. Are you all really with me? Prime Minister's Drought Relief Fund. Drought means Varalchi. Thanni illama Varalchi. Congress thanni illama Valarchi. Alright, sir. Indira Gandhi Memorial Trust, my dear lovable students. Even Indira Gandhi is also form part of the Congress, 50%. Rajiv Gandhi Foundation, 50%. Next, fifth point will be added very soon, called as Sir, Rahul Gandhi Foundation. Before that, please quickly study and pass, my dear lovable students. Basically, BJP means 100%, Congress means 50%. That's it with regard to the, sir, the first without qualifying limit. Now, we will be calculating the qualifying limit. How to calculate qualifying limit, we already done. Sir, to that, this 100% reduction will be applicable with what limit? Qualifying limit. Government or to approved local authority, institution, association, as may be approved for promotion of family planning. That means you are contributing to a fund. With that fund, the government will use that fund for promoting family planning. Then 100%. In the sense means if you contribute 1 lakh, you are entitled to claim 1 lakh as deduction. But that amount of 1 lakh should not exceed 10% of the adjusted total income. That is the only concept. Are you all really with me? Or sum paid by company as a donation to Indian Olympic Association or other association or institution established in India as may be notified by government for the development of infrastructure of sports or games or sponsorship of sports or games. The money what you are contributing is going to be used for sports. Promotion of family planning, 100%. Sports also, 100%. My dear lovable students. But this 100% should not exceed 10% of the qualifying limit. These are 50% deduction. That means if you contribute 1 lakh, you are entitled to claim only 50,000. But even that 50,000 should not exceed 10% of the adjusted total income. You are contributing for charitable purpose. You are contributing to government or local authority for charitable purpose other than purpose of promoting family planning, because already family planning are covered in 100% list. Am I right? An authority constituted in India for the purpose of dealing or satisfying need of housing accommodation or improvement of city, town, village, etc., etc. A corporation established by central government or state government for promoting the interest of members in what community? Minority community. Or renovation or repair of temple, mosque, gurudwara, church or other place as may be notified by the government to be of historical importance. For example, government is collecting a fund to make some maintenance of Taj Mahal, my dear lovable students, then that is entitled for 50% standard deduction. That is whatever you are contributing into 50%, but that 50% should not exceed 10% of the adjusted total income. That's it with regard to 80G. So you have to check your contribution falls in category number 1, category number 2, category number 3, category number 4. Category number 1, 100% deduction without qualifying limit. Category number 2, 50% deduction without qualifying limit. Category number 3, 100% deduction with qualifying limit. Category number 4, 50% deduction with qualifying limit. My dear lovable students, the qualifying limit is 10% of the adjusted total income. Adjusted total income is gross total income minus only capital gain, not the casual income. Sir, you have to reduce all the chapter 6A deduction other than 80G. You will be getting, sir, adjusted total income. On that 10% you can apply. I can move into the next one, my dear lovable students. From here onwards, quick, we will be completing 80GG. 80GG means Govinda, Govinda. Tell me, Govinda, Govinda. That means rent paid, but no HRA, my dear lovable students. That means I'm paying rent, but I'm not getting HRA from my employer. My dear lovable students, we are 2 routes are there. Number 1, what tax regime? What tax regime? Default tax regime, optional tax regime. Am I right, sir? Sir, if you are route default tax regime and optional tax regime, if you are traveling through default tax regime, there is no question of 1013A at all. Am I right, sir? Sir, HRA will be fully taxable, remembering? Whereas if you are traveling through optional tax regime, section 1013A, HRA can be claimed as a, for example, if you are an employee, you are paying rent, my dear lovable students, but your employer is not paying you what? HRA. And you are feeling that whatever rent you have paid is Govinda, Govinda. Then government is saying that don't worry, Akana, come on, man. If you are an individual, whether you may be a resident or non-resident, who is not in receipt of HRA, but you are not getting HRA, who pays rent, but you are paying rent for accommodation occupied by him for your residential purpose. For example, I am from Palakkad, Kerala. I came to Chennai for the purpose of job. I am staying in a house by taking a house for rent. My dear lovable students, I am getting salary from my employer, but my employer is not paying HRA. Then what Income Tax Act is saying that whatever rent you have paid can be claimed as a Chapter 6A deduction. Because even though you are getting salary, you are having direct expenses called as what? Rent. Sir, if I am saying that rent will not be considered, you pay tax on salary, what you will say? No. வர்ற வருமானம் ஃபுல்லா ரெண்ட் பே பண்றதுக்கும் சாப்பிடுறதுக்குமே கரெக்டா போகுது. Still I have to pay tax. Government is saying that if you are getting HRA, that rent payment will be compensated. Since you are not getting HRA, you are paying rent from the salary what you are receiving. So you do one thing, sir, that rent paid can be claimed as a Chapter 6A deductions. Kana. So assessee or his spouse or his minor child or HUF of which he is a member should not own house at the place of employment. Either if I am having a house in Chennai, or my wife is having a house in Chennai, or my minor child is having a house in Chennai, or HUF is having a house in Chennai, then this benefit will not be applicable. Because if you are having a house in Chennai, you can stay in that house. Why are you paying what, man? Sir, rent, or that house you would have let out and from that you are getting rent. From that rent you pay this rent. Then you can knock it off. Are you all really with me? That means you are not eligible to enjoy 80 GG. A declaration in Form BA should be filed. That means in some form you have to file a declaration that I am from Kerala, I am staying in Tamil Nadu, where I don't have a place of residence, where I am paying rent, I am entitled to get 80 GG. Assessee has not claimed concession in respect of self-occupied property, and you should not have a self-occupied property. Sir, if you are having a self-occupied property, you can stay in that house itself. Am I right, sir? Sir, what is the amount of deduction? This is very important, man. With regard to HRA, rent paid in excess of 10% of salary. Sir, here, rent paid in excess of 10% of adjusted total income. Sir, 5,000 rupees per month is a statute limit. Max 60,000 per annum. Or 25% of the adjusted total income. These are the, whichever is lower is the limit. Can we repeat once again with what is the lower? Rent paid in excess of 10% of adjusted total income. 5,000 per month. 25% of the adjusted total income is whichever is lower will be allowed as a reduction under 80. Sir, what is this adjusted total income? We already calculated adjusted total income for 80G. You are again asking to calculate. Yes. Take the what total income? Gross total income. From that, reduce long-term capital gain. Here we are reducing long-term capital gain. Reduce short-term capital gain covered under 111A. Reduce Chapter 6A deduction under 80C to 80U other than 80GG. My dear lovable students, the answer what you are getting is the adjusted total income. Here don't claim, sir, 10% of the adjusted total income. Compute 10% of the adjusted total income. Compare that 10% of the adjusted total income with the rent paid. Rent paid in excess of 10% of the adjusted total income. Then 25% of the adjusted total income or statute limit of 5,000. That's it with regard to 80G, which are contributions or donation. 80GG, Govinda, rent paid but no HR. You are having 80GGA, you are having 80GGB, and you are having 80GGC. To various other places you are contributing. 80GGA, scientific research and rural development. For example, my dear lovable students, if an assessee is having PGBP income, what is PGBP? Profits and gains of business or profession. Then section 35 will be applicable. Section 35, expenditure on scientific research, either in-house research, contribution to outsiders. You can contribute to various associations or research association, institute, college, university, etc. If you are traveling through the optional tax regime, contribution to outsiders can be claimed as a deduction. Am I right, sir? Whereas, if you don't have PGBP income, section 35 will not be applicable. For example, I may be a salaried employee, but still I will be contributing to a research association. I want deduction. For that only 80GGA. A stands for Approved Research Association. A stands for Approved Research Association. Sir, assessee not having income from PGBP. Because if an assessee is having PGBP, he will claim deduction under section 35. If you are don't having PGBP income, you can't claim 35, you can claim 80GGA. You are contributing to a scientific or approved research association in social or statistical research. Sir, you are contributing to an association for rural development or training for such program covered under 35 CCA or Rural Development Fund. You are contributing to public sector company, local authority, association or institution approved by the National Committee. National Urban Poverty Eradication Fund. To these places, basically, if you are contributing, you are entitled to claim deduction under 80GGA. Sir, what is the amount of donation? Any amount of 100%. If you contribute 1 lakh, 1 lakh, there is no qualifying limit. Mannangata, Punnak and all not there. However, if the sum exceed 2,000, then amount should be paid via check or approved mode. That is the maximum donation in cash is 2,000. This is applicable even for 80G and also 80GGA. You can give contribution up to 2,000 rupees in cash. You know why? Because some people will come and say that, sir, give me some donation, 100 rupees you will give. That 100 rupees and all cannot be paid it by account pay check, account pay bank draft and all. That's why they are saying that if the donation up to 2,000, you paid cash here. But beyond 2,000 means material amount you are contributing, that should be contributed through account pay check. Now man, 80GGB and 80GGC, contribution to what party? My dear lovable students, the main income for a political party is a political contribution. Am I right, sir? Political party will contribution from company and other than company. For example, my dear lovable students, sir, there is a company called as ANM Private Limited. If this guy is contributing to if this company is contributing to political party, it's an expense to the company, but it is not a business expense. If that expense has been debited to what account? P&L account, it will be added back as per 37 subsection 2B, because contribution to political party is not a business expenditure. But that amount can be claimed as a chapter 6A deduction under 80 GGB or 80 GGC as the case may be. Sir, 80 GGB is applicable to what, man? Indian company. Indian company. That means if an Indian company is making political contribution. Are you all really with me? Contribution to what party? Political party. Or what trust? Electoral trust, within the meaning of section 182 of the Companies Act. That means if a company is contributing to a political party, that amount of contribution can be claimed as a chapter 6A deduction under 80 GGB. What is the amount of deduction? 100%. Here also there is no confusion of qualifying limit. Other than qualifying limit, all those dance and all not there. What is a restriction? Amount should not be paid in cash. Even 1 rupee you have to pay in what, man? Account paycheck. Here 2000 rupees benefit is not available. Pakka. My dear lovable students, any SSC except local authority and AJP, because local authority is also part and parcel of government. AJP is also part and parcel of government, sir, or partly funded by government. That means if an individual, HUF, AOP, BOI, all those people are contributing to a political party, then for that contribution, you are entitled to claim deduction under 80 GGC. To where you have to contribute, either political party or what trust, electoral trust. What is the percentage of deduction? In the sense means if you are contributing 1 lakh, you are entitled to get 1 lakh rupees as deduction, but the only condition is contribution should not be paid by way of. That means even for 80G and even for 80GG, anyway no contribution, 80GGA, up to 2000 rupees you can pay in cash. Whereas 80 Jujubi and 80 GGC, not even that 2000 will not be allowed as cash. Able to appreciate, sir? With that, we can say that the next family of 80 G, 80 GG, 80 GGA, 80 Jujubi and 80 GGC comes to an end. I'm moving into the income-based series, man. 80 QQB, 80 RRB, 80 TTA and 80 TTB. 80 QQB, 80 RRB, 80 TTA and 80 TTB. And if we complete the last section called as 80 JJ, we are done with the chapter 6 deductions, my dear lovable students. Sir, these are income-based deduction. Income-based deduction in the sense means in your gross total income. That is, income from salary will be there, income from house property will be there, PGBP will be there, capital gain will be there, IFOS will be there. Sir, this put together, these 5 H's are called as gross total income. I will be checking the income. For example, inside your what? IFOS, is there SB interest is there, savings bank interest is there, or FD interest is there? As we all know that interest should be taxable under the head IFOS. Against this IFOS, sir, 80 TTA bar 80 TTB will be applicable. That's what they are saying. First we'll complete that too and we'll come up. Okay. 80 TTA deduction for interest on savings account. For example, you are an assessee, either individual or what? HUF, other than senior citizen. Because for senior citizen, 80 TTB will be applicable. Other than senior citizen, 80 TTA will be applicable. So you should be either individual or HUF. Sir, you may be either resident or non-resident. What should be the income, qualifying income? Interest on savings account. That means every one of us are having savings bank account. I am having savings bank. Do you have? In that, if you are having any balance, bank will give you some interest. That is an income. That income should be first included in the IFOS. And against that income, you can claim it as a chapter 6A deduction under 80 TTA. Not time deposit. Time deposit means it should not be FD interest. It should be savings bank interest. Earnings on savings account with banking company, cooperative society or post office. What is the difference between FD and savings bank? FD means I am putting certain money for certain period by informing the bank. But savings bank means some 20,000, 30,000 rupees money are there in the savings bank account. It is kept idle. Since it has been kept for some period of time, bank is giving me interest. What is the quantum of deduction, man? Interest on such deposit, either the amount of interest or 10,000, whichever is lower. So generally in every computation of total income question, you will be having interest on savings bank. Please include in the IFOS, and either the amount of interest or 10,000 can be claimed as a chapter 6A deduction if the assessee is traveling through the optional tax regime. If 8,000 is the interest, how much deduction? 8,000. 12,000? then 12,000 should be included in IFOS and 10,000 should be claimed as Chapter 6 deduction. The same thing if the assessee is a senior citizen, my dear lovable students. For respect of the age senior citizen, government want to give some additional benefit. Not under 80 TTA, but under 80. Sir, individual being a resident. For non-residents, government is asking that why that additional benefit we have to give. Only for the residents we will give. If that guy is getting interest on deposit. This may be interest from SB interest or FD interest also. Super. For a normal person, only SB interest is exempted. Whereas for a senior citizen, SB interest bar FD interest are entitled for 80 TTB. Sir, if that guy is getting interest from banking company, cooperative society or post office, either the amount of interest or statute limit of 50,000, whichever is lower. That means for a normal person, 10,000 under 80 TTA. But for a senior citizen, 50,000 under 80 TTB is what the exemption. We have done with 80 TTA and 80 TTB. Am I right, sir? Sir, we are having two more called as 80 QQB and what? 80 RRB. Nothing, man. Sir, for example, you are getting royalty on books. Royalty on? For example, I am writing some books and I am the author of the books and I am giving that book to a publishing house. Those publishing house are publishing those books like Rich Dad, Poor Dad or Sir Wings of Fire by Abdul Kalam or like that. So many books authors will be there. Autobiography and all, many people will write. My dear lovable students, for every one book which has been sold, my dear lovable students, for every one book has been sold, what I have written, sir, I am entitled to get 10 rupees royalty. This book may be sold for 100 rupees. Hello, sir. In that, the author of the book may get 10 rupee, 12 rupee, 15 rupee, etc., etc. Are you all really with me? That will be treated as my business income because it's my profession. I am an author. I have to write books, so I will be getting royalty. Why this is called royalty? You know, for every one book they sold, the publisher sold, I am entitled to get 10 rupees. So 10 into number of books. Sir, or they may give lump sum amount. Whether it is lump sum amount or royalty, that will be taxable under what? PGBP. Sir, if you are having PGBP income because of doing business or profession, no Chapter 6 deduction will be allowed under 80 QQB or 80 RRB. But if your PGBP income is royalty income from what? Books. That's what 80 QQB, royalty income of authors. So you are an author. You are writing books. So individual being a resident. Are you a resident? Yes, sir. Are you an author? Including joint author of books, being a work of literary, artistic or scientific nature, you are entitled to get deduction under 80 QQB. Your royalty may be either lump sum royalty or other than lump sum royalty. For example, the publishing house is giving rupees 5 lakh. That 5 lakh should be taxable under PGBP first. Then for that income, what government is saying that you can claim deduction under 80 QQB. Either the actual income you have received, how much lakh? 5 lakh. Or statute limit of 3 lakh, whichever is lower, will be allowed it as a reduction. Sir, other than lump sum means, sir, up to 15% of the value of the book sold can be claimed it as a deduction. For example, if you are getting royalty of 20%, you would have included 20% in the gross total income. But 20% cannot be claimed as Chapter 6A. Only 15% can be claimed as what, man? Chapter 6A, these are the basic conditions you are supposed to be satisfied. Like assessee must furnish a certificate in the prescribed form, duly verified by the person responsible for making such payment to the assessee. That means I should give a certificate to income tax department saying that this much money has been received from the publishing house to me as what? Royalty. And the royalty is either lump sum royalty or percentage royalty. And the amount of percentage is only up to 50%. Like this details and all the author have to inform to the department. If the income is earned outside India, yes, if the publishing house are situated outside India, sir, since I am a resident and ordinarily resident, global income is taxable in India. Assessee must furnish a certificate in the prescribed form from the prescribed authority, that is RBI. Sir, saying that the income has been accrued or risen outside India, this much income has been accrued or risen outside India. If the royalty is earned outside India, then deduction will be allowed. Deduction means deduction under 80 QQB, royalty on books. Only if, sir, such royalty is brought to India in convertible what exchange within 6 months from the end of the previous year or time allowed by RBI. That means whatever income has been earned outside India should be bring to India in convertible Foreign exchange, then only you are entitled to claim 80 QQB deduction, because then only government will get foreign currency, then only government is interested to provide you deduction under 80 QQB. The same is applicable to 80 RRB, which is nothing but royalty on patents. Royalty on patents in the sums means, for example, in this book you are seeing some bulb. I am the person who find out this bulb. Like some person really find out this bulb. Who? Thomas Alva Edison. Okay, science, leave it. So like that, I'm finding out something and I'm giving to you the use of this. For usage, you are giving me some amount called as royalty. So if I am an individual, if I am a resident, if I am a patentee, that means I am having the patent. No other person in this world can say that I find out the bulb because the patent is in my name. Hello, sir. The person who is true and first inventor of the patent and whose name is ended in the patent, which is registered on or after 2003 under the Indian Patents Act. That means that particular product in my name only it has been registered, and I am allowing that particular thing to be used by some other person, and the other person is giving me some amount as consideration. That is called as royalty on patent. Pakka, sir. What is a deduction? Simple, man. Have the patent earned in India, 100% of the such income, or rupees 3 lakh, whichever is lower. Basically here I will be an author. Basically here I will be a scientist. Are you already with me? I'll be finding something. Right. But if the income is earned where? Outside India, only condition is you should bring the money to India in convertible foreign exchange within etanna maso, arre maso. Sir, if the income is more than in respect of money brought into India in convertible foreign exchange with the prescribed time limit, or rupees 3 lakh, whichever is lower. That means how much money you brought to India in convertible foreign exchange, or statute limit of 3 lakh, whichever is lower, can we claim it as a deduction. The same conditions, my dear lovable students. The assessee must furnish a certificate in the prescribed form duly verified by person responsible for making such payment to the assessee. Deduction should not exceed the royalty as per the yes, the maximum deduction under 80 QQB or 80 RRB will be the maximum royalty what you got. If you got only 2,50,000 royalty, can you claim chapter 60 of 3 lakh? No. Double deduction is not permissible, where deduction under this section is claimed and allowed for any assessment year. No deduction shall be allowed in respect of such income under any other provisions of the Act for the same or in any other assessment year. That means once you claim deduction under 80 QQB, my dear lovable students, double deduction is not allowed. In the sense means, sir, for example, you would have got royalty income, 5 lakh rupees, sorry, 5 lakh rupees, 4 lakh rupees is a royalty income you have received. To earn this royalty income, sir, you have claimed expense of 50,000 rupees. So what is the taxable royalty? 3,50,000. Then against this 3,50,000, happily you can claim 3 lakh rupees and balance 50,000 will be taxable. Are you really with me? Whereas if you are getting only royalty income of 3 lakh and the expenses is how much? 50,000. The taxable royalty which you have included in the PGBP itself is only how much? 2,50,000. Then you are not supposed to claim 3 lakh rupees as chapter 6 reduction. Only 2,50,000 rupees can only be claimed as a chapter 6 reduction. Sir, and the taxable income will be nil. Because double deduction is not allowable. If you claim already 50,000 rupees deduction under any other section, for that 50,000 you are not entitled to claim chapter 6A. If the royalty is earned where? Outside India, deduction will be allowed only if such royalty is in convertible what exchange within etanna mass from the end of the previous year or time allowed by the RBI. That's it with regard to income based deductions like 80 QQB, 80 RRB, 80 TTA, 80 TTB. What is 80 QQB limit? Income or 3 lakh, whichever is lower. 80 RRB limit, income or 3 lakh, whichever is lower. 80 TTA, interest or 10,000, whichever is lower. 80 TTB, interest or 50,000, whichever is lower. I'm moving into the last section from the chapter 6 reduction called as 80 JJ, employment of new workmen. Nothing, my dear lovable students. If you are a businessman, then you will be, sir, paying wages and salary to employees. When you will be paying wages and salaries, if you recruit any new employees. Am I right, sir? If you recruit any new employees in the profit and loss account, you will be debiting to salary. You'll be debiting to what? Salary. That means if the salary has been paid to new employees, that means new job opportunities has been created. That is the biggest criticism every government is facing. There is no job for the youth. There is no job opportunities. Sir, this government is not doing well. Like that, the opposition party is criticizing. Am I right? So, my dear lovable students, what government is saying that in your factory, for example, if 100 workers has been newly joined in a particular financial year, for them, if you pay salary of how much rupees? 10,000, sir, some amount will be there. On that amount, 30% can be claimed as Chapter 6A deduction under 80 JJAA. Hello, sir. Sir, 80 JJAA, employment on new worker for assessee to him 44AB applies. Assessee to whom? 44AB applies means in order to claim 80 JJAA, you are supposed to do tax audit. You are supposed to do tax audit. Your books of accounts should be supposed to do tax audit. Then only your accounts will be verified by some chartered accountant. Then only chartered accountant will confirm that yes, this guy has employed new workers. This guy is entitled for deduction under 80 JJAA. 30% of the what wage? Additional wage. Last year only 50 people was working, but current year 75 people are working. Extra how many? 25. That is what additional wages paid to new regular workmen employed by assessee in the previous year is entitled for deduction. The deduction shall be allowed for how many assessment year? 3 assessment year. For example, 30% current year, 30% current year, 30% next year. That means 90% will be the deduction under 80 JJAA, including the assessment year relevant to the previous year. Such employment is provided. In year number 1, in current year, if you provide that, 30% can be claimed as deduction in current year. In year number 2, next 30%. And year number 3, 30%. Total 90%. Sir, this is very important, sir. Very, very important for your exam. New regular workmen do not include. For these people, 80 JJAA will not be applicable. Employees whose total emolument exceeds how much rupees per month? 25,000 per month. They are white collar job like CEO, CFO of the company, not the real workers, not the basic workers. If they are basic workers, monthly salary should not exceed 25,000. Whose entire contribution is paid by government under what scheme? Sir, employee will contribute to notified pension scheme and employer also will contribute to notified pension scheme. If 100% of the contribution is contributed by government, they are high class employees. Again, a white collar job. For their salary payment, 80 JJAA will not be applicable. Employee worked for less than 240 days or 150 days in case of, sir, apparel business, thuni or footwear, serp and leather industry. That means, sir, you understood that if I am appointing new employees, if I pay salary to them, I am entitled to Chapter 6A reduction. What people will do, in the month of February and March, they will appoint the new employees. For the purpose of claiming Chapter 6A reduction, government is saying that at least the employee should serve for 240 days. But if it is apparel, dress business or chappal business or leather business, minimum 150 days should be worked because those are seasonal business, my dear lovable students. If, sir, 150 days the employee is worked, that itself is more than enough. An employee who does not participate in RPF, recognized provident fund, that means they are not long-term employees, they are just short-term employees. Those short-term employees are not entitled for Chapter 6A deductions. This restriction, very simple, man. This is just a reading point only. Additional employee cost. Total employment paid or payable to additional employee employed during the year. In case of existing business, cost will be nil if no increase in total number of employees. Yes, last year also 100 employee, current year also 100 employee, current year also I will be paying salaries and wages to the 100 employee. Can I claim deduction under 80 JJAA for that 100? No, because there is no increase in number of employees. Only if you are paying wages and salary to the extra employees, for that extra employees only you are entitled to get Chapter 6A reductions. And to them, the salary should be paid by account pay check, account pay bank draft, electronic clearing system or such other electronic mode as may be prescribed. And assessee should furnish a return of income along with a report from a chartered accountant saying that this guy is entitled to claim deduction under 80 JJ. Deduction is allowed even if opted for what tax regime? Because under default tax regime, 80 CCD subsection 2, 80 CCX subsection 2, 80 JJ, hello sir. Non-monetary perquisite and terminal benefits not to be included in the employee cost. For this, 30% deduction will not be applicable because as an employer, you would have provided RFA, medical facility, etc. Contractual employees are not eligible for deduction as they generally do not participate in what? PF, because contractual employee means after 3 months they will leave. So they will not contribute the money to the recognized provident fund. Contribution by employer to PF is not considered as emolument. If employer is contributing to the provident fund, that will not be treated as emolument. With this 80JJ, AA also comes to an end, my dear lovable students. So basically, we are done with the chapter 6A deductions. Are you all really with me? What are the series of chapter 6A deduction? 80C, 80CCC, 80CCD subsection 1, 80CCD subsection 1B, 80CCD subsection 2, 80CCE, 80CCH subsection 1, 80CCH subsection 2. Able to appreciate? Then, my dear lovable students, the next one, 80D, 80DD, 80DDB, and 80U. Are you all really with me? The next ones are 80E, 80EE, 80EEA, and 80EEB. Am I right, sir? Then, my dear lovable students, 80G, 80GG, 80GGA, 80JUJUB, 80GGC. Am I right, sir? The next one, 80QQB, 80RRB, 80TTA, 80TTB, and the last one, 80JJAA. That's it. With regard to the discussion of chapter 6A, deductions comes to an. We have done with clubbing, we have done with set off and carry forward. Even now we have done with the chapter 6A deductions also. Sir, very happy morning to all. Sir, we are going to talk about the provisions for filing return of income. My dear lovable students, this is a 4-mark area for examination. In the sense means, we have studied the previous year. Previous year means the year in which you are earning the income, which will start from 1/4/2025 for our exam till 31/3/2025. Am I right, sir? During this 25-26, you will be earning income. Like income from salary you will earn, income from house property you will earn, PGBP you will earn, capital gain you will earn, and income from other sources you will earn. The answer is called as gross total income. If you are traveling through the optional tax regime, you are entitled to claim chapter 6A deduction. You will get the answer as total income. For this total income, you are liable to pay tax. Sir, whatever income you have earned, you are supposed to file a return of income to the government in the assessment year, my dear lovable students. That is previous year 26-27. You will file the return for the previous year 25-26. So to file the return, there should be one section. The section is 139. What is the section? 139 is having this many subsection. 139 subsection 1, 139 subsection 3, 139 subsection 4, 139 subsection 5, 139 subsection 9. Can we repeat once again? 139 subsection 1, 139 subsection 3, 139 subsection 4, 139 subsection 5, 139 subsection 9. 139 subsection 1 is a regular return, voluntary return, normal return, anything you can say. Generally, people are supposed to file 139 subsection 1 return. 139 subsection 3 is the loss return. 139 subsection 3 is the 139 subsection 4 is a belated return. If you are not able to file the return in time in 139 subsection 1, you are supposed to file the return within 139 subsection 4 time limit. 139 subsection 5 is the revised return. 139 subsection 5 is the 139 subsection 9 is the defective return. 139 subsection 9 is the section 139 subsection 1 is answering two questions. Who is supposed to file return of income? When you are supposed to file return of income? My dear lovable students, let me ask you one straightforward question. Have you ever filed a return in your life? No, sir. That means you would have not fall under this category. This is the reason why you would have not filed a return. In my life, I have filed a return. If I am liable to file return, then I have to see when I am liable to file the return, due date. Otherwise, we are not supposed to see when we are liable to file the return. So, section 139 subsection 1 is answering who is required to file the return. For that purpose, assessee should be classified into two categories. Assessee should be classified into company or partnership firm other than company or partnership firm. Sir, if the assessee is a company or partnership firm, every company, every partnership firm is compulsory liable to file the return of income irrespective of their total income. Whether they are having income, whether they are having loss, whether they are having profit, sir, whatever it may be, every company, every partnership firm compulsory liable to file the return of income. Able to appreciate? Whereas other than company or partnership firm, you take my example, ANM, whether I am company or partnership firm, other than company or partnership firm. Other than company or partnership firm, then I have to check, man. Sir, just now we studied that for company and partnership firm, mandatory to file return of income or loss for each previous year. Am I right? If you are other than company or partnership firm, you may be individual, HUF, AOP, BOI, AJP. Always these 5 people are one block. For these 5 people, they are also compulsory liable to file the return of income if the total income exceeds basic exemption limit. That means this is what the rule. Sir, if you add 5 heads of income, you will get the gross total income. From the gross total income, we have to reduce the chapter 6A and you will be getting total income. See this total income. See this? Sir, this total income before considering chapter 6A reduction. Before considering chapter 6A reduction means total income plus chapter 6A reduction. You will get what total income? Gross total income. You will get gross total income. Am I right, sir? Not only that, sir, when you calculate this salary, house property, PGBP, capital gain and IFOS, in capital gain, sometimes you would have claimed exemption under 54. You would have claimed exemption under 54B. You would have claimed exemption under 54 EC and 54F and 54D. If you claimed any of this exemption, please add back those exemption. Please add back those exemption. Take the what income? Total income. Add chapter 6A reduction. You will reach to gross total income. Add exemption you have claimed under the chapter capital gain. That amount, if it exceeds the basic exemption limit. Sir, what is the basic exemption limit? That depends upon in which route you are traveling. If you are traveling through optional tax regime, 2,50,000 or 3 lakh or 5 lakh as the case may be is the basic exemption limit. If you are traveling through default tax regime, 4 lakh rupees is the basic exemption limit. Am I right, sir? So, my dear lovable students, sir, in case of, come on, 5 people, individual, HUF, AOP, BOI, AJP, they are compulsory liable to file the return if the total income exceeds basic exemption limit. So, question arises, sir, whether I have to see total income? Illada kanna, total income exceeds basic exemption limit before considering chapter 6A reduction or exemption under section 54, 54B, 54D, 54EC and 54F. Am I right, sir? Sir, that's it with regard to their slab. That means in case of an individual, HUF, AOP, BOI, AJP, if their total income, without considering chapter 6A, without considering capital gain exemption, exceeds basic exemption limit, they are compulsory liable to file the return of income. Sir, I am an individual, which are resident and ordinarily resident. As we all know in tax that in case of a resident and ordinarily resident, global income is taxable. That means if that guy earned income in India, it will be taxable in India. If that guy earned income outside India, still it will be liable to tax in India. Am I right, sir? Sir, in respect of any asset located outside India. For example, I am an individual. I am a resident and ordinarily resident. In my name, I am having an asset which is situated outside India. Sir, for that asset, my dear lovable students, I am holding the beneficial owner. I am holding the beneficial owner. There are 2 owners are there, my dear lovable students. Beneficial owner or beneficiary. Beneficial owner or in the sense means I am having lot of income. I am purchasing an asset outside India by paying that income. Then I will be called as the beneficial owner. I am purchasing a property outside India. I am letting out the property. I am saying the tenant that please don't deposit the rent in my name. Please deposit the rent in the name of my wife. How my wife purchased the property? No, but she's enjoying the rent. Then she is called as what? Beneficiary. So hold beneficial owner. If I am the beneficial owner of an asset, even though my income does not exceed basic exemption limit, I am compulsory liable to file the what of income? Return of income. Or signing authority in any account outside India. In the sense means, in Swiss bank, I am having an account. I am having a checkbook. I am having the signing authority to sign. Then I am compulsory liable to file the return of income, even though my income does not exceed basic exemption limit. What government is asking that, Enada Kanna, your income does not exceed 2.5 lakh. Your income does not exceed 4 lakh, but you are having a property outside India. You are having an account, having the signing authority outside India. Then you are compulsory liable to file the return of income. Or is a beneficiary of any asset. For example, my wife. My wife has not purchased any asset. I have only purchased the asset. But the benefit of that asset is received by my wife. So, if even though that individual, HUF, AOP, BOI, AJP has not fall in this category, then they will fall in this category. Able to appreciate. Sir, who is this beneficiary, beneficial owner and all? Sir, beneficiary of an asset located outside India is not required to file the return. In the sense means, whose property is that the property situated outside India? My property. If I have filed the return, then my wife is not supposed to file the return. If I have not filed the return, then the responsibility of filing the return will cast in the head of my wife. That means if the income from such asset is included in the income of the beneficial owner, then beneficiary is not the person who are liable to file the return, because it's actually my income. Am I right, sir? Sir, who's this beneficial owner and beneficiary? Beneficial owner means individual. Is ANM individual? Who has paid consideration for the asset for the immediate or future benefit of himself for other person. I only paid the consideration. I only paid the money to get the asset. Then I will be called as beneficial owner. Beneficiary means an individual who derive benefit from the asset. From that asset, is there any benefit getting? Yes, sir. Who is getting? My wife is getting. So my wife is the beneficiary of the asset during the previous year, and consideration for such asset has been paid by the beneficial owner. Am I right, sir? So first category. Sir, assessee should be classified into two categories. Yaru. Company partnership firm, other than company partnership firm. Every company or partnership firm are compulsory liable to file the return of income irrespective of their total income. Whereas other than company or partnership firm, set number 1. Are you individual, HUF, AOP, BOI, AJP, whose total income without considering chapter 6A, without considering capital gain exemption, exceed basic exemption limit? Compulsory liable to file the return of income. Sorry, sir. Sir. Then go and check. Are you a resident, sir, individual who are resident and ordinarily resident? Do you have any asset located outside India? For that asset, are you a beneficial owner or a beneficiary, or you are having any signing authority, sir, for an account situated outside India? Irrespective of the total income, you are compulsory liable to file the return of income. Sir, any other person. I am not individual, sir. I am not HUF. I am not AOP. I am not BOI. I am not AJP. Sir, I am any other person. Then mandatory if the total income exceed basic exemption limit during the previous year. For example, I am AOP. Sir, all these 5 people are covered here. Individual, HUF, AOP, BOI, AJP. Other than these 5 people, any other person, if their total income exceed basic exemption limit, then they are compulsory liable to file the return of income. And special assessees, my dear lovable students. Sir, I am an individual, but I have not fall either in this category or in this category. But then what they are saying is 1, 2, 3, 4, 5, 6, 7. We are saying 7 category. In any of this category, if you fall, means you are compulsory liable to file the return of income. Ultimately, finally, government will say that every person who are in India is liable to file the return. You think still you have not fallen in that category. That means, are you the first question I have asked, are you a company or partnership firm? No. Are you other than company or partnership firm? Yes, sir. Okay. Is your total income without claiming chapter 6A exceed basic exemption limit? No, sir. Sududanni, sir. Hello, sir. My dear lovable students, do you have any assets situated outside India? India liye. Do you have any, sir, signing authority situated outside India? Bank account ille. Now, you check, are you falling in any of this category? Deposit in one or more current account. You tell me 2 types of accounts are there. Current account and savings account. Current account will be there for businessman. Savings account will be there for common people. Sir, exceeds 1 crore. Have you deposited in 25-26? Exceeds 1 crore cash in current account? Why payla Raja? Hello, sir. Deposit in your savings account more than 50 lakhs? 50 lakhs or more? No, sir. Have you deposited more than 50 lakhs in your bank account? No, sir. Sir, expenditure on foreign travel in 25-26. Have you gone outside India by spending more than 2 lakh? No, sir. Only within India, only Sutti, Vandiga, that too in Nungambakam only, sir. Morning coming, ANM classes only, sir. That is my first home, and I am staying in my home as large. Super. Sir, expenditure on electricity consumption in your home. Are you paying EB bill more than 1 lakh? File compulsory liable to file return of income. என்னையா ஃபைலிங் ரிட்டர்ன் ஆஃப் இன்கத்துக்கும் சார் இபி பில் தேர் சேயிங் தட் இஃப் யூ ஆர் கன்சியூமிங் மோர் தென் 1 lakh EB, how much big house? So you are having income more than basic assumption limit, but you are not declaring. Sir, turnover from business exceeds 60 lakh, don't see net profit and all, because total income only is not exceeding what? Basic assumption limit. Hello sir, see the turnover, top of the P&L account. If it exceed 60 lakh, compulsory liable to file the return of income. Wait, sir, I am not doing business, sir. I am doing profession, sir. Okay, have the professional receipt exceed 10 lakh, compulsory liable to file the return of income. Sir, aggregate of TDS and TCS in your name. Any TDS or TCS has been deducted for senior, resident senior citizen. If the amount of TDS deducted exceed 50,000, that resident senior citizen are compulsory liable to file return of income. For others, in your name, have TDS plus TCS deducted plus collected exceed 25,000, then you are compulsory liable to file what, man? If you are falling in any of this category, shall furnish a return of income on or before the due date. Sir, what is the due date? That's what the next topic we are going to discuss. In such form, verified in such manner, setting for such other particulars as may be prescribed. These are the people who are compulsory liable to file the return of income within 139 subsection 1 time limit. Am I right, sir? Sir, what is the due date? Sir, if I am liable to file the return only, I am supposed to know what is the due date. If I am not at all liable to file the return of income, have you covered in any of this category? No, sir. Then don't study this due date for your life. Study this due date for your exam. Hello, sir. My dear lovable students, even I have also not covered in any of this category. That is the reason why even I am not filing the return. To file the return, your income should be more than basic exemption limit. Hey, in an year you should earn more than 2,50,000. Since it is less than 2,50,000, I am having 3.5 lakhs, but it is less than 4 lakh because default tax regime basic exemption limit is 4 lakh. So I am not liable to file the return of income, and I don't file the return of income at all. All right. I know. You will be so curious to know that what is the tax you have paid. With that, you will back work. I will never say. Don't worry, my dear lovable students. If a reverse working question comes in exam, you won't think. But if this no, yes, sir. Come on, sir. These are the due date. Sir, if you are a company, if you are other than company, for the purpose of filing the return, you should file the return within some specified time limit. Yes, sir. For that, assessee should be classified into 2 categories: company, other than company. Company, you have to check whether they are liable to tax audit, not liable to tax audit. Liable to tax audit section 44AB, we already covered in PGBP. 44A, compulsory maintenance of books of accounts. 44AB, compulsory tax audit. Am I right, sir? If a company is liable to do tax audit, they need more time to file the return. That's why 30th November of the assessment year. That means after 31st of March, you take May, June, April, May, June, July, August, September, October, November. By 30th of November, you are supposed to file the return. Are you all really with me? Sir, I am a company, sir, but I am not liable to do what audit? Tax audit. Then you can easily file the return in advance. Don't go till November. By 31st of October itself, file the return. Able to appreciate, sir? Sir, I am other than company, sir. I may be a partnership firm. I may be individual, HUF, AOP, BOI, AJP, etc., etc. Sir, I am liable to tax audit, sir. Then 31st of October, not the same date. For company, 31st of November. For other than company, 31st of October, even though you are liable to do what audit? Tax audit. Sir, I am other than company. I am not liable to do tax audit. Then file the return at the earliest, my dear lovable students. 31st July is the due date. Am I right, sir? 31st July. That means either 31st of July, March over. March only financial year over. April, May, June, July. 31st July, you file the return. Are you other than company who are supposed to do tax audit after July? Sir, August will come. September will come. October will come. By sir, 31st of October, you furnish the return. My dear lovable students, if you are a company who are supposed to do what audit? Tax audit. 30th of November. Sir, you are liable to file the return. That means you fall in any of this category. But you have not filed the return within this 139 subsection 1 time limit, you are liable to pay fees, late fee under section 234F. 234F. A fees of how much rupees? 5,000 shall be payable if the return of income is furnished after the due date. That means if you are a person who are liable to file the return, but you have not filed the return within 139 subsection 1 time limit, then is there a delay in filing return? For that delay, you are liable to pay a fees of 5,000 under 234F. Sir, if I have filed the return on time, my total income itself is only 2 lakhs or 3 lakhs or 4 lakhs or 4.5 lakhs or for that tax itself that much is not coming. You are asking me to pay a fees of how much? 5,000 because I can claim 87 rebate. No. Are you really with me? Under default tax regime up to 12 lakh rupees, no what at all. Tax at all. Sir, my tax payable itself is 0. Since there is a delay in filing return, you are asking me to pay a fees of Sir, if the total income does not exceed 5 lakh, total income does not exceed, fees shall not exceed 1,000. That means if your total income is up to 5 lakh, 1,000 rupees will be the fees. More than 5 lakh, 5,000 rupees will be the fees. That's it, my dear lovable students. That's it with regard to 139.1. Moving to 139.3, loss return. What return? Loss return. That means last 1 year fully I worked. Income from salary anyway loss will not come. House property loss may come. Are you really with me? PGVP loss should come. Sir, capital gain, there is no capital asset to transfer. I don't have that head at all. IFOS, my dear lovable students, there is no loss. So, my dear lovable students, I am having loss under 72, 73, 73A, 74, 74A. Engyo keta mari irukku. Sir, if you have incurred any loss under section 72, 73, 73A, 74 and 74A, if you want to carry forward that loss, you have to compulsory file the return within 139 subsection 1 time limit. That's what they are saying. As per section 80, losses under section 72, 73, 73A, 74 and 74A. Tell me what is 72? Normal business loss. 73, speculation business loss. 73A, specified business loss under section 35AD. 74, capital loss. 74A, loss from owning and maintaining can be carried forward only if the return of loss is filed within the above due date. So if you check this list, section 71B will not be there. 32 subsection 2 will not be there. That means if you are having loss from house property and unabsorbed depreciation can be carried forward even if the return has not been filed within 139 subsection 1 time limit. Already connected point. However, the loss can be carried forward even if the return of income is not filed for unabsorbed depreciation and house property loss. Unabsorbed depreciation is 32 subsection 2. House property loss is 71B. Enna comfortable? That's it, man. Sir, loss return also comes to an end. That means one line summary. If an assessee has incurred loss under section 72, 73, 73A, 74 and 74A, and if you want to carry forward such loss, please file the return of income within 139 subsection 1 time limit. Am I right, sir? Some people, sir, for example, our previous year is, what is our previous year? Previous year, 25-26. 25-26 ka return should be filed in previous year, 26-27, whether it is assessment year 26-27 or previous year 26-27, both are one and the same. Sir, either within 31st of July or 30th of October or 30th of November, 31st of October. 31st of October or 30th of November as the based upon your due date. Some people will not file the return. For example, sir, one assessee is there. He is supposed to file the return by 31st of July. Hello, sir. He has not filed the return within 31st of July. Then August 5th, he is filing the return. Hello, sir. For example, your friend is having yesterday birthday. You are on leave for the class. Tomorrow, you are seeing your friend. Macha, belated birthday. Da. Will you say? That is called as belated return. That means if you don't file the return within 139 subsection 1 time limit, you are filing return beyond 139 subsection 1 time limit. Such a return is called as So any person who has not furnished a return within the time allowed to him under 139 subsection 1 may furnish this belated return as under by 31st December of the relevant assessment year. That is 3 months prior to the end of the relevant assessment year. What government is saying that next year will end by 31/3/2027. Am I right? Next year will end by 26-27 will be end by 31/3/2027. Till that date, you can't file a belated return. For example, instead of seeing tomorrow your friend, you are seeing after 6 months. You are going and saying that, Macha, belated birthday na. He will say that, next birthday itself is going to come. Now you are coming and wishing the last birthday, yeah. Accepting, So there should be some time limit to file what return? Belated return, which is, sir, 30th of November is the last date. November kapra next month. December. 31st December is the last date to file what? Belated return. First file belated return, 31st December. Then only Happy New Year, Happy New Year, Vandade. Hello, sir. Otherwise, don't say Happy New Year, yeah. Beyond that date, you are not supposed to file the belated return. So, 31st December of the relevant assessment year. Come on. What is previous year? 25-26. What is relevant assessment year? 26-27. In that relevant assessment year, 31st December. That means after March, April, May, June, July. 31st July may be some people's cutoff date. Then August, September, October. 31st of October may be some people's cutoff date. Then 30th of November, some people's cutoff date. If you are not filed the return within this due date, sir, till 31st of December. That is for every people. Are you all really with me? So 31st December of the relevant assessment year, which is technically how much months prior? 3 months prior. Because relevant assessment year will end by March. March 3 மாசம் முன்னாடி. Or before completion of the assessment. In the case means department is saying that your case has been closed on December 15th. December 15th itself. Hello, sir. Government is saying that your case has been closed. Even though you have not filed a return, your case has been closed, whichever is earlier. Because once your case has been closed, we can't file the return. Government is saying that podumpa. Even though you have not filed the return, your case has been closed. That is called as, sir, completion of assessment. Assessment has been completed. Adena, sir, assessment. Can you talk more about it? It's a pakka CA final topic. Quickly complete and come. I will take for you, sir, DT final and IDT final. Don't worry at all. That is 31st December of the relevant assessment year or before completion of assessment, whichever is super, sir. So now you tell me, what is 139 subsection 1? Voluntary return, regular return, normal return, anything you can say. What is 139 subsection 3? Loss return. 139 subsection 4? Belated return. Assume you filed a normal return. Assume you filed a loss return. Assume you filed a belated return. But when you file this return, there is a mistake. That means there is an omission in the return filed. Omission in the? Sir, there is a misstatement or, sir, something you have left when you are filing the return. Look at here, man. If any person who has furnished a return under 139.1. What is 139.1? Voluntary return or 139.4. Belated return. Notice any omission. Oh my God, there is a omission. ஏதோ ஒன்று விட்டுட்டேன் நான் ரிட்டர்ன் ஃபைல் பண்ணும்போது. Or any wrong statement. Something has been said, sir, given as wrong. Either I have forgot to show something or I have shown something in the return which is wrong. Then revision. So the shortcut is ROW. R-O-W. R stands for remission. When there is a omission or when there is a wrong statement. Therein, file the revised return. Then, against this 139.1, have you already filed return? Revise the return under 139.5. Against this 139.3, you can return under 139.5. Against 139.4, you can revise under 139.5. Sir, I filed 139.1 return. In there, if there is any row, can I revise the return? Under what section? 139.5. Am I right, sir? Sir, in that 139.5 contains a mistake, row. Can I revise a revised return? Yes, sir. Even 139.5 is possible for a revised return. A revised return can be revised n number of times. காலைல 10 மணிக்கு ஒரு revised return, மதியம் 1 மணிக்கு ஒரு revised return, night ஒரு revised return. But everything should be within the time limit. Everything should be within the... Sir, what is the time limit for filing a revised return? Same time limit, my dear lovable students. 31st December of the relevant assessment year. 31st December of the, what government is saying that till 31st December, whatever you want, you do. If you want to file a original return, you file it. If you miss to file the original return, file the belated return. In the original return or the belated return is your choice. In that, if there is any row, you can revise the return within 31st of December. That means by 31st of December night at 12 o'clock, you have to complete everything relating to the last previous year. Then only you should say, Happy New Year, Happy New Year, Vandade. அதுக்கு முன்னாடி நீ சொன்னேனா அவ்வளவுதான். Or before completion of the assessment, whichever is earlier. Are you all really with me? அப்ப போராடி somehow certain people in India will file 139 subsection 1 return, which is sir normal return or voluntary return. 139 subsection 3, which is loss return. 139 subsection 4, which is belated return. 139 subsection 5, which is revised return. Hello sir. Sir, in this return there is a omission or there is a wrong statement. That's why you have a revision. Right? This has been found by yourself. That's why you have revised the return. Some people will not see. Even if it has been written as 500, they will read it as 800. Okay, fine. Vice caller, onum panna mudiyadu. And department is seeing the mistake instead of the person who has filed the return. That's why it is 139 subsection 9 defective return. What return? Sir, the AO may intimate the defect to the assessee. Like that AO will say, in the return, what you have filed contains a mistake. You have filed a return, that return contains a mistake. So the AO may intimate the defect to the assessee and give him an opportunity to rectify the defect within 15 days, else return will be invalid. He will say that the return what you have filed contains a defect. Please rectify the defect within 15 days. எப்ப சார் AO will treat a return as a defect man? Sir, annexure, statement, column relating to the computation of income, gross total income and total income are not duly filled. For example, you have filed a return in the profit and loss account, you have debited that to depreciation 5 lakh. My dear lovable students, in income tax act, we can't write simply depreciation 5 lakh. Sir, in that 10% block is how much? 15% block is how much? 40% block is how much? In that 10%, how much is more than 180 days? How much is less than 180 days? How much depreciation is? How much amount is entitled for normal depreciation? How much amount is entitled for additional depreciation? That means depreciation table has to be filled. Am I right? And total of this depreciation table should only be carried forward to the P&L account. You pakka debited 5 lakh rupees to the P&L account because you want that. But you forgot to fill the depreciation table. That's why annexure you have not filled, statement you have not filled, certain columns in the computation of total income you have not filled. Then AO will treat it as assignment, irregular assignment you have written. Half of the things are not there in the assignment. Then AO will declare it as a defective return. And AO will give an opportunity within how many days? 15 days, you correct the assignment income. It is not accompanied by the proof of tax. In the sense means, when you file the return, whatever tax liabilities come, we are liable to pay the tax. So then challan will be given by the government. That challan should be uploaded along with the return of income. But you have not uploaded that challan. Then AO is saying that, have you really paid this tax? Amma satyama sir. Nambiradinge. Iniyavadu nambiradinge. Hello sir. It is not accompanied by proof of payment of tax. Are you all really with me? So, in the return, what you have filed, my dear lovable students, if there is a defect, AO will intimate the defect to the assessee. And assessee is entitled to rectify the defect within. AO may extend the 15 days period upon application by the assessee. If you are saying that, sir, I'm going for tour, sir. Now I am in Ooty, Kodaikanal, sir. I'm out of India, sir. I'm not in a position to rectify the return. Please give me another 20 days. AO will say that, consequence of non-rectification. Even after you get the notice, you are saying that I will not rectify it. If the defect has not been rectified within the specified time, that is 15 days, or extend the time after your request, return will be treated as what valid. As if a return is considered as no return has been filed. We will treat it as you have not filed the what at all? Return at all. This is a return because it's incomplete return. It's defective return. We inform the defect, but you are not ready to rectify it. Sir, condonation of the delay. If the defect is rectified after the prescribed time, but before the assessment is over, AO may condone the delay and the return as a valid return. Originally, they said 15 days only, but I have rectified within 20th day. There is a delay of 5 days. But AO has not completed the assessment within how many days? 5 days. I'm going and requesting to AO that, sir, please, sir. Sir, you have given me a time of 15 days. But at that time, I was out of town. I was not in a position to inform you, or my sir has gave me lot of assignment. So I was held up with that and all. So now I have rectified. Please accept this return and treat this return as the original return or corrected return, sir. Then AO will accept it. What is 139.1? Voluntary return. What is 139.3? Loss return. What is 139.4? Belated return. What is 139.5? Revised return. What is 139.9? Defective return. We are moving into 139.8a, updated return. Important, very important, very important for our examination. Updated return. Hello, sir. You tell me, generally, is there any time limit to file return? 139, one time limit. Either 31st of July or 30th of October or 31st of October or 30th of, as the case may be. If you miss that bus also, no problem. Still you are having one more bus. 31st of December. Beyond 31st of December, can you file any return? No, sir. Yes, sir is the answer, called as updated return. Even after that date, you can file a return. Government model strict solranga. You have to file the return within 139 subsection 1 time limit. They know, sir, how the Indian peoples are. They are saying that, I know that majority of the people will not file the return on time. That's why it is what return? Belated return. So after 31st of December, on 1st of January, I am taking a resolution. I will be a good boy. I am going to follow all the rules and regulations. But government is not following me to file the return. So mistake is not mine. Mistake is whose? Government's mistake. I am ready to file the return. But you are saying that time limit is over. What can I do? I can't do anything. Hello, sir. Government is saying that for such a category of assessees also, we are having a concept called as updated return 139.8. 139. Who can submit update return? Any person, whether or not he has furnished a return under 139.1. Say, already furnished 139.1 return, sir, but I want to now update the return. Come on, you update the return. Say, already furnished 139.4, sir. What is 139.4? Belated return. I want to update the belated return. You can update the belated return. Sir, I already filed a revised return, sir. I want to update the revised return. Okay, no problem. So 139.1 return can be updated. 139.4 return can be updated. 139.5 return can be updated. What is the time limit? This will pakka test in examination, my dear lovable students, because of amendment. Updated return can be submitted at any time within 48 months. From the end of the relevant assessment year. 48 months. 12 மாசம்னா 1 year, correct? So 12 na nearly 4 years time they are saying. Sir, முதல்ல என்ன பந்தாவா இருந்துச்சு கவர்மெண்ட்டுக்கு? What they said that for the financial year 25-26, you should file the return within, sir, the assessment year 26-27. யாரு மதிக்க, correct? That too they said that 31-12-2026 is the last date to file a what return? Belated return or revised return. Now they are saying that, Kana, come on, Kana, what is the financial year for which you want to file the return? 25-26. What is the relevant assessment year? 26-27. Take the last date, 31-3-2027. From that, you add how many years? 4 years. 28, 29, 30, 31. Till 31-3-2031, you can file a return for this financial year is the discussion. This is called as what return? Updated return. Updated return can be submitted at any time within how much months? 48 months from the end of the relevant assessment year. For example, updated return for assessment year 25-26. What is our financial year? 24-25. This is not our financial year. This is assessment year. Assessment year 25-26 na, sir, financial year 24-25. From this 6, 7, 8, 9, 10, that is 31-3-2030 is the last day to file an updated return. Am I right, sir? Sir, non-applicability will be tested in exam. Sir, you can't update a loss return. In the sense means you already filed 139 subsection 3 return. 139 subsection 3 return is what? When you file the loss return, 5 lakh rupees was the loss you have, sir, said. Now you are going and saying to government that, sorry, sir, my real loss is 8 lakh. Can I update the return and make the loss to 8 lakh? Because, my dear lovable students, sir, loss return cannot be filed by way of updated return. Reduces the total tax liability determined in the what return? Earlier return. In the sense means, sir, I have already filed a 139.1 return. Can update a return filed for 139.1 return? Yes. Sir, but in the original return which I filed, I show 10 lakh rupees as income. Now I want to revise it to 8 lakh. Not possible. Government is saying that through update return, only it is favorable to the department. You want to pay any tax to the department? You file update return. Are you all really with me? Because generally the door or gate should not be opened. But we opened the gate for you till how many years? 4 years. That means it should be mandatorily be favorable to the department. Loss return cannot be filed. Any return which reduces the tax liability cannot be filed. Result in refund or increases the refund cannot be filed. Already I filed a original return. My dear lovable students, it was tax payable. Now I am going and asking department that, sir, can I file a update return? When I file the update return, refund will come, sir. Mudiyadu. Sir, I already filed a refund return, which is saying that 1 lakh rupees was the refund amount receivable. I am asking to department saying that, sir, can I file a update return? Then I am entitled to get 2 lakh rupees refund. Mudiyadu. Are you all really with me? Example, loss return filed under 139.1 can be revised by filing an update return with income. This is possible. For example, 139.3 you filed a loss return. Sir, 139.3 return is also called as 139.1 return because the time limit to file a 139.3 return is also 139.1 time limit only. So 130 a loss return, already filed a loss return. Now you want to revise the return by filing update return. That is possible. Sir, if it is going to be income. Government is saying that Aadhaar allowed because earlier loss, now income. Earlier income, now loss na ODP. That is not allowed. Are you all really with me? Sir, updated return for the what year? Subsequent year. If the updated return result in change of carry forward loss, unabsorbed depreciation or tax credit under 115 JD, an updated return must also be filed for all the subsequent year impacted. In the sense means, last year I have really filed a loss return. So that loss would have been what forward? Carry forward for 8 assessment years. Am I right? But by filing an updated return, I change the original loss return into income return. Okay, that year, okay. Next year under the old scheme, you would have carry forwarded that loss and you would have set off that loss with the income what you have earned in year number 2. Now you are, because of filing an updated return, that loss itself is not there. How a non-existent loss will be set off in year number 2? Puriyarada. So in year number 2, more tax liability you are liable to be paid. So for year number 2, 3, 4, 5, 6, for what and all years you have set off the loss, which is not there because of filing a updated return, for the subsequent years also you are supposed to file the updated return. Ineligible cases. In these cases, you can't file an updated return. Will be test in examination. An updated return has already been filed for such a relevant assessment year. For financial year 25-26, already one time updated return filed. This is not like revised return. You can't revise right n number of times. It's a one-time benefit. Are you all ready with me? Any proceedings, assessment, reassessment, recomputation, revision pending or completed for the relevant assessment year. For example, my case is pending before assessing officer. You are going and saying that no problem, AO, I will file the update return. Monday court. Yesterday only AO completed the assessment, which is a CA final topic. I am saying that after his completion, AO is saying that everything has done. Hello, sir. Today you are going and saying that everything is done. The person or class of person is notified by the board as ineligible. CBDT is saying that you are not entitled to file the updated return. Prosecution proceedings has been initiated under the Income Tax Act. That means Income Tax Act has ordered or offered, sir, you are going to be put in jail. Just wait some time. My dear lovable students, then you can't file a what return, man? Updated return. This is what updated return cases are all about. Able to appreciate, sir. So what is 139.1? Voluntary return. What is 139.3? Loss return. 139.4? 139.5? Revised return. 139.9? Defective return. 139.8 is updated return. Yes, sir. We understood that generally 139 subsection 1 is a normal time limit to file a return. If you missed that bus, we are having 139 subsection 4. And that return can be revised under 139 subsection 5. Beyond that, my dear lovable students, generally we don't have time, but new concept has been derived called as updated return. What government is saying that? Sir, you are two category of people are there. 140B, computation of gross tax where no return has been filed earlier. That means No 139.1 return filed earlier. No 139.3 return filed earlier. No 139.4 return filed earlier. 139.5 return no, you have not filed. First time you are filing updated return. For a particular financial year, without filing the original return, you are going to file the updated return. Then pay this much amount along with the updated return. You have to calculate the gross tax payable. Less any TDS, TCS, relief under 89 and all there, you have to reduce it. Balance tax payable is there. Sometimes you would have already paid some advance tax. You reduce it. You will be getting balance, sir, after tax payable. Have you filed the return within 139 subsection 1 time limit? Then you are liable to pay interest under 234A, which is 1% per month or part of the month. Sir, if there is any short in advance tax payment, for example, 90% of the assessed tax, if you have not paid as advance tax, you are liable to pay interest under 234B. As we all know that advance tax to be paid in how many installment? 4 installment, 15%, 45%, 75%, 100%. If you have not paid advance tax in 4 installment, then my dear lovable students, you are liable to pay interest under section 234 A, B, C. You will get the total tax payable. To this total tax payable, since you are allowed to file a return beyond 139 subsection 4 time limit, by filing a what return? Updated return, you are liable to pay updated return fee. This much amount you are liable to be paid. That means, my dear lovable students, how many years are there for updated return? 4 years. First year, second year, third year, fourth year. First year means before completion of the 12 months from the end of the relevant assessment year. From the end of the relevant assessment year, within 12 months, if you want to furnish an updated return, 25% of the aggregate tax and interest you are liable to pay as the opening fee, door opening fee. Whereas beyond 12 months up to 24 months, 50%. Beyond 24 months up to 36 months, 60%. Beyond 36 months up to 48, beyond 36 months up to 48 months, 70%. So 25%, 50%, 60%, 70% is a door opening fee you are liable to be add. Since there is a late fee, you are liable to pay a late fee of 5,000. This will be the total amount payable. That means I have not filed the return earlier. Now only first time I am filing a updated return. This is the total amount payable. Illa sir. I already filed the return, sir, but now I am just updating the return. Everyone will upgrade or update. Am I right? Like that return can also be updated. Now, what is the total gross tax payable as per the updated return? Less TDS, TCS, advance tax, relief under 89 and all. You will get the tax payable. Have you paid any advance tax? That also you reduce. Balance after reducing what tax? Advance tax. Have you already filed return? Yes, sir. In that, this is Kammiyan income only you would have shown there. So, for that Kammiyan income, you would have already paid tax at the time of file the original return. That you can reduce it, called as self-assessment tax. You will get the balance tax payable. Sir, have you already filed the return? Yes, sir. Then there is no delay in file the return, so 234A will not come. But if there is any advance tax short payment, 234B will come. And sir, advance tax deferment 15%, 45%, 75%, 100% has not been paid. 234C interest will come. Sir, less 234B and C you would have already paid at the time of originally filed the return. You would have already paid some interest. That interest can be reduced. You will get the total tax and interest before additional tax. Now add 25%, 50%, 60% or 70% for as door opening fee. You will get the total amount payable. Are you able to appreciate, sir? That's it with regard to the additional fee. Come on now, procedural aspects. 139A PAN, permanent account number. What, sir, government is saying that these are the persons who are required to apply for PAN. Can we check whether we are applied for PAN? Every person whose total income exceed basic exemption limit. If your income exceed basic exemption limit, you people are compulsory liable to file the return. In order to file the return, you need a PAN number. The date is 31st May because the due date for filing the return is 31st of July. So by 31st of May, apply for PAN, get the PAN, file the return. Every person with total sales, turnover or gross receipts exceeds how much lakh? 5 lakh. If your gross receipts exceeds 5 lakh, you are compulsory supposed to get the PAN, sir, at the end of the what year itself? Financial year itself. Every resident other than an individual entering financial transaction, enter into how much lakhs or more? If you are entering to a financial transaction where it is 2,50,000 or more, by 31st May of the following year, you are compulsory obtain PAN. MD, if you are an MD, if you are a partner in a partnership firm, if you are a trustee in the above category, then 31st May of the financial year, these people are supposed to get the PAN. Generally, if your total income exceeds basic exemption limit, or the business turnover exceeds 5 lakh, or every resident other than an individual who are entering into financial transaction where the value of transaction exceeds 2,50,000. If you are managing director, partner, trustee, etc., compulsory you have to have a PAN. Sir, these are additional requirements. Deposit of cash in one or more account aggregating how much lakhs or more. That means you are going to deposit in your bank account more than 20 lakh. Sir, before deposit, before 7 days of deposit, first take the PAN, then go and deposit the money. Otherwise, bank will ask, where is the PAN number? Without that PAN number, they won't allow you to deposit the money. Hello, sir. Or withdrawal of cash aggregating to how much lakhs or more. Already you deposited, but you want to withdraw. Sometimes if we deposited at the time of deposit itself, they will ask for PAN. Some other people would have transferred money to our account. Now we are going for withdrawing. Then bank will ask that where is the PAN number. If the amount exceed 20 lakh. So before 7 days of withdrawal, you will go and get the PAN. Opening a current account or cash account, cash credit account with a bank or post office. You are going to open a current account. Who will open current account? Business people. Or cash credit account. Cash credit means overdraft account. You have to get PAN at least 7 days before. Are you all really with me? So these people are supposed to take a PAN. Sir, if you are having a PAN, in these places and all, you are supposed to mention that PAN. That means, sir, sale or purchase of motor vehicle, excluding what? Two-wheeler. For example, you are going to purchase a motor vehicle. You are going to purchase a motor vehicle. After you become a CA, you are going to purchase a motor vehicle. Either you are selling motor vehicle or purchasing motor vehicle. Excluding what? Two-wheelers. You are going to buy a car. Then the seller of the car will ask, show your PAN number. Opening an account other than time deposit and basic savings account. That means if you are going to open a current account, then bank will ask the PAN number. Application for issue of credit card, debit card. If you are going to apply debit card or credit card, then the bank will ask you a PAN number. Sir, you are going to open a demat account, then bank will ask a PAN number. What is the speciality of this, you know? Sir, there is no limit. Even 1 rupee transaction, PAN number has to be declared. Without declaring PAN number, you can't purchase or sale of motor vehicle. You can't open a bank account. You can't have debit card or credit card. You can't open a demat account. Any problem, sir? No, sir. This is category number 2, payment exceed 50,000 limit. Payment to hotel or restaurant against a bill. For example, I'm staying in Taj. Sir, the bill comes to 1.5 lakhs. Then Taj will ask me, show the PAN number to make the billing. Then only they will bill in my name if the cash payment exceeding 10,000. If I'm saying that I'm going to make the payment in account, sir, no PAN number is to be declared. Very important. What payment? Cash payment. Super. Payment for foreign travel or purchase of what currency? Foreign currency. I'm going to foreign country. Sir, for taking ticket, I'm going to pay cash. Cash payment exceeding 50,000, I have to furnish my PAN. Purchase of units of mutual fund. Is it an investment? Yes, sir. For investment, payment exceed 50,000. No cash, no what man? Credit and all. For acquiring debenture or bond issued by it, is it an investment? If it is investment, payment exceed 50,000. Payment to RBI for acquiring bond issued by it. Acquiring bond is an investment? Yes, sir. Then payment exceed 50,000. Sir, deposit with a bank, cooperative society or post office. That means I'm going to cash depositing. Sir, cash depositing exceed 50,000. Other than cash, I can deposit, man. Only cash can be deposited. Am I right? Purchase of bank draft, pay order or banker's check. Is bank is there? Bank means cash payment exceeding 50,000. Time deposit with bank, post office, NBFC or Nidhi company exceeding 50,000 per transaction or 5 lakhs annually, I am supposed to disclose my PAN. Payment for prepaid payment instrument to bank or other institutions exceeding how much rupees annually. Payment of life insurance premium, aggregate premium exceeding how much rupees annually. In these transactions and all, you are supposed to provide your what number? PAN eduthu chumma kaiyila vecha mattum pathadu. If you are entering into these transactions, you have to disclose the PAN number. Hello, sir. This is category number 3, 1 lakh rupees limit. Contract for sale or purchase of securities other than shares. You are entering into purchase, debenture, etc., exceeds how much lakhs per transaction. Sale or purchase of shares of unlisted company exceeds how much lakhs per transaction. This is category number 4, 2 lakh rupees limit. Sale or purchase of goods or service other than specified above. Normally, I am going to a shop and buying tiles for my home. Tiles, 10 lakh rupees is the value of tiles. So they are going to bill in my name. So they will ask PAN number because transaction value exceed 2 lakhs. I'm buying a TV for my home. 15 lakh is a TV cost. They will ask me PAN number because the amount of transaction value exceed. Category number 5, 10 lakh rupees limit. Sale or purchase of immobile property. I'm selling land, building or both. Exceeds 10 lakh, sir, or valued at 10 lakh by the stamp valuation authority. Stamp duty. Then I have to provide my PAN number. Hello, sir. Sir, if this transaction has been entered by minor, minor should quote the PAN of the parent or guardian for transaction because minor won't have the PAN number. Individual excluding company or firm without a PAN entering into specified transaction must declare details in Form 60 either on paper or electronically. For example, if I don't have a PAN, but if I am entering into these transaction, I have to give Form number 60. Hello, sir. Foreign company without taxable income in India must also file Form number 60 for transaction in IFSC banking unit. In case of foreign company, even they are also supposed to give the Form number 60. Exemption, sir. Central and state government, if they are entering into these transactions, they are not supposed to provide PAN. Non-residents are also not supposed to provide PAN because generally non-resident won't have PAN numbers. Sir, update to PAN details, change in name, address, business nature must be reported to the AO as per 139 subsection 5 clause D. For example, if my address has been changed, means I should inform the income tax department because I would have applied for PAN with one address. That address would have been changed, then I should inform the income tax department. Document verification. PAN or Aadhaar number must be quoted in document related to the specified transaction. That means if you are entering into these specified transaction, in that documents, your PAN number and Aadhaar number should be quoted. Intimation of the PAN. Yes. The recipient shall intimate PAN to the tax deductor or tax collector. Then only he can deduct the TDS or collect the TCS. Am I right? Otherwise, he will deduct or collect the TCS at higher rate, which will be 20%. Deductor or collector shall quote PAN of the recipient in statement, certificate, returns, etc. Sir, once the deductee has provided the PAN to the deductor, whatever statements he is issuing, he should mention the PAN number. Section 139A, subsection 5A, 5B does not apply to person who does not have taxable income or are not required to obtain PAN, provided they give a declaration under 197A stating that there will be nil for the year. In the sense means, if you already received a certificate from AO that TDS should be deducted at the lower rate or no TDS should be deducted, or if you are giving 15G or 15H, my dear lovable students, then all these provisions will not be applicable. Interchangeability of the PAN with Aadhaar, in the sense means if you don't have PAN, you can give the Aadhaar. If a person does not have a PAN but possess what number? They can use the Aadhaar number instead of PAN and they will be allotted a PAN as per the prescribed procedure. You can go and apply for PAN, you will be getting the PAN. Because the requirement of the PAN is as per Income Tax Act and requirement of Aadhaar is as per the government. Are you all really with me? If you are having Aadhaar and if you don't have a PAN, in that above places wherever we said that PAN has to be quoted, you can quote the Aadhaar number. Quoting and authentication of PAN or Aadhaar. Every person entering prescribed transaction must quote and authenticate their PAN or Aadhaar. What are the transaction is what we have discussed. For example, if you are going to sell an immobile property value more than 10 lakhs, like that. Recipient of the document must ensure PAN or Aadhaar is quoted and authenticated. This is the every person, supplier's angle. This is the recipient angle. Details the requirement, the quote and authenticate PAN or Aadhaar for specified transaction. These are the specified transaction. For this mandatory, PAN and Aadhaar should be quoted and authenticated. For example, cash depositing aggregating 20 lakhs, cash withdrawal aggregating, opening a current account or cash account, then all bank, cooperative society or the post office should ensure that the party has given the PAN and Aadhaar number and it has been properly authenticated. Otherwise, bank should not entertain the transaction. Hello, sir. Exemption from government already said. Quoting of PAN and Aadhaar is not required if the depositor, withdrawer or account opener is a central government, state government or consular office. Exemption for non-resident and foreign company. No PAN or Aadhaar number required if the deposit or withdrawal is made by whom? Non-resident, because they don't have a PAN or Aadhaar through non-cash method or for operating a current account. Exemption apply if the transaction is with IFSC banking unit also. Sir, with regard to all these CBDTs having the power to make a PAN application, in what form you have to apply, transaction requiring PAN and Aadhaar, documentation requiring PAN and Aadhaar, exemption, declaration by non-PAN holders, PAN or Aadhaar quoting, transaction intimation. That is the government CBDTs having the power to make rules and all. Let them make the rules, man. That is their responsibility. Okay, fine. Sir, if you are a person who are supposed to take a PAN number, but failure to comply with provisions of 139A, you have not taken PAN, then 10,000 rupees will be the penalty. This may be tested for 1 mark MCQ. That means you are liable to take PAN, but you have not taken how much penalty? That's it. This section number also no need to remember. Sir, failure to quote PAN or Aadhaar in the documents referred. We said no. In various documents, we are supposed to refer the PAN or Aadhaar, but you have not quoting the PAN or Aadhaar. Or failure to intimate PAN or Aadhaar. Sir, you have to intimate to the deductor. Am I right, sir? Or knowingly quoting or intimating a false PAN or Aadhaar. Either you are not quoting, or you are not intimating, or you are quoting wrong. Then how much rupees per default? Because this is default number 1, default number 2, default number 3. For every default, separately, 10,000 will be levied. Sir, failure to quote PAN or Aadhaar to authenticate such number in documents under this, then also 10,000 per default. Failure to ensure PAN or Aadhaar quoted is documents, or failure to ensure PAN or Aadhaar quote is authenticated, then also 10,000, man. Generally, PAN default, 10,000 rupees per default. Are you all really with me? That's it, man. Sir, Aadhaar. Now, mandatory quoting of the Aadhaar number. Sir, if you are going to apply for PAN, sir, you are saying to department that please provide me what? PAN. That is called as PAN application. In that PAN application, your what number should be there? Aadhaar number should be there. And income tax return, all the returns, 139.1, 139.4 and all, you are supposed to furnish your Aadhaar number. Sir, if you don't have Aadhaar number, you have to give the enrollment ID as an alternative for the Aadhaar number. If Aadhaar is unavailable, 28-digit enrollment ID must be quoted. You know, in India, some people does not have even Aadhaar number. Sir, once they apply for Aadhaar number, 28-digit what number will be provided? Enrollment ID will be provided. That enrollment ID can be used as Aadhaar number. From 1/10/2024, quoting EID is no longer allowed. Government said that because since we are allowing enrollment ID can be used instead of Aadhaar number, that's why you are not taking PAN at all. So from 1/10/2024 onwards, enrollment ID not allowed. PAN holders issued on the basis of EID must update their Aadhaar by a notified date. Some people would have taken PAN not by giving Aadhaar, by giving enrollment ID. They said that first to go and take the Aadhaar and update your original Aadhaar number in the PAN card. Otherwise, PAN card will be invalid. Appreciating intimation of the Aadhaar. PAN holders as of 1/7/2017 must link Aadhaar by this date to keep PAN operative. Otherwise, PAN will be inoperative. Return filed post this date required Aadhaar linking unless exempted. What they said is, everyone you are supposed to link the Aadhaar with your what number? PAN number. Sir, a person who was allotted PAN before this date based on EID, enrollment identification number, shall intimate Aadhaar number on or before 31/12/2025 or specified date. The consequence, if you are not linking the Aadhaar number with the PAN number, PAN allotted will be inoperative. A fees of 1,000 rupees is applicable under 234H. This will be tested in exam. Sir, fees of how much rupees, man? 1,000. Under section 234H. And PAN become operative within how many days? 30 days. Once in future, if you are linking this Aadhaar with the PAN, automatically it will become operative. After linking the Aadhaar and paying the prescribed fees. If you give us 1,000 rupees, we will make it operative. If you are not linking, it will become what, man? Inoperative. Sir, what are the consequences once the PAN has become inoperative? You are not entitled to get refund. For example, any refund has to be get from government. That's it. No interest on refund. You are not entitled to get interest on refund. Higher TDS will be deducted because you don't have what at all? PAN number at all. As per section either 206AA or 206CC as the quoting Aadhaar is not required. Sir, if you are a resident of Assam, Jammu, Kashmir, Meghalaya, because special category states people, no need to quote the Aadhaar number. Sir, non-residents as per Income Tax Act, you are not supposed to quote the Aadhaar number because you don't have what number? Aadhaar number. Individuals say aged 80 years or above, waiting for ticket, don't quote the what number, man? Aadhaar number. If you are a non-citizen of India, even you are also not supposed to quote the Aadhaar number. The same thing only written here, my dear lovable students. Very important point. This will be tested in exam. PAN and Aadhaar, okay. Sir, I have just brushed up. Sir, we studied that under 139.1, 139.4, 139.5, 139.9, 139.8A, so many people are supposed to file the return. Who will file this many people's return? Called as TRP, called as tax return preparers. Tell me. Any individual or HUF, for example, tomorrow, sir, we are going to become chartered accountant. Sir, after someone studied BCom, they can be a TRP, that is tax return preparers. Sir, person not eligible, but these people cannot be a TRP, like chartered accountant. Why we need this TRP and all? We are the person who are supposed to go into the audit, tax audit. Am I right? TRP means 139 subsection 1 return filing people or any legal practitioners. In the sense means advocate cannot be a TRP. An employee of the specified class or class of persons cannot be act as a TRP. A return which cannot be filed by TRP. This will be tested in exam. Person covered under a tax audit. That means if you are supposed to do tax audit, your return should be filed through chartered accountant, not through what? TRP. Revised return, if original return is not made by TRP. For example, original return filed by some other person, then that some other person should only revise the return, not the what man? TRP. Person not resident in India. For a non-resident, TRP should not file the return because TRP means a normal person only having some knowledge about filing the return. They are not experts and all. Am I right, sir? What is a qualification? Must hold a bachelor degree. That means at least BCom certificate you should be having. From a recognized Indian university or institution, or have passed the intermediate level examination conducted by ICAI, ICSI or ICMI after completing your CA exam. Sir, that is inter exam. You can go and write a TRP examination with the government of India. Hello, sir. And government will test you, and once you win that, they will give a certificate. You name as what? TRP. You would have heard about tax practitioner or tax practitioner. All these people would have done this. Eligible person can get their return of income prepared by TRP for any assessment year, but certain restrictions applicable. What is the restriction? Employees of the company and individual whose accounts are required to be audited under what section? And other laws, they do not belong to specified class are eligible to act as TRP. That means if you are liable to do tax audit under what? 44AB, your return cannot be furnished through TRP. Sir, that's what? Sir, 139B will be tested in exam. What they will test? No, who and all can act as a TRP, individual or HUF can act as a TRP. Their qualification, at least BCom, that is any degree, bachelor degree, or you should complete Inter, CA Inter, like CA Inter, CMA Inter, CS Inter, whatever it may be. And you should pass an examination. You can file normal return, but you can't file the tax audit. Are you all really with me? Okay, fine. Now you are filing the return. In that return, you have to sign it, saying to the government that whatever details they furnish the return are one and the same. True and fair. Na poye sollala. All unmai. That means if you are an individual, normally you have to sign in your return. Salary, house property, PGP, capital gain, IFRS, everything what I mentioned is pakka. Sir, if you are not available in India, if you are absent in India, then also you should only file. But sir, it is not possible for me to file, sir. Then if any valid power of attorney has been given, then that person can file. Hello, sir. Sir, I am mental, sir. Then my guardian can file. Sir, or any competent person can file. Sir, for any other reason preventing verification, I am affected by COVID. Sir, I am in social distancing. I can't come out. Then person with a valid power of attorney can do so. Are you all really with me? It is the same HUF. You tell me who's the leader of HUF? Kurta. The Kurta of the HUF should file. If Kurta is absent, any other adult member, not the minor people, adult member can sign. Sir, if any other adult member or the Kurta is mental, sir, then any other adult member can sign. Company, generally, who should be the person to sign the company? Managing director. Hello, sir. Sir, MD unavailable or there is no MD at all. Then any director or any prescribed person. Am I right, sir? Sir, I am a non-resident company, sir. Then also managing director or authorized person holding a power of valid power of attorney. Sir, company under winding up. It is Titanic company. Going to what? Sing. Then yare liquidator. Sir, management taken over by government. Then principal officer of the company. Under corporate insolvency process insolvency professional appointed by the adjudicating authority. Hello, sir. Sir, I am a partnership firm. Who should sign? Managing partner should sign. If managing partner is unavailable or there is no concept of managing partner, any partner not being a minor. Sir, I am an LLP, sir, the same. Instead of managing partner, you should call it as designator partner. Sir, the designator partner unavailable or there is no designator partner means any partner of the LLP or prescribed person. Any other cases, local authority, designator partner, political party, any partner of the LLP or prescribed person, any other association, any member of the principal officer, other person, the person or other competent person acting on this behalf, my dear lovable students. That's it with regard to the returns. Mainly give more importance to 139.1, 139.3, 139.4, 139.5, 139.9, 139.8. And that the extra money you are supposed to be paid to open the door, which is 25%, 50%, 60%, 70%. The remaining are procedural aspects. Who is supposed to take the PAN number? Who is supposed to take the Aadhaar number? Where and all it has to be disclosed. And who is tax return preparer? Who should sign in the return? Generally, individual should file. HUF na karta should file, sign. Correct, sir? Sir, managing director should file, or managing partner should file, or designator partner should file, as the case may be. With this, we can say that we are done with the chapter of return of income.